Good morning.
Morning, ma'am.
Good morning.
We are being live streamed on the YouTube. Thank you, Miss Anna. Um, the good news is that, thank you, Anna. Um, Phil, our IT fellow, was just in, and I have I have an Ethernet connection now. So hopefully,
Examiner Hurst, you seem to be coming through a bit clearer today.
and it's working. It's everything's working a lot faster. Um, Although, they told me that the Wi-Fi system was brand new. Even though the
There's the
building
problem.
Yeah.
is well,
Yeah.
it's kind of like with vehicles. It makes a noise, it does something, you take it to the mechanic, it doesn't make the noise, it doesn't do whatever it was doing, you know.
Exactly.
But because they weren't showing any drop in the internet, and it's like, well, the only thing I can tell you is they're telling me I froze and they couldn't hear me. So we discovered that uh, the Ethernet had port hadn't been set up in this office. So that's been remedied. And then now I also have, I would show you my phone, but the cord's too short. It's plugged in to the wall. And I have a redundancy set up on my phone now. So I feel very technologically appropriate. Uh, um, do we have any procedural matters that we need to deal with before we go on our record this morning? No. Great. Well, we've got about 6 minutes, so oh, I see Mr. Rossi's hand. Good morning, Mr. Rossi.
Good morning, Madam Hearing Examiner. Apparently, the YouTube stream may be having issues. I just heard from one of our witnesses.
Okay. Um,
I just checked and it is working, so it's
okay.
a different issue.
Do we know what issue it was having?
Someone
Was your
chimed
wit?
in, excuse me, somebody chimed in just to say they couldn't get it to, or it wasn't working. But I've been able to verify it is. So I
Okay,
withdraw
well,
that.
I will not send that email about the YouTube stream. Okay. Good morning, Mr. Domi. You've raised your hand. Do we have a procedural issue we need to deal with
Yes,
before we
ma'am.
go on our record?
Yes, ma'am. I think it's a procedural issue. We have gathered the documents in response to the second defense request, and we're just finalizing the response itself, and we should be able to get that to you mid-morning.
Excellent. Excellent. Appreciate that. I'll let the Chairman Aguilar know.
Okay, that was it.
Okay. Very well. Okay. Unraise your hand.
Oh, sorry about that. Down.
There you go. Okay. We've got about 3 minutes then before we begin. Mr. Baudier, how are you doing?
I'm, you're
Oh,
on mute,
you just
Mr.
mu-
P.
you just muted. There you go.
Sorry. Sorry. I'm doing great this morning. How are you?
Oh, excellent. Well, just want to check on you. You've had 2 days of but I think you said you'd been uh an attorney for 25, 35?
Longer than, yeah. I'm 93 was when I graduated law school. And it's funny, my youngest son is a 1L right now, and it's amazing how much it's changed. But law school is they don't even use blue books anymore. I'm like, I could never type fast enough to take a law school exam with a computer. But yeah, but I didn't have any trouble going to sleep last night, that's for sure. I had to say I was fading towards the end, but I appreciate all the patience everybody has with me.
Well, hopefully we'll finish with your um, examination this morning, and um, hopefully one of your other witnesses can testify today.
It's looking forward to that, and again, just appreciate everybody, the way everybody's been so courteous. So it's actually been a joy. So thanks.
Thank you. Mr. Gold, you have a procedural issue we need to talk about?
Yes, ma'am. Every hearing examiner does it differently. What are your rules of the road with respect to redirect and recross? I know we want to get through it quickly. We don't want to do anything unnecessary. So if you could just kind of lay out what your intention is with respect to that. Thank you.
Yeah, and I don't know that every hearing examiner I know does it differently, but the recross, so basically we'll have I've got a few more questions, and I'll see if the commissioners have questions, and once that's completed, we'll go to redirect, and then recross will be limited to the hearing examiner's questions, the commissioner's questions, and the redirect. Okay,
I have a few questions too.
great. Yes, Mr. Lee.
No, that I was joking, Judge. I'm
Oh.
ready when you are.
Oh, well, and you're probably the one that's the most qualified, Mr. Lee. So, if there was a way, I would let you ask the questions also. And you're
I'll
ready,
just-
sir?
Yes, yes, ma'am.
Okay, excellent. Good morning. We are back from our evening recess, and we are continuing our hearing in case number 24-00266. This is in the matter of the application for approval to acquire New Mexico Gas Company by Saturn Utilities Holdco. Along with me is my co-hearing examiner, Patrick Schaefer. And we are also joined this morning by Commissioners O'Connell and Commissioner Nybert. So, good morning, Commissioners. We will, when we recessed shortly before 6 last night, Chairman Aguilar had finished asking his questions. I had issued a bench request, and joint applicants attorney has indicated this morning, Mr. Dome, that the response to the bench request about the Amera board charter or other documents regarding the conduct and or procedure of New Mexico Gas Company Board will be ready to file today. So I thank them for that quick response. In following the staff response for announcement of parties on a daily basis, I'll go ahead and begin with that. And we'll begin with the joint applicants. Mr. Alvidres, if you could make your appearance, sir.
Yes, good morning here, examiners and commissioners. Rick Alvidres, appearing on behalf of the BCP applicants. Also with me today are Dana Hardy and Will Dubois, who happens to be in the waiting room, would like to be admitted to the hearing, if that's possible.
I am in now. Thank you.
Great. Thank you.
Thank you, sir. Mr. Dome?
Madam Hearing Examiner, Commissioners, Tom Domi, along with Brian Haverly and Julie Hopper, are appearing on behalf of the Amera entities and New Mexico Gas Company. And also appearing of record is Nicole Strausser, who's the General Counsel of New Mexico Gas Company.
Thank you, sir. Mr. Gould?
Yes, Madam Hearing Examiner, Peter Gould on behalf of NM Area, and I'm joined by my co-counsel, Joseph Yar.
Thank you, sir. Ms. Beatles?
Good morning, Madam Hearing Examiner, Commissioners and colleagues. Sydney Beatles for Western Resource Advocates.
Thank you. Ms. Lynch?
Good morning, Commissioners, Hearing Examiner, and colleagues. Kara Lynch from Coalition for Clean, Affordable Energy, here with my colleague, Charles DeSalon. I'm also representing Prosperity Works. Thank you.
Thank you. Thank you very much. Mr. Freeman?
Good morning, Hearing Examiner, Commissioners, and colleagues. Jelani Freeman, appearing on behalf of the federal executive agencies.
Thank you. Ms. Nanasi?
Good morning, hearing examiners, commissioners, colleagues. Marielle Nanasi on behalf of New Energy Economy.
Thank you. Also, and I don't want to butcher your name, sir. Representation for the New Mexico Department of Justice.
Good morning, Madam Hearing Examiner and Commissioners. My name is Anthony Uzaitis, and I'm here on behalf of the New Mexico Department of Justice.
Thank you very much, sir. Let's see. Mr. Friedman?
Good morning, everyone. My name is Ryan Friedman. I'm here with my colleagues Katie Lang and Nicholas Rossi, and we're representing staff today.
Very well. Thank you. I believe that concludes our appearances. I'll just note for the record that the other intervener, the Los Alamos County, which I think you're here, sir.
Yes, Your Honor. Thomas Wyman on behalf of the Incorporated County of Los Alamos.
Thank you. There had been a waiver of cross-examination, but Mr. Wyman is observing. Very well. When we concluded yesterday, last evening, Commissioner Chair Aguilar had had some examination questions for the witness. And since the Commissioner O'Connell and Commissioner Nybert are here with us here today, I'd like to ask whether or not Commissioner O'Connell, sir, do you have any questions for Mr. Baudier?
Thank you for the opportunity, but no, I do not have any questions.
Thank you, sir. Commissioner Nybert, do you have any questions, sir, for Mr. Baudier?
No, I do not, and I'm here to listen and observe.
All right. Thank you, sir. Mr. Baudier, I have, I know you've been asked a lot of questions. I just have a few clarification questions for you at this point.
Yes, ma'am, sure.
And I am looking at your revised application direct testimony at page 10. And I'm looking specifically at question 15 and 16. The question posed, what type of investors participate in the BCP Infrastructure Fund's investment pool? And you begin your answer at line 17. And the clarification I would like has to do with the part of your answer at line 20 through 23, where you say, these investors understand this sector requires a patient investment strategy that results in stable and uniform performance over the long term and seek long-term, prudent, and financially sound investments in natural gas infrastructure businesses. That's your testimony, Mr. Baudier?
Yes, Your Honor, it is.
And I guess I just wanted to find out a little bit more about that. And first of all, I'd like to know when you use the term long-term, how would you define long-term in your business?
So I would certainly say that in the realm of types of investments with regard to the private equity world, like a 10 to 15 year investment, what we call sort of a hold for that investor, would be pretty long term. And the reasoning for that is unlike with public investors, when they make a commitment, they cannot back out of the commitment until the hold of the investment expires. And so let's say, let's use New Mexico Gas Company for an example. So they know of all the regulatory commitments that go along with an application such as this, including a statement that would say, we will not, exit the investment any quicker than 10 years. Well, that also applies to those limited partner investors as well. So in other words, they're in for the 10-year period. They can't come in year 3 and say, well, we're not thrilled with the New Mexico gas investment. And for the first 3 years, we couldn't do dividends because we've just been putting money in instead of getting money out. And I'd like to leave. Well, they have to stay until the investment plays through, and they make that commitment. And so in that world, it's long term, but they can do that because, and I like to use examples. Hopefully it doesn't hurt me, but let's say, if you take like New Mexico Education Retirement Board or the New Mexico Public Employees Pension Fund, they are looking at many people in their investment pool, in their retirees who are going to need their retirements over the course of many years. And so they stage all their investments. Their main concern is that they invest in very low risk types of investments. They're not looking for massive returns. They're looking for steady returns because they need to make sure that those retirement and pension pools are there when those folks retire. And so unlike, say, for example, with Amera, where anyone in the public could just, go see what they can learn about Amera and look at their annual reports and things like that and educate themselves and then go buy Amera stock or any public company stock, our investors are, so New Mexico Education Retirement Board has employees. They have a group who are investment professionals. And they know exactly what they're doing. They know this business. They know what infrastructure is. They know the characteristics of utilities, and they are very sophisticated investors. And those are who we talk to. That's who we interact with. And so that's why there's different SEC rules for us. In fact, we can't publicly market securities because our investors are not the public. And so when I say that, I mean that we work with a specific group of very sophisticated investors who understand exactly the industries they're investing in. And they understand how long these investments take to deliver a return. And they're patient enough to wait for that because of the nature of the types of people they're representing, who are largely retirees and pensioners.
Well, in understanding your answer and the nature of your infrastructure funds and the difference potentially between a publicly owned company and a company owned by private equity, isn't one of the distinguishing features that private equity markets itself on larger potential returns than say a public structured portfolio?
Not exactly, Your Honor. And so just as with other investment opportunities, private equity is, and that I was trying to clarify that yesterday. Private equity is used as a term for a broader type of investment, but private equity within itself has diverse groupings of investment types. And so there are some private equity, like if you heard me talk about some of our services funds, what we call the Bernhard service funds, those are more typical private equity where they might hold an investment for 5 or 6 years and expect a 20% return and take more risk. And those are more of that traditional type of private equity. What people think of is when they think of private equity. Infrastructure is a subcategory within the broader private equity world. And infrastructure returns, especially with utilities, I can promise you that every utility investor understands, for example, what ROE structures are across the United States as to how utilities obtain their returns and what that sort of bandwidth is. And so they're much more concerned with the consistency of that return, and they actually like the regulatory security. But that's a different group of investors. And there are some private I mean, they obviously diversify themselves, but when you look at infrastructure, or particularly utilities, or what's known as core infrastructure, these are very specific types of investment and certain types of investors that recognize it's a lower return over a longer horizon. It's also lower risk, though.
And how is that determined?
Because you can look back, for example, we can look back over the history of any regulated utility, and I'll keep going back to New Mexico Gas Company, and we can look at their prior rate cases. We can see what they've been able to obtain. We can see what requirements have been established. We could see things like, what the commissions have accepted, what the commissions have rejected, and that gives you a great deal of predictability, because other than sort of macroeconomic changes that may have some influx, that there's a great deal of reliability and predictability with regard to regulated utilities, because the commissions follow a reasoned set of rules. And, as I mentioned, I think the other day, if you look almost across the country and you say, what is a typical return on equity that a utility is making? I promise you, it's between 8 and 11%. Like it would be extremely rare and so if you think about that across investments all over the country, that's amazingly consistent. And so institutional investors love that, because they also know that if you are operating well, if you're reliable, if you're affordable, and if you live up to your obligations, then you basically should be able to earn your return. And also you think about with infrastructure, these retirement funds and these union pensions and things, they're getting money every month from their employees and their union members who are putting their dues in and all that. So they have massive pools of money that they need to invest. So they love infrastructure because it allows them to actually deploy large amounts of capital. And that's what they're looking to do. And so utilities have big numbers in them, right? And so it allows them to deploy a large amount of equity, but with low risk because of the reliability of the regulatory construct.
Okay. And that sort of tags into my next question. Moving forward to page 14 of your testimony, the question posed on page 13 at line 10, are the objectives of private equity firms inconsistent with the objectives of public utilities? And in continuing your answer onto page 14 at lines 2 through 4, you say there is nothing in the investment philosophy or strategy of BCP management or the BCP applicants that is adverse to the interests of New Mexico, of the gas company customers. That's your testimony, sir?
Yes, Your Honor, that is.
And so with what you've just told me about this subcategory of infrastructure funds, is there any other distinguishing feature of your private equity application that you think supports your statement?
Yes, Your Honor. One of the things that, I was questioned a good bit about from Ms. Nanasi as well as I think some of the language you see in my testimony and in our materials, is that when we created Bernhard Capital Partners, it came from a group of professionals who had extensive experience in the utility business. And there are many investment firms or private equity firms that are just full of bankers, full of financial people who, that's what they've done. They're bankers and investors. In my experience, I spent the major part of my career within utility companies, operating them, running them. And so our investors value the fact that when BCP looks at a potential acquisition opportunity, we understand how utilities operate. And as you could well imagine, the layperson could get very lost in trying to understand how utility regulation works, and concepts like the rate base and return on equity. All these things are very confusing to the person who hasn't spent a lot of time in utilities. And so they value very much the fact that the professionals at Bernhard and the professionals that work with us understand.
I'm sorry, sir, you are cutting out. You're cutting out on.
I'm sorry. Does this
Last
sound
thing
good?
I heard was all these things can be very confusing to a person who has not spent a lot of time in utilities.
Okay, Mr. Lee, can you hear me now?
Yes, sir.
And so my next sentence was that our investors appreciate the fact that we have a specialized knowledge of utility operations, but also that we have a specialized understanding of regulatory approvals, including the regulatory approval process to acquire a utility and the test that the regulators will apply. And so, for example, in the last 2 years, as you've seen and heard in our testimony, we have acquired 5 separate regulated natural gas companies, and we have done what we've called carve out. We've carved those regulated gas companies out of electric companies. We also transitioned the shared services of those companies out of their electric company diversified parent. And those are the CenterPoint and the Entergy transactions that we've referred to as Delta and Magnolia. So when you consider that experience, our investors recognize that there's almost no one in the industry who has done what we've done as specifically as we've done. If you consider now New Mexico Gas Company, which is being carved out of an electric company, and the requirement to transition shared services out of the Ameritico structure. And so we have a specialized set of experience and knowledge, but we also have a specialized appreciation. So as an example, we signed this agreement with Emera to acquire New Mexico Gas in August of 2024, if I got that right. Yeah. We're now in November, right, of 2025, and we're going to go into 2026. In the investment world, that is an incredibly long time to close the transaction. But our investors understand it's going to take a year at least to get this through the regulatory process. You have to understand, and we're going to have to make 80 commitments to get the approval. And so there are not a lot of people who understand this. And so our investors get a great deal of comfort, not only that we can deliver the purchase price to the seller, but that we understand and respect the regulatory approval process and everything that comes with that.
Very well, sir. If you could move on to page 27. And that's your JA figure JMB-1, showing the structure. Let's see, the question posed on page 26 at line 7, please describe the corporate ownership structure relating to gas company following the closing of the transaction. And then that appears on line 27, correct, sir?
Yes, Your Honor, that's correct.
Okay. And generally, between this exhibit and your testimony yesterday which I think was more comprehensive in response to hearing examiner Schaefer's questions about the top down and the bottom up and all those things. My question is a little more general.
Okay.
And it's this. It's my understanding in the joint applicant companies, you have different roles. You're the president and you're the managing partner or general partner or limited partner. And you can, for the record, you can tell me the exact specific hats you have with which parts. But my general question is this: do any of those roles potentially cause you to be at different purposes with your other roles? So in other words, if you're an investor, which I think you are, is that going to have a potential negative effect on you being part of BCP management in your management role, as opposed to being the president of what is it, Saturn Utilities, Topco, or
Saturn Utilities Holdco.
Holdco?
And so you are correct, Your Honor. We do wear different hats in these roles. I do not see them as conflicting or creating the conflict. All these entities are effectively rowing in the same direction, I guess you would say, and have a common set of interests. It is, however, very correct to point out that the roles are very different in the sense that, again, in my role as say president of Saturn Utilities Holdco, obviously I am considered an executive of that corporate entity, and I have the obligations I have with regard to that corporate entity. As management, our job, the very simplest way to put it, as Bernard Capital Partners management, and that's where I am the senior managing director. My goal is to act as more of a facilitator or conduit, as you will, between the investors and the company. And when I say the company, I mean New Mexico Gas Company. And that is much more of a sort of advisory, sort of hands-on, but in no way does the management job give me any authority over the operating company or ownership. And so management is just functioning as a role as a manager on behalf of the general partner up at the top, but the manager can be fired at any moment and they can hire another manager to serve that function. And so they are different roles, but the objectives are aligned in the same, which is that, and that's why I make that statement, is that the objectives of the investor are not any different than the objectives of New Mexico Gas Company. And those are absolutely consistent with serving the customers and effectively serving the customers.
And I just wanted to get a clarification, sir. If you go to page 29 of your testimony, you're answering the question posed at page 28, lines 5 and 6. Please describe the role of BCP infrastructure funds in the transaction. So, in looking at your JMB1 and in your answer at line 8, the end of that answer, which starts on page 28, goes on to page 29. At line 7 and 8, the governance of Saturn Holdco and the New Mexico Gas Company Group will not be impacted in any way by the existence of the intermediate companies post-closing. That's your testimony, sir?
Yes, Your Honor.
And which specific intermediate companies are you referring to in this sentence?
What I'm actually referring to is the companies above anything above Saturn Utilities Holdco, LLC. So all of the ones between Saturn Utilities Holdco and going all the way up to the BCP infrastructure funds, those are essentially flow-through entities that have no purpose other than to create those structures we talked about yesterday so that the limited partners can have their different tax treatment. But those companies don't operate, they don't have employees, they are just to create that bridge, and they cannot, in a simple words, they can't tell New Mexico Gas what to do. They have no authority, they cannot affect the governance structure.
Would they be in line for disposition?
They're a flow through, so it has to move through them, but they can't keep it. They can only, as if there were a distribution, ultimately that distribution has to either pay off debt or it has to go all the way up to the BC Infrastructure Fund investors.
Very, very nice segue there, Mr. Baudier, because that was my next question. My note from yesterday, I just want to make sure I got right. I believe your testimony was that all the debt is going to go to Saturn Utilities Holdco and Saturn Utilities. Is that correct?
There are two packages of debt. So there's already existing debt at New Mexico Gas Company. That's what we've referred to. There's around $555 million. That's the debt that's there now, and we say travels with the business. Any debt above that has to go at Saturn Utilities Holdco so that it effectuates what we call that ring fencing protection. So that and so the reason you have these structures and these pass-throughs is to prevent any creditor of Saturn Holdco from going after New Mexico Gas Company based on the loans that it's putting at Holdco. So that's where we say non-recourse. All those loans, New Mexico Gas can never be responsible for. And then what happens is that when Saturn Utilities Holdco pays down equity to New Mexico Gas Company, it's equity. It's not a loan. New Mexico Gas Company has no obligation to pay anyone back for that money. The only way the money ever goes up is if they're allowed to issue a distribution and they issue it as a dividend, but they're not paying back a loan upstream ever.
And then does Saturn Utilities LLC have debt?
Saturn Utilities LLC actually as the parent company, are you talking about as the parent company of Holdco?
Yes.
It pledges its ownership of Holdco to the creditors of Holdco. And that's the only reason it exists. And so that's just to have an asset to pledge to those creditors. But to clarify once more, those loans can only be paid back through distributions that eventually come up. And those creditors know that if distributions do not come up, they don't get paid.
Okay. Well, so Saturn Utilities Holdco will have New Mexico Gas Company's existing debt, and then it will have the new debt to purchase.
So they're different bodies of debt. So New Mexico Gas Company, Inc. will have its existing debt, and it is the sole party responsible for that debt. There aren't guarantees or anything like that. It's supported by the utility. That's the 550. There's a second body of new debt unrelated to that debt that'll go at Saturn Holdco, and that's in the range of $250 million. And that will be what's called the Holdco debt, and that's described in the transaction structures. They're two different bodies of debt, and they're unrelated.
Well, let me ask you this, Mr. Baudier. So that's like $800,000 worth of debt, right?
800 million.
Or 800 million. Yeah. It's a lot of money, right?
It is a lot of money.
I mean, are you concerned or do you have any pause that that you're investing in that much debt and the potential implication of having that much debt with this company?
We're not, Your Honor, and here's why. Both New Mexico Gas Company, Inc. and Saturn Utilities Holdco will be have separate credit ratings. And we make that obligation in the commitments. So they have to maintain a creditworthy rating. And we also commit in the commitments that New Mexico Gas Company will have at least a 50-50 debt to equity ratio. So even though that sounds like a lot of debt, that's only half compared to equity, right? So that is a very, very healthy and robust debt to equity ratio, which is why New Mexico Gas Company and regulated entities in general get very good loans because they have such high equity, and the commissions require them to have such high equity. So another reasons why investors love utilities, and so that company is always going to maintain a very healthy financial picture, and that's guaranteed by and obligated by the commitments we make and by the enforcement of the commission. And then Saturn Utilities Holdco is also considered a very, very healthy debt risk because of the way lending banks look at the Holdco structure. So and then those banks will require us to maintain that creditworthy rating at Holdco. So the maintenance of these obligations, Your Honor, are number one, precisely would take the risk out of these, take much of the risk out of these investments. But it's also the reason why these investments don't make 20 and 30% return. It's because you're maintaining a very healthy equity structure in relation to your debt. And the way other investment companies derive higher returns is they put very, very high levels of debt on their investments. And we cannot do that in regulated utilities. And let me just say this as the counter, that $550 million worth of debt is matched with $448 million worth of equity that we'll be putting in that we're paying as part of the sale. And that's the equity that the Bernhard Capital Partners investors that's the equity they're putting in.
Right. And so I think basically you're referring to your testimony at page 30. Talking about the debt and equity blend.
Exactly.
Let's see. On page 32 of your testimony, and this sort of relates to the GDP and Rule 450. On page 31, the question posed at line 19, is the post-closing ownership structure for New Mexico Gas Company so complex that it will interfere with the ability of the NMPRC to oversee gas company? And you begin your answer at line 22 saying no. And what I'm concerned about is your last line of the answer on page 32. The commission is fully empowered and capable of overseeing NMGC and has access to the upstream holding company's books and records. That's your testimony?
That is my testimony on those lines. In the commitments themselves in the GDP, we confirm commission jurisdiction all the way up to the BCP entities, but it's not clearly enough stated in this testimony.
Okay, because that was my question: is how far upstream?
If we were to look at the commitments and at the GDP, it goes all the way up. We submit the Bernhard Capital Partners infrastructure funds. The joint applicants submit to the jurisdiction of the commission, and there's a specific commitment on that. And we also commit to the review of the books and records all the way up to the joint applicants, all the way up the chain by the commission.
Very well. That was a particular concern of mine in the original separation between Public Service Company of New Mexico and Gas Company.
Yeah, I'm sorry.
That it not just be the specific close related company, but that it go up the chain.
Yes, I should have been more specific in my testimony, but it is in those exhibits and in the official commitments in GDP.
Very well, sir. Let's move on to page 68 of your revised application testimony. The question posed at line 19, will a cost allocation manual be filed with respect to any IT shared services cost? Your answer begins at line 21 that says yes. The joint applicants commit to meet with the NMPRC Utility Division staff and develop a cost allocation manual for filing with the commission. That's your testimony, sir?
Yes, Your Honor.
Do you have any time period in mind that the joint applicants would endeavor to work with staff and or any parameters with regard to developing this cost allocation manual?
We certainly can do it immediately. There's really, Your Honor, two phases with regard to this. So in which referred to currently as the CAM, the cost allocation method, that is already in place between TICO and New Mexico Gas for the current shared services. And my understanding is that it's regularly reported on, and that has already been a process that has been in place for the last 10 years with the commission based upon the TICO shared services. Because we are getting this, what's called this transition service agreement that you've heard reference to, where TICO is going to continue to provide those services to New Mexico Gas for up to 24 months following the closing. That same CAM should work. Like that same CAM that has been, that should still work because effectively it's going to be the same. However, what we'll want to do is prior to, certainly, you know, after we close, we will want to start developing a future CAM that will be for when we say roll off of the transition service agreement from TICO. And then we have that limited shared service component that will come from Delta Utilities. We will need to develop a new CAM. And it's absolutely no problem at all because Delta Utilities has already been required to develop CAMs for both Mississippi and Louisiana because they're doing it in those jurisdictions as well. And they want to make sure the allocation is proper as well.
Very well. I'm looking at page 95 of your revised application direct testimony. And this had to do with the question posed at line 7, which was from the February 2025 bench request number 11. Provide a current list of all other companies owned by each of the BCP infrastructure funds. And your answer begins on line 10. And you say the BCP infrastructure funds, and that's presumably the ones in this case, do not currently own any companies other than the other BCP applicants. To be clear, however, the BCP applicants note that other investment funds managed by BCP management do own other companies. The other funds are BCP Fund 2, LP, BCP Fund 3, LP, BCP Energy Services Fund, LP, and BCP Infrastructure Fund, LP, collectively the non-participating BCP funds. And then you set out their combined portfolio in a table that follows. That's your testimony, sir?
Yes, I'm trying to clarify it myself from a point in time, but yes, that is what it says, Your Honor.
And my question, again, nice segue, Mr. Baudier. My question is there any update to this answer?
Yes, there should be an update to this answer, which is why I'm a bit confused myself. But BCP Infrastructure Fund 2, which is one of the joint applicants, has made a 50%, a roughly 50% investment in Magnolia, which is one of the gas LDCs that were previously acquired. And I do
Okay.
note in the reference to Delta Utilities is too broad. I do note on page 96 where it says Delta Utilities, you'll see in that box that it says BCP Infrastructure Fund. That's actually that's what we call Infra 1. That's the first infra fund. But you see Infrastructure Fund LP2, which is written as a typo. That should be Infrastructure 2 LP. They basically both invested in Delta Utilities and have fractional interest there. But so that makes me confused about whether my very first line is incorrect when I say the BCP infrastructure funds do not currently own any companies other than the other BCP applicants. I'm actually confusing myself with my own language, but I can tell you that an update to that language would be that Infra Fund 2 does own a percentage of Magnolia Gas Company, which is one of the gas LDCs.
Okay.
And that's the only clarification.
Very well, sir. Sir, you filed the third supplemental testimony in response to the March 24th, 2025 bench request.
Yes, Your Honor.
And my understanding was that was an update to previously to your previously filed answer. Is that correct?
Yes, Your Honor.
And the question posed on line 3, beginning at line 17, bench request question 6. What is the anticipated acquisition premium that will be paid in acquiring the target company? How does this premium amount influence the post-close debt, profitability, and valuation of the target company and the BCP infrastructure funds? And then you answer on page 4, beginning at line 1, taking into account the current procedural schedule in this case and the resulted anticipated closing on the acquisition, the BCP applicants now estimate the acquisition premium as approximately $130 million to $185 million. The amount of the acquisition premium, and then in paren, as distinct from the sales price as a general matter, in paren, does not impact the post-close debt. That's your testimony, sir?
Yes, Your Honor, that's correct.
And how does that updated amount differ from your original amount?
It is lower. There's some overlap in the range, but it is lower. I would have to go back and look at my first answer to the first bench request, number 6, to see what range we provided back then. But I believe there's still some overlap in the range, but it's lower, generally speaking.
Does this give you any pause?
It does not. We don't actually, from a standpoint of the regulated utility companies and the buyer and the seller, the acquisition premium is just an accounting entry to us. It doesn't mean anything. It is it is just a book entry to recognize the purchase price versus the book entry for the book value of certain assets. And so we don't really consider the acquisition premium other than as a regulatory construct, because and this is true in every jurisdiction I've ever been in. You can never recover an acquisition premium from the customers. And so in every transaction, this acquisition premium has become an accounting function that's gotten recognized to determine how much cannot be recovered relative to the book value of the asset.
Then is there really any benefit in the commitment not to do it if no one does it and you're saying they can't do it?
Well, they can't do it because regulators have never allowed it.
Okay.
And so it's become like essential precedent. In other words, like generally speaking, in every type of transaction cost and acquisition premium, no one ever asks to recover that.
Okay. Well, that's the hat trick there, Mr. Baudier. Another nice segue to commitments, and I just want to look briefly at your rebuttal testimony on page 48. And on page 47, in section 12 conclusions, the question posed at line 5, what are your concluding observations with regard to the parties' positions on the revised joint application in this case? And then you provide on page 48 a table JMB2, which is labeled comparison of enhanced monetary benefits. That's your testimony, sir?
Yes, Your Honor, that's correct.
Judge, I'm sorry, comparison of, you broke up.
Comparison of enhanced monetary benefits.
Thank you.
And thank you, sir. And that's your testimony, sir?
Yes, Your Honor, it is.
Okay. And so after seeing that on the first day, that there it appeared to be some agreements or concessions by joint applicants that were included in the rebuttal testimony that to the parties' positions that hadn't been previously included by joint applicants. That's what this chart is specifically with regard to monetary benefits, correct?
Correct, Your Honor.
Okay, so in having seen some other things, I issued the first bench request, which asked the company or asked the joint applicants to please provide a list of commitments in addition to those that were provided in the revised application. And so joint applicants did that and came up with $12 additional commitments. Is that correct, Mr. Baudier?
Yes, Your Honor, as set forth in the response to the first bench request, correct.
Okay, yeah, it says that you and Mr. Shell were the respondents. Does the 12 or do I want to strike that. Are these 12 commitments in the bench request response? Do they include the 1, 2, 3, 4, 5, 6 monetary benefits, or are those separate?
I believe, Your Honor, that these 12 are inclusive of, if you refer back to the table on page 48, I believe they're inclusive of the column that says response to parties. So I think they're inclusive of that 1, 2, 3, 4 additional ones that amount to the 17,500,000 of additional benefits.
Yeah, I think there's only 3.
Oh, I'm sorry, I'm counting the total line. Yes, you're correct. So I think it's inclusive of
Okay.
that column, and then the additional non-monetary ones, if I have it correct, I believe.
Okay. During your testimony so far in the first 2 days, did joint applicants make any other commitments in addition to what's already been referenced?
If I could ask for clarification, Your Honor, you mean in response to a specific question that was asked, or just
Yes.
anecdotally? Geez, I'm trying to remember. I believe in response to Commissioner Aguirre, he wanted more specificity around the board composition. And although in our statements, we talk about the majority of the board members will be independent and that we expect to replicate the board composition as it exists now, I think I committed to him that if he wanted me to count out those 9 people and specify, how many will be independent and how many will be disinterested, etc. I want to say I committed that to him. I'm honestly trying to remember if there were other requests that I sort of agreed to on the spot, but I'm having trouble recalling at this moment.
Potentially, did you also agree to something with regard to economic development?
Oh, when there was questioning around the methodology for the disbursement of economic development, I suggested that we would be willing to commit to prior commission approval of any disposition of those benefits. And we would also commit to working on a more detailed methodology, which may or may not include the creation of a foundation similar to what El Paso Electric and PNM are doing with regard to their economic development benefits. So I believe I committed to further structure around those as well as commission approval.
Very well. As a third bench request to join applicants, I would like Mr. Bodier to confer with his counsel and make sure that's what they heard too. And if the joint applicants are intending on including these 2 commitments, in addition to the other commitments that they have made, in this case, I would ask that something in writing be filed as a response to the third bench request.
We will do so. Thank you.
Thank you. Mr. Bodier, that's all the questions I have for you, sir. Thank you very much for your information and your participation. At this point, Mr. Elvidres, do you have redirect for your witness?
I have a little bit, Your Honor, if I may.
Yes, go ahead, sir.
So, Mr. Bodie, I wanted to pick up on some of the questions that hearing examiner Hurst just asked you about. And you were going through I guess, the debt associated with the Saturn Holdco as well as the NMGC. Do you recall those questions?
Yes, I do.
And I wanted to ask, with regard to the NMGC debt, the $550 million that you referenced, does that have anything to do with the purchase price of the transaction, if you will?
Not really the purchase price. It's just that we describe it in that way because transactions can either come with debt or the debt could be paid off as part of the transaction. Those are two different ways to structure a transaction. And so the reason why we provide it in the purchase calculation, so to speak, is because that debt has a value, obviously. And so that $550 million of debt, which we say in our kind of parlance travels with the business, means that that debt is coming with New Mexico Gas, as opposed to the purchase price including $550 million extra dollars, and then that debt being paid off with that money, and then the requirement to put new debt on, or actually refinancing that debt with new debt. And so is a better way to say it. So it doesn't really affect the purchase price, but it's obviously a component of the value as part of the transaction.
Does the $550 million NMGC debt pre-exist the transaction?
Yes, it does. It's been there for quite a while, and there's multiple what we call tenors of that debt. So it consists of various loan packages that have different maturity dates.
So you were asked about debt upstream of NMGC. And let me ask, are you aware whether Emera carried any upstream debt?
Emera did carry upstream debt for a period of time, certainly during its hold period. There were loans at what's called intermediate, I think New Mexico Gas Intermediate Inc. However, just prior to us executing the purchase and sale agreement, that debt was paid off. So that debt does not comprise a portion of this transaction. However, they did have what we would call, quote, holdco debt.
Was that debt kind of equivalent to the debt that Saturn Holdco will have?
I would say it's different in two aspects. We are making a commitment that Saturn Holdco will be investment grade, and that commitment is part of the transaction. I don't think there was a similar commitment previously, and we would not put debt at intermediate. We're putting debt all the way up to Saturn Holdco because we think that provides better ring fencing, more distance between that debt and New Mexico Gas Company. I actually am not sure that putting debt at intermediate would be exactly ring fenced, but I'm not opining on that.
Do you see benefits from the way the BC applicants are structuring their upstream debt for the customer?
Absolutely. As I just mentioned, there is significantly much more secure ring fencing by having the additional protection between and putting the debt at Saturn Holdco as opposed to putting it at intermediate or some lower level, which creates an additional non-recourse protection that in favor of New Mexico Gas Company, and also by us pledging to make sure Saturn Utilities Holdco is investment grade, it also makes sure that Saturn Utilities Holdco would be even a stronger entity and we're committing to that.
So also to follow up a bit on Hearing Examiner Hurst's questions about potential new commitments. Do you recall yesterday, Chairman Aguilera asked you about the economic development commitments, the $10 million that have been committed in this case?
I believe I remember that colloquy, that question and answer session. Yes.
Do you recall that he said that in terms of the benefits that were being proposed in this case, that he, I guess, placed less significance, that may not be his exact words, but didn't place as much value perhaps as other things on the $10 million in economic development investments?
Yeah, I recall that.
And let me ask, why did the BCP applicants, the joint applicants, propose economic development benefits in this case?
Economic development benefits have been a component of prior transactions, including in New Mexico. They're very frequently a component of commitments in other transactions that we've seen. We like the fact that economic development benefits create multipliers, but that's not to say that all of the economic benefits don't create multiplier effects. But also, it's just in general, in my attempt to create, in our attempt to create the most comprehensive package of benefits as possible that would appeal to as many of the stakeholders as possible, we proposed just a more comprehensive package, and economic development we thought was a desired component of that.
If the commission indicated that of the funds that are being offered, the monetary benefits that are being offered in this case, that the public interest was better served in other areas, is there any flexibility about moving the proposed monetary benefits around?
If it's a reallocation of benefits from one category to another, yes, we see that we're certainly flexible to accept that. I know in some of the testimony of the interveners, various interveners recommended the same, that certain pockets be moved to other benefits. So yes, we're open. We want to do what creates the set of benefits that make this the most able to satisfy the test. And if that requires a reallocation, that's fine with us.
And I think during the first day, there was a discussion about the expenses associated with the TSA, the Transition Services Agreement, as well as transition costs, and something you described as overlap costs. Do you remember that testimony? Can you explain again what overlap costs are?
So overlap costs, they don't just exist in the context of a big transition like this. Overlap costs are when you have to prepare for something and you need a clean break and to be prepared, so that you need to start spending some of the money for the replacement before the existing one is gone. And I'm not meaning to put people in this category, but we see it a lot in HR. So let's say you have an important employee, that important employee is going to leave. You need to hire their replacement. Sometimes you'd say, well, I'm going to hire your replacement a month early, or I would like you to stay a month later, so that so that there can be a smooth transition. We call that overlap cost. And so at that time, you're actually incurring a redundant cost for that same position or that same service. And so that's what I was referring to.
Well, can you clarify, will any of those redundant costs, overlap costs, be charged to customers?
No, they won't, and they can't be. What I was trying to state in my, I guess the specific question that I believe I was answering was, do customers pay for cost? I guess the question was, do customers pay for the overlap cost? They pay for the one set that is already there, but they cannot pay for duplicate costs. So if there's an extra cost for the same service, that can't be charged to customers. And so I could have said that incorrectly, but my other, hopefully clarified it later, is that if these costs are being incurred during the existing rate or time period, which is when they'll be incurred, the rates won't change anyway. So even if the utility incurs additional expenses, they cannot recover additional costs from the customers. The rates have already been set.
I do want to circle back around to the upstream debt issue very briefly. And you talked about the upstream debt that was at NMGI, which is the entity that holds the NMGC stock directly. Is that correct?
That's my understanding, yes.
But is there also debt at Emera even further upstream than that? For example, at the Emera level?
Yes, I don't know how much, but yes, at Emera Inc., there's also a component, a balance sheet of debt and equity. So yeah, as a corporation, it will have that as well.
Okay, so functionally, is that really any different than the upstream debt that Saturn Holdco will have?
Well, it's different in the sense that it has two components of debt where our structure has one. Remember that our top company is an equity, is all equity. So those partners are all equity. So we're not reflecting any additional debt, but as a corporation, I would expect naturally Emera would have the debt.
Excuse me, Mr. Alvidrez and Mr. Bodier, could you just rephrase that without the pronouns, the we, and just for sake of clarity, rephrase that response with the specific reference to the companies you're referring to?
Yes, sir. Hearing Officer Schaefer, sorry about that. Yes, so if you look at the Emera chart, again, my understanding was at the time that it held debt, is what we call holdco debt above New Mexico Gas, it would have been in this second box above, which is New Mexico Gas Intermediate Inc., which, by the way, is the same entity that's coming over as part of the transaction, but we're not putting debt there. That was the debt that was paid off. I believe what you're asking me, Mr. Alvidrez, is there debt anywhere else up the Emera chain? And I would say yes. At a minimum, there would be debt at Emera Inc. at the very top. But so yes. Now we don't have that second layer.
You said we, so
I'm sorry. At the top of the chain for the post-closing structure, the joint applicants, those limited partnerships do not have debt at that level. So that would be different than the Emera structure.
Okay. Hearing Examiner Schaefer, did we fill the gap for you on the?
Yes, thank you. There's just a lot of moving parts and many participants here, so I just want to make sure we're all on the same page because a confusion could, yes, just to avoid any confusion. Thank you.
We appreciate a clear record, so thank you. So I do want to turn to questions that you got primarily from Chairman Aguilera about board commitments, board related commitments. And can I have you go to page 49 of your direct testimony?
Yes, I'm there.
And you might take a few moments to look over it. Actually, the Q&A extend for a couple of pages, okay, onto 3.
Yes, I've seen this.
And can you describe for us what this section of your testimony addresses?
This is addressing the commitments that we group under a category, I guess you'd call governance limits and documentation, as well as local control and management commitments. And so this is where we summarize at least the majority of our commitments that relate to maintaining the governance structure as it has been approved and currently in place at New Mexico Gas Company, and as well as our commitments that the company will actually maintain and enhance local control as a New Mexico local company. And so as we discussed, the board currently has 9 members, of which one is Mr. Shell as the president. It's got 2 representatives from, and the reason why, my testimony might say substantially similar is that there's going to be some changes of people and names. And so like currently now there are 2 Emera representatives on the board. They will obviously leave, and there'll be 2, we'll replace those with 2 BCP representatives on the board. And so that's 3 of the board members. The remaining board members will be 6 New Mexico residents, as they currently are, and we'll guarantee that they'll not only all be independent, but 3 of those will meet the stricter criteria of not only independent but disinterested.
Well, I wanted to ask about that. The phrase independent director has been used in some context, and the phrase disinterested director has been used. What is this distinction here?
So it's levels of I guess strictness, but an independent board member is not employed by, has no connection to, is not affiliated with one of the parties. So in this case, with regard to the BCP infrastructure funds, an independent board member does not have any relationship to any BCP entity, affiliate, portfolio company, anything like that. Disinterested also means that in addition to being independent, that director will have no material financial relationship with any entity affiliated with BCP, and also that they could not have had such a relationship for the previous 5 years. So if for some reason you were somehow connected to a portfolio company, or you were an investor or something within the last 5 years, you cannot sit on the board of New Mexico Gas Company. And then what we've agreed to is that obviously I need to confirm all that with the existing independent board members, meaning we'll need to confirm that. and therefore, within 30 days of closing the transaction, we must identify that, yes, at least three of these independents are also disinterested, or if not, we'll have to replace them with a disinterested board member. Although my current understanding is they're independent and disinterested, all six of them.
Okay, thank you. I wanted to have you go to page 27 of your revised application, direct testimony, which is the post-closing organizational structure.
Yes, sir.
And this is to follow up again on hearing examiner Hurst's questions. Is it your understanding that the companies that are identified, the entities, I should say, that are identified in figure JMB1 revised application are all the BCP applicants?
Yes, that's correct.
And with regard to have all of the BCP applicants in the regulatory commitments committed to be subject to the jurisdiction of the commission?
Yes, they have.
And have they committed to make their books and records available to the commission upon request?
Yes, they have.
You were asked by Commissioner Aguilera about an expectation of profitability. Do you remember that question?
I don't know if it was a question, but yes, I remember the discussion. It could have been a question.
And in terms of expectation of profitability, is there a distinction between an infrastructure fund, which the BCP applicants include, versus a publicly traded company?
As I mentioned yesterday, I guess I'd say, is that when we talk about this patient investor concept, our specialized investors in the infrastructure world recognize that, quote, profitability is a long-term endeavor relative to the span of an investment. And they also recognize that more money certainly in the beginning needs to be put into a company than can ever be taken out. And so I would say the difference, the way, a private equity investor would think of the world versus perhaps a public company investor is, we say all the time that, public companies kind of live and die by Wall Street. And so every quarter they're presenting their earnings, and their stock price will move up and down. Those investors are looking at that stock price. And as I testified before, if you own stock in a public company, you could sell it anytime you want. And so those investors are much more focused on what is the overall stock price of the company, as opposed to, a long-term, I invested in an operating business, and I'm holding that operating business for 10 years or longer, and I expect ultimately to appreciate my return over the course of that 10 years. But they can't sell their stock if they don't like the price.
And just, let me ask, for example, could any individual off the street come in and be an investor in one of a BCP fund?
No, that's actually, when I mentioned the restrictions that we have SEC restrictions and reporting requirements as well. And if you recall the questioning yesterday around this form that we follow called ADV, that ADV stands for advisor, and it's the type of advisor we are. We cannot what's called market public securities. We are specifically prohibited from attempting to sell securities to the general public.
Those are my questions, hearing examiners.
Very well. Mr. Lee, are we ready for a break?
Yes, ma'am.
Very well. It's 10:31. We'll come back at in 10 minutes at 10:41, and I will allow the cross-examination subject to the areas already specified. With that, please remember the YouTube stays on, and we're recessed for 10 minutes. Thank you.
So you can see you can see. So when you're done tonight, you should see where Amy's at, and that will tell you when you're proofing.
How we doing, Mr. Lee?
Good, Judge. I'm ready when you are.
Are we good, Mr. Lee?
Yes, Judge, go ahead.
Very well, thank you, sir. All right, we're back from our recess, and we will allow brief recross on commissioners' questions, hearing examiners' questions, and the redirect. Mr. Gould, any recross from Ingham area?
Yes, Madam Hearing Examiner, I'll be as brief as I can be. Good morning, Mr. Baudier.
Good morning, Mr. Gould.
I want you to turn to page 27 of your revised direct and just revisit the conversation you just had with your attorney about that exhibit or that table. Are you there?
Yes, sir, I am.
Okay. If I heard you right, and correct me if I'm wrong, I believe in response to a question by your counsel, you said all of the entities pictured in that schematic would be subject to the jurisdiction of the commission with respect to their books and records. Did I hear that right?
I believe that's what I said, yes. And my understanding is that comprises the joint applicants, and in the commitments, we referred to the joint applicants.
And just to put a finer point on it, so clearly right now, New Mexico Gas is subject to the commission and New Mexico Gas Intermediate, but you're talking about every single entity all the way up the line, up to that top circle, BCP Infrastructure Fund 2 LP, BCP Infrastructure Fund 2A LP, and BCP Infrastructure Fund 2 GP LP.
That's correct. And
Okay.
and also, I believe to some degree, those were provided in response to either bench requests
Okay.
as well in this case.
Okay. And what about the one that's not on there, the BCP Management LP GP? Would it be subject to the commission's jurisdiction with respect to its books and records?
I don't believe management, BCP management is a joint applicant.
Okay.
In this case.
Okay, just to clarify that. You also spoke with your attorney, and I believe you spoke with Commissioner Aguilera last night and recently with hearing examiner Hurst. And I think you had a discussion with hearing examiner Mr. Schaefer about the patient investor, the long-term investor. Do you remember those conversations?
Yes, sir, I do.
Okay. And I believe you just responded to Mr. Alvidrez when you said the patient investor is one that wants to hold for 10 years or longer.
I wouldn't restrict it only to that time period. It's that the patient investor generally understands that they're making an investment in an asset that is a longer term investment. It might not be exactly 10 years, but it's longer than, say, someone who's investing on the stock market.
But you have committed in this case, in your revised application, to hold New Mexico Gas Company for a minimum of 10 years.
That is correct.
Okay. And you have also, I think you referred last night to the potential that you could extend that commitment to 10, 12 years.
Well, the fund itself has a life of up to 15 years, so it could be up to 15 years, theoretically, with no changes, to the fund.
Okay, that's what I was asking because, and I think I can finish this line of questioning very quickly, but the concern that it raised in my mind is we have all the entities in the fund in the top circle on the org chart. And we know that they're committed for 12 years. Those extensions, do they require some kind of vote? Can people opt out or new fund? You see what I'm going? Is there going to be a new entity
Ask
created?
one question at a time, Mr. Gould.
I am very sorry. Let me ask, okay, to extend, is there a need for a vote?
There would be if we were at the end of the 15 years, where the fund life would expect to expire, yes, the investors would have to agree. Well, if an asset were still, let me clarify, if an asset were still in the fund at the end of 15 years and the asset were not sold, then the fund has to continue for as long as that asset is there. But the parties could also agree to just extend the fund for a longer period. However, it's potential that what they may decide is if it's all the same parties or less than all the same, or less than all the parties, they may say, let's create what I discussed as yesterday as a continuation vehicle, which is let's create another fund that looks exactly like this one with the same parties, but it'll be new legal entity because this one's expiring or something like that. And so it could be the same entities or it could be different.
Well, you went exactly where my question leads, which is if there's a new legal entity as part of that extension process, do you believe that you, as we sit here today, would need to come back to the commission for essentially new control of the utility? Would
Absolutely, yes.
Okay.
Yes. That would require, that would be like the equivalent of a sale of the company.
Okay. That was my understanding too, and that's really where I wanted to
Yeah,
get.
testify, Mr. Gould.
Okay. The next question is related. If you get to the end of the 10 years and the fund entities do not want to extend, what would happen then?
So if you get to the end, well, again, let me say this. If there are still assets in the fund that have not been sold, they don't have a choice.
Okay.
They have to stay in until they ask. Now, if you got to the end of 15 years and you wanted to continue, all would not be required to continue. But as long as there's an asset in the fund, even if you get to 15 years, you cannot shut the fund down with an asset in it.
Is there a potential as part of this extension discussion we're having where the BCP infrastructure fund would actually have to make a decision to sell New Mexico Gas Company?
No, it would not. It would not. And if there were ever any purported change in ownership from that regard, we would consider it to be a sale that would require commission approval.
Okay. And if you got to the point where you, for whatever reason, decided not to continue with the investment. By you, I mean the infrastructure fund, decided not to continue with the investment in New Mexico Gas Company. Is there a provision in any of the commitments or any of your documents where you would notify the commission of that, so they would have a heads up? Hey, there's a potential sale case coming to you, and we're shopping this utility around.
I don't know if there's a specific commitment stated in the commitments, other than as what we see as the general requirement, regulatory requirement, that any proposed change of ownership would require commission approval and an application process.
But as far as you know, just to put a finer point on it, there's nothing in the commitments or in the documents that would require you to notify the commission if you began a bid process similar to what Emera did that led to this case.
I'm not aware, as I sit here today, I'm not aware.
Okay. Move off that subject. I have one more question. I believe in response to one of Mr. Schaefer's questions, when you were talking about hiring 20 new employees, and it may have been a slip of the tongue, you said, we're planning on hiring dozens of new employees. Did I hear that wrong? By we, I mean New Mexico Gas Company. And let me ask the question better. This was a line of questioning that had to do with the replacement of the Emera shared services with these new employees. And we had been talking about 20. So my real question is there a potential that there will be more than 20 hired to make up, to provide those services which are currently provided by Emera?
The best estimate that we have right now is 20. That's what our experts have told us, that in discussions with New Mexico Gas Company with regard to the positions that need to be put in place. Could it be one or two more or something like that? It's possible. It's a best guess estimate at this point based upon our best information.
Thank you. Those are all my questions, Madam Hearing Examiner.
Thank you, Mr. Gould. Ms. Anazi, any recross?
I have a couple.
Go ahead, please.
Thank you. Good morning, Mr. Baudier.
Good morning, Ms. Nanasi.
Yesterday you talked about, I believe the quote was a limited role, that BCP would have a limited role in NMGC. I think you were talking about that BCP wouldn't be directing NMGC. Do you remember that conversation?
Yes, I do.
So my question to you is, isn't the shared services that BCP is proposing with Delta Utilities and this new IT Oracle cloud system very much a direction change and not exactly limited?
I would disagree with that. BCP doesn't have any ownership or connexity yet, other than as a proposed purchaser of NMGC. This is a proposal to provide a service through Delta Utilities, which has been discussed between the parties, and the joint applicants are collectively presenting it as an option. But obviously, even much more so than after the transaction, BCP has no ability to direct New Mexico Gas at this point in time. It's owned by Emera.
Right, but your proposal around the Oracle, and BCP's Delta Utilities, if this transaction goes through, then that is going to be changed from the current shared services with Tico and Emera, and it's going to be using the Delta Utilities Oracle system. Isn't that right?
That is correct.
So what I'm asking you about is that's via your testimony was that's via BCP, right? That is not like BCP came up with that idea, not NMGC.
I disagree with you. We came up with it together, and BCP is neither directing New Mexico Gas nor is it directing Delta Utilities. Just as with New Mexico Gas, BCP does not control the day-to-day operations or exercise, direct control on a day-to-day basis of Delta Utilities either. So as these discussions and the due diligence proceeded with regard to the best way to approach the post closing shared services, we were examining options. Delta Utilities had just been through this exact process with two other acquisitions. We put Delta and New Mexico Gas together, and they fashioned the proposed solution. That BCP did not do that. BCP just put the parties together.
Now I wanted to ask you about a response that you provided to hearing examiner Hurst today. You were talking about your specialized experience with utilities. You recall that?
I do.
So let me ask you something. When did you acquire Entergy? When did BCP acquire Entergy via Delta Utilities?
The Entergy transaction closed March 31st of this year.
And when did BCP's Delta Utilities acquire CenterPoint?
Oh, let me correct that. The CenterPoint acquisition was March 31st. The Entergy or the Delta acquisition was July 1st.
When did BCP's Delta Utilities apply to the Louisiana Public Service Commission for the Entergy acquisition?
I don't recall the
Hold
exact.
on just a second, Mr. Bodier. Mr. Nasi, what has this got to do with his knowledge and experience that he testified about?
Could you just give me a couple more questions and that will become clear?
Okay, I'll give you a little leeway, but it sounds like you're exceeding the scope of recross.
I think it will become rather evident
All right.
really quickly.
I don't recall the exact date of the application before the LPSC or the New Orleans City Council for the Entergy acquisition.
Do you know how many months it was approximately?
I would say probably 8 8 to 10 months, if I recall. That's about the timing of the process.
And what would your answer be for the center point?
Again, don't recall exactly. I believe the transaction was announced sometime in February of 24. We would have filed shortly thereafter for application. So probably a year before approval. And that was with multiple, that was Mississippi as well as the Louisiana Public Service.
And before the acquisition filing, was there campaign contributions made by Bernhard Capital?
Strike it. You're totally going out of bounds, Ms. Nanasi.
Well,
that's not appropriate. He talked about his knowledge and experience, and I allowed you some leeway to ask about the new companies. But this is inappropriate cross. Move on to your next question, if you have any.
Can I just say something for the record then, please?
Sure.
Madam Hearing Examiner, as you know, there has been the question by the interveners, all of us, about the experience of Bernhard Capital Partners and whether they have requisite competency to buy New Mexico Gas Company. Mr. Baudier spoke at length this morning about their specialized knowledge and that was why, and basically they only had two gas companies, and one closed in March of this year and the other one closed in July of this year. And so one of the
But
questions—
you didn't ask him, Ms. Nanasi, about his specialized knowledge and experience.
Right. I'm saying that
you're trying to testify that that's all the knowledge and experience he has, and you haven't even asked him the question. So I'm not going to let you do that. Do you have any further questions?
Sir, Mr. Alvidrez asked you about overlap costs.
Correct.
Do you remember that?
Yes, ma'am, I do.
And I had asked you yesterday about would ratepayers be double paying for TICO and AmeriShare services, while they would also be paying for an MGC and or Delta Utilities. And you said, I believe, that those costs were factored in. And so are you saying that there would only be one charge for those when both sets of employees are working? Will there only be one charge to ratepayers?
Yes, ma'am, that's correct.
Okay. Who will be paying the other employees then?
The companies or the investors will be paying them. They just will not be recovered in rates, as with any other charge that is not recovered.
That's all I have.
Thank you, Ms. Nanasi. Ms. Beatles, any recross?
Yes, I do have one question. Thank you, Madam Hearing Examiner.
Go ahead, please.
Mr. Baudier, good morning.
Good morning.
You were asked some questions from the hearing examiner pertaining generally to differences between investing in private equity versus publicly traded companies. And my question to you is, why would an investor with, let's say, and I'm not sure what the minimum investment is, and that may be confidential, so I don't want to I'm just going to throw out a number hypothetically. So why would an investor with, let's say, $5 to $10 million to invest choose to invest in your fund versus a publicly traded company?
They may invest in both. And so these investors, just like many even individual investors, diversify the portfolio in which they invest in. So if you would say, look at, for example, a typical government retirement plan, or if you look at even, maybe your own retirement plan, if you look at their portfolio, they will have some investments in public stocks or equities, and they'll have various, it'll be a pie chart, and it'll say, these are the things we invest in. And so we're just one component of the types of things they invest in, but they invest in many different types of varied investments.
So my question is, why would they prefer to invest in your fund? So let's say that they could invest in only one or the other. What do you offer that a publicly traded company does not?
Well, in some instances, you'll actually see that if you look at at least at various points in time, you could actually see that the distributions that some utilities delivered through private through public stock ownership to their investors versus what the institutional investors saw in infrastructure investments. Sometimes it wasn't as good, even though they were the equivalent types of investments. But I've never been aware of one of our types of investors who was limited to one type of investor, because the folks we deal with are large pools of capital that, by the nature of their investments, invest in many different things. And so they're not making the types of decisions that I need to pick one versus the other.
Yes, but my question is, if they were faced with that choice, I guess what I heard you say was that your returns may be greater.
No, I was suggesting that some of the dividends distributed by public companies are not always greater than what the distributions may be to a private investor. So they'll look at each particular investment. However, the reason they would invest in our structure is, and why would they do this type of investment, is because it's lower risk. As I discussed, the regulatory structure creates a much lower risk that they will actually get a return and not lose money altogether.
So you believe there's lower risk with investing in your private equity infrastructure fund versus investing in publicly traded utility company stock?
No,
Just
I was
generally speaking, I'm just trying to clarify what you're saying in terms of the advantage to the investors of private equity over publicly traded.
No, I would not say, because the risk is in the underlying investment, which is the same utility. So I would not say that the risk is any different if the underlying investment is the same regulated utility.
So the advantage of private equity is that they may see greater dividends or distributions. Is that one that you listed?
Yeah, I'm always better if I could try to give a specific example. If you're an investor in Bernhard Capital Partners Infrastructure Fund, and you invest in New Mexico Gas Company, if New Mexico Gas Company distributes a dividend, then you as an investor will get that dividend because you've invested specifically in New Mexico Gas Company. If you invest in a publicly traded utility, say Emera, and it owns New Mexico Gas Company and you own Emera stock, even if New Mexico Gas Company distributes a dividend, they may not distribute that to you because Emera will have a different criteria on its entire set of companies as to when it distributes a dividend. So it's not just based upon your investment in New Mexico Gas, it's based on everything that Emera owns and what its criteria are for distributing dividends.
Okay, I have nothing further. Thank you.
Thank you,
Thank
Ms.
you very much.
Beatles. Mr. DeSalen, any recourse from CCAA?
Yes, Madam Hearing Examiner. Just a couple of questions. Thank you. Shouldn't take long.
Thank you.
Good morning, Mr. Baudier.
Good morning, Mr. DeSalen.
So I just want to ask you about it. The question that the hearing examiner asked you about any changes that have been made to the company's commitments as a result of the hearing so far. And I want to direct your attention to page 61 of, you don't need to go there, but on page 61 of your revised direct testimony, you stated that the company commits to submitting to the commission a report, an annual report, sort of detailing the efforts to comply with the order of approval. And do you remember we talked about that yesterday?
I believe I remember, yes.
And I think that we discussed that there were certain commitments that the company was making that would go for 7 years, but the commitment to file the reports is only 5 years. Do you recall that discussion?
Yes, I do recall that, Mr. DeSalen, and I forgot about that in my earlier testimony.
Okay, and as I understand your earlier testimony, you had committed on behalf of the company that you would continue to file those reports for 7 years after closing of the transaction, assuming it's approved, as opposed to 5 years. Is that correct?
Yes, sir, you're correct.
Okay, thank you very much, Mr. Baudier. That's all I have.
Thank you.
Thank you, Mr. DeSalen, for pointing that out. Mr. Freeman, any any recross from you?
No, Your Honor. Thank you.
Thank you. Mr. Friedman?
Nothing from staff. Thank you.
Thank you. Very well. Hearing Examiner Schaefer? Or commissioners, anything further for the witness?
Nothing for me.
Very well.
Hearing examiner.
Thank
I do
Commissioner
have,
Aguilar.
yes. Thank you. I do have one just kind of comment to make. Yesterday when I was asking questions, I think some of them highlighted some concerns that I had, and I just want to clarify that as one of the people doing the cross-examination mentioned yesterday, that's not an attempt to negotiate in any way or say what I would be okay with. I noted some concerns that I had, but that doesn't mean to say that with the questions that I was asking, that would be sufficient for me. And so I just wanted to clarify that because we were talking about like certain commitments, for example. So for example, with respect to the commitments about the economic development. I think Mr. Baudier mentioned some things that he would be willing to do. Those were not my ideas. I was listening, and that doesn't mean that that would satisfy me. So I just want to clarify that I'm asking questions, and as I'm asking questions, there are some concerns that might come out that I have, but that's not all that I'm thinking. And I'm open-minded and still looking to see what continues to happen with this hearing. And so I just wanted to clarify that. Thank you.
Thank you, Mr. Chairman.
Yeah.
I believe, Mr. Baudier, that you're excused.
Thank you.
And again, we appreciate your time, and Ms. Nanasi, Mr. Alvidrez, while we're getting ready for the next witness, is now a good time to talk about the NEE exhibits that were offered, and the two of you had indicated you were going to have discussion and try to make sure that the exhibits were in fact complete, and or what the position of the company was going to be with regard to Ms. Nanasi's request to admit the exhibits.
We're still in discussion. I do believe that exhibit number 6, we have an agreement with New Mexico Gas Company and Emera to stipulate that that is a exact replica of what the About Us page looks like on the New Mexico Gas website. But other than that, we're still in discussion.
Okay.
We actually haven't spoken. I did send, after going through, there are many of these proposed exhibits that were not supplemented. And it took hours for me to go through and pull them up and see which ones were and were not supplemented. And so I sent Ms. Nanasi a note around 9 o'clock last night and said, here's the list. Do you agree? And while
Can we not discuss all this in front of everybody?
Well, I'm just saying
We're in, I mean, I sent you an email this morning, like we are in communication and we will further that. Thank you.
We haven't talked. I got the email started.
Okay, I will put that off then. Again, I like to go ahead and take action on the things that I can, just so I don't forget something. But I'll make a note to myself to make inquiry at some other time. The other thing I wanted to clear up, Ms. Nanasi, when you borrowed time from Mr. Baudier, I don't know that I got everything marked off on my sheet, so I'm going to have to rely on you to tell me how much time that you have left that you didn't borrow for him. Okay?
I have all those numbers, and if you want me to say them again for the record, I'm happy to do it. Or when we have each witness, I can say I only have.
No, we can just, yeah,
Okay.
we can do that later.
Thank you.
Okay. All right. Well, with those matters, procedural matters being discussed, I believe we're actually ready for our next witness.
Madam Hearing Examiner.
Mr. Dome.
Yes, ma'am. Thank you very much. Madam Hearing Examiner, I think that where we are now, we mentioned that we were going to do Mr. Tuminello first and then Dr. Talley. But I think
Yes.
because we've gone long, that I think we would like to start with Dr. Talley. He's available today
Okay.
and then not again until next week sometime. So I think if we
Okay.
can put him on, that would be best. So we'd slide Tuminello and go with Dr. Talley now.
Okay. Anybody have any objection to that?
Madam
Hearing-
Examiner, I was just talking with my co-counsel and I missed that announcement, so I do apologize. So Tom, you're not going to do Mr. Tuminello today?
Well, I think I don't know
After.
how long.
Dr. Talley would be the next witness.
And then after would be Tuminello, and after him, Mark Miko. Yes,
Well,
if we have time.
yeah, if we have time.
That's the order. Miko, and if not today, Miko would go tomorrow.
I think that's
We're just
right.
trying to arrange, my co-counsel and I are doing different witnesses, so
No, I
we just want to
understand.
be
I
prepared.
understand.
I'm sorry, gentlemen, one at a time, please.
I apologize.
I think
And-
I think
Mr. Lee has requested that you announce yourself before you talk.
This is
Madam
Peter
Mr.
Wolf
Domi?
talking. Go ahead.
There you go again.
Madam
Mr. Dome, let's go ahead with Dr. Talley.
thank you. That's perfect. Thank you, ma'am.
We'll need just a couple of moments to get change attorneys. I'll be leaving and Mr. Dubois will be filling my seat. And we'll
Very
be back.
well, thank you.
Madam Hearing Examiner, this is Marilyn Assey. When I just wanted to say something while they're changing, and that is that I have a noon date. So at 12, if we're not done, I'm going to have to leave.
Okay. Do you have any minutes left for Dr. Talley?
10.
Okay.
Can you help? I don't know what I can carry yourself, but no, I can try. It is.
So you know what I ordered yesterday?
Okay, anybody who's not muted, it's all going into the record.
The mute. I got everything.
Well, if you can set up real quickly, if you can set up real quickly, great. Otherwise, we're gonna leave it. They need to listen.
That's the
Hey, all you unmuted people, I hear you. Hey, Mr. Haverly, are you? I thought I was going to see Mr. Dubois.
Hello, Hearing Examiner Hurst. Good morning.
There you are.
Yes.
You know, and all this time you're telling me that, no, it can be Du Bois, but now we're all, is this because we have Mr. Boudier? Are we, we want to Dubois now? I don't know.
It does work to stay on theme, but as we talked about before, my family can't decide which one it is, so both are certainly acceptable.
Well, I thought maybe for SPS, you're Du Bois, and for joint applicant, you're going to be Dubois. I don't know.
That's right.
Okay, I believe we have our witness.
Thank you, Your Honor. The BCP applicants would like to call Dr. Eric Talley.
Good morning, Dr. Talley.
Good morning. How are you doing today?
I'm doing well. How are you, sir?
I'm great. Thanks for having me.
Well, thanks for being here. Mr. Lee, would you please swear in Dr. Talley?
Dr. Talley, would you please raise your right hand? You solemnly swear the testimony you're about to give in the matter not pending should be the truth, the whole truth, and nothing but the truth.
I do.
Thank you, sir.
Thank you.
Go ahead, Mr. Dubois.
Thank you, Your Honor. Dr. Talley, could you please state your full name for the record?
Yes, my name is Eric Leonard Talley. Only one pronunciation.
And by whom are you employed and in what capacity?
I am employed by Columbia University. I am the Mark and Eva Stern Professor of Law and Business at Columbia Law School, and I've been there for the last decade.
Thank you. And I think we have a microphone issue in our room on who it's pointing the camera at. If you could give me 1 second, Your Honor. Do you see me now when I talk?
Yes.
Okay, thank you. Dr. Talley, you have in front of you what has been marked as Joint Applicants Exhibit 4, titled Revised Application Direct Testimony and Exhibits of Eric L. Talley.
Yes, I do. I have a laptop on the side of my screen with that with the revised direct testimony open.
And are there any attachments to that exhibit?
I believe there are, yes, there's an attachment that appears to be my curricula vitae and what appears to be a couple pages of filing attachments at the very end.
And were Exhibit 4 and its attachments prepared by you or under your direct supervision?
Yes, they were.
And to the best of your knowledge and belief, is that a true and correct copy of that document?
It appears to be.
If you were asked those questions again here today, would your answers be the same?
I believe they would.
And do you have any additions, corrections, or deletions to Exhibit 4?
Not to my knowledge, no.
Thank you. And Dr. Talley, you also have in front of you what has been marked as Joint Applicants Exhibit number 5, titled Revised Application Rebuttal Testimony of Eric L. Talley.
Yes, I have that as well.
And that one does not have any exhibits, correct?
I believe it does not. Let me just double check, but I believe this one is shorn of exhibits. Other than what appears to be kind of an administrative filing addendum, that's it.
And was Exhibit 5 prepared by you or under your direct supervision?
Yes, it was.
And to the best of your knowledge and belief, is that a true and correct copy of that document?
Yes, it is.
If you were asked those questions again here today, would your answers be the same?
I believe they would.
And do you have any additions, corrections, or deletions to Exhibit 5?
I do not at this time.
Thank you. Your Honor, we would move Joint Applicants Exhibits 4 and 5 into the record.
Any objection to what's been identified as Joint Applicant Exhibit 4, the revised application direct testimony and exhibits of Eric L. Talley? Hearing no objection, Joint Exhibit 4 is admitted. Any objection to what's been identified as Joint Applicant Exhibit 5, revised application rebuttal testimony of Eric L. Talley, as affirmed by him here today? Hearing no objection, Joint Exhibit 5 is admitted. Mr. Dubois.
Thank you. And with that, Your Honor, Dr. Talley is available for examination.
Very well. I do not believe NM area had any questions of Dr. Talley, so we go to NEE. Ms. Nanasi, you've indicated that you have reserved 10 minutes for Dr. Talley. Please go ahead.
Thank you, Your Honor. Dr. Talley, my name is Marielle Manassi. I represent New Energy Economy. I just have a few minutes with you. Can you tell me, how did you come to be a witness in this case?
I believe I was contacted by it was Mr. Dubois' firm or someone who was working on the matter, and I was put in touch with Mr. Dubois.
And you're being paid $1,750 per hour, is that correct?
This is correct, yes.
How much have you billed thus far?
I would have to check my records, which are not in front of me. I'm going to say somewhere in the neighborhood of 40 to 50 hours.
So that's close to $100,000?
I think it's less than that, but yeah.
Do you know anyone from Bernhard Capital Partners?
Other than meeting them in the context of calls associated with this matter, I'd never met anyone before.
So would it be fair to say that you don't know anything specific about Bernhard Capital Partners' regulated gas utility experience?
My remit in this case was to analyze the nature of this transaction and not do a historical dive into Bernhardt as it pertains to other activities they've been involved in.
So would that also mean then that you do not know anything about the history of fines or penalties or violations or settlements that Bernhard Capital Partners portfolio companies have or not?
Yeah, that was just not part of the remit for my my testimony in this case.
No further questions. Thank you so much.
Thank you, Ms. Nanossi. I do not believe that WRA had reserved time for questions. So we move on to CCAE. Ms. Lynch
you,
or
Madam.
Mr. DeSalen?
Yes, thank you, Madam Hearing Examiner. We reserve 10 minutes, I think, but we do not have any questions for this witness. Thank you.
Okay, thank you. All right, well, Mr. Freeman, I'll go on to you. You reserved, I believe, 15 minutes for Dr. Talley.
Yes, Your Honor, and we also do not have any questions for this witness and waive cross-examination.
Okay, very well. Thank you. Well, that brings us to our final examining party, staff, and I believe staff reserved 90 minutes for Dr. Talley. Mr. Friedman?
Yes, Your Honor. I actually will be doing the cross-examination with this witness. This is Katie Lang from staff. Good.
Very well, Ms. Lang. Go ahead.
Thank you. Good afternoon, Dr. Talley, or it's afternoon where you are right now, right?
It is, yes, 1:34 in the afternoon.
And before we get started, because I'm very distracted right now, is that an Ibanez behind you on the wall?
So there are two. One is a Paul Reed Smith, that's the electric guitar, and the classical guitar is it's a San Diego manufacturer. I can't remember the name. Starts with a C.
Okay, excellent. They're very beautiful. So thank you for taking the time. I just wanted to, actually, I have just a few questions for you. Maybe 90 minutes was overkill, but you never know. I would like to direct you to what has been entered as joint applicants exhibit number 5.
Would that be the rebuttal?
Yes, the revised application rebuttal testimony for you.
Yes.
And if you could go to page 10, please.
I am navigating there now.
Okay, take your time. We got an hour and a half.
Okay. All right. I am at page 10. I apologize for not looking at you. I'm looking at the laptop that's sitting by my desktop so that I can see the document and your faces at the same time.
Oh, are you there on page 10?
I am, yes.
Okay, so at the bottom, starting line 20, so it's a Q&A format, and I just wanted to start you up with the question.
Yes.
You know what? Why don't you just start reading from that question till page 11, line 12?
So page 11, 9, 12. Okay.
So
So the question reads, do you agree with Dr. Larry Blank's suggestion that the government's supposed entitlement to an amount equal to the transaction's acquisition premium should flow to customers? The answer is no. As described above, the government should not be entitled to an acquisition premium simply because it caps New Mexico Gas Company's rates at a level no higher than its risk-adjusted rate of return in a regulated market. But assuming for the sake of argument that the government somehow did have such an entitlement, it's important to note that customers are not synonymous with the commission. The commission takes actions on behalf of both the utility and its customers.
Council, I'm sorry, sir. Will you please slow down? The commission takes.
Oh, I'm so sorry about that. I was just reading from a document. Do you need me to go back, Mr. Lee?
Yes, sir.
Okay, I'll start from the answer again, if that's okay.
Yes, sir.
Okay, I apologize. No, as described above, the government should not be entitled to an acquisition premium simply because it caps NMGC's rates at a level no higher than its risk-adjusted rate of return in the regulated market. But assuming for the sake of argument that the government somehow did have such an entitlement, it is important to note that customers are not synonymous with the commission. The commission takes actions on behalf of both the utility and its customers, and it ensures utilities receive a constitutionally required fair return, that the customers are not and that the customers are not overcharged or undercharged relative to that return. This is unambiguously a balancing act, one undertaken on behalf of multiple stakeholders. Staff's position that the commission's only allegiance to its customers is troubling and ultimately untenable.
thank you. Thank you for reading all that. My question is, if you could look at page 11, lines 11 to 12, where you say staff's position that the commission's only allegiance is to customers is troubling and ultimately untenable. Could you direct us, please, to where in staff's direct testimony staff said that?
I would not have that in front of me. This was a Q&A. So to the extent that the staff doesn't make that claim and agrees with me that this is a balancing act, I'm happy to agree with them. The inference of the disgorgement or the regulatory liability of what I believe Dr. Blank defines as an acquisition premium is strongly suggestive that all of those gains should go to customers, and in my view inconsistent with the balancing act that I described.
So you can't really point us to a place where any staff person says that, correct?
Off the top of my head, I can't point you to a particular place, but this was in response to what appeared to be, at the very least, an implicit suggestion.
An implicit suggestion. So it's mostly, this is your opinion, correct? You would have to agree with me.
This is my opinion, and it is responsive to the question posed on page 10, I believe.
I have a follow-up question to that. Does Dr. Blank say that 100% of the acquisition premium should go to the customers?
I believe he does at various parts of his report. And we can hunt through that if you want.
You show that, could you point us to where he says that 100% of the acquisition premium needs to go to the customers, please?
Well, I will have to pull up Dr. Blank's report. And
Yes, let's do that. Why don't we?
yeah, that's fine. I'm trying to navigate this exhibit forest here. So let's see. I'm having a hard time figuring out where it is. I might be able to find it in a different place. Just a second. I think I found it in a different place. It's the April 18th testimony. Is that right?
Well, because of the nature of the posture of this case, we all had to refile revised testimonies just like you did. So staff actually, in accordance with that order, filed testimony in September. Have you reviewed them?
I'm just trying to navigate it here. I'm sorry about this. I knew this was going to be an issue. All right. Can you give me I might be able to search by either exhibit number?
We haven't entered it yet into the record because Dr. Blank will have to,
Yeah, no, I understand.
but it is staff exhibit 3.
All right. All right.
If it's acceptable and Dr. Talley has his email available to him, I could email him the correct version of the exhibit.
I think I may have found it, Mr. Dubois. Let me see. Would this be dated September 26th?
That is correct.
Yes, sir.
All right. I think I have. Yeah, so I think where this comes from is that Dr. Blank, first of all, identifies the acquisition premium with goodwill, which I believe he does on page 6.
You're going off the soft copy, and I went old school and printed it out because okay, page 6. Okay, well, where are you looking at?
So on page 6, line 20, the terms goodwill and acquisition premium are sometimes used interchangeably. There's a subtle difference about goodwill as an actual market value, but acquisition premium is the amount that is paid for goodwill.
Okay, and where else?
And then he lists numbers the next page.
Okay.
The estimated goodwill that he ends up listing is $212 million.
Okay. And where else?
Yeah, going through. All right. It then asserts that on the top of page 8 that the intangible value, which is identified with goodwill and acquisition premium, does not belong to the current owners, or was not created by the current owners. All right.
Okay.
And then in the next paragraph identifies that with the purchase of the intangible assets. And then at the bottom of page 8 and the beginning of page 9 recommends that at the closing of the transaction, NMGC shall create a regulatory liability for the benefit of customers in an amount equal to the goodwill paid, less any benefit amounts designated by the commission, which hasn't happened yet in this
Okay.
case. I think that's where I probably took that from. There may be
Okay.
a couple of other parts of the interrogatories that I have not looked at for
Could you
purposes.
slow down, please? I didn't get that. Can you, yeah.
Excuse me, I need one person speaking at a time, counsel.
I
Go ahead.
Yes, let me, this is Hearing Examiner Schaefer. Let's all just speak slowly, provide time for witnesses to find the directed material. And as Mr. Lee says, one at a time. Thank you.
Dr.
I'm sorry. Go ahead.
Oh, no, I was going to say, Dr. Talley, is there anything further that you relied on to come up with your answer?
Yeah, the continuation of the Q&A of Dr. Blank on page 9 recommends a regulatory liability equal to that intangible goodwill acquisition premium amount. And then is asked whether he's recommending sharing the acquisition premium. That he says no, because that acquisition premium is going to be part of a regulatory liability. But he says to that question, that's part of the purchase price. Later in his testimony, he basically, I think this is towards the end of the testimony, states that this creation of a regulatory liability, in his estimation, would require a renegotiation of the purchase price in order for this transaction to survive. So that, I think, is it's my belief that Dr. Blank is recommending a regulatory liability for the benefit of customers that would be immediately set aside at the closing of the transaction.
And Dr. Tapley, is it your opinion that he is asking for all of it to be set aside? All of the acquisition premium to be set aside as a reg liability?
That is my understanding from his opinion.
I see. Could I point you to page 5?
Yeah.
Please. Oh, actually, before page 5, when you when you were pointing us to the pages that you relied upon to arrive at your opinion, you went to the bottom of page 6, starting at the middle of line 22, where he discusses competitive market for assets, and then he goes into numbers, and I am talking about the dollar amount on the top of page 7, starting at line 2. Do you see that?
I do see that, yes.
And is that that is the estimated acquisition premium amount, correct?
That is, he cites to an interrogatory for that number. He does not show the derivation of that number.
Yes, but what is the number he's quoting, citing?
The number that he lists as an estimated goodwill amount is $212 million, $212.4 million, but then notes that the exact amount can't be determined until the closing of the transaction.
Okay. Could I direct you, please, to go back to page 5?
All right.
If you could go to line 13 on page 5, if you can start reading after the word sellers, comma, can you start reading there, please, for the record?
Yes. Where do you want me to start reading again?
I can recommend.
I can recommend a conservative level of $100 million for this regulatory liability. less any benefit amounts designated by the commission for specific purposes. I take this to be a lower bound of what Dr. Blank is recommending.
Based on what, sir?
A conservative level of $100 million.
Okay, that is your opinion. And then could I have you reread it? Because I think you missed 2 words, please. And I'm sorry, I apologize to have you do that.
That's okay. Again, at line 13.
Yes, please.
I can recommend a conservative level of $100 million for this regulatory liability to customers, less any benefit amounts designated by the commission for specific purposes in this case.
Okay, and I had just one more thing, if you bear with me. I promise I am not doing a Lieutenant Colombo. Yeah, actually, that's all I have. Thank you so much.
Thank you.
Thank you, Ms. Lang.
Thank you.
Hearing Examiner Schaefer. Sir, I
Yes,
believe
thank
you
you.
have some questions for Dr. Talley.
Yes, thank you. Good afternoon, Mr. Talley. Thank you so much for being here with us. I just have a few questions about your testimony. And my first question is, when you made your entry into appearance here in today's hearing, you responded to the question of Mr. Dubois that you are employed at Columbia University. Is that correct?
Yes, sir.
Now, are you appearing here today as an employee of Columbia University?
No, I'm appearing here in my individual capacity. I believe he asked.
Okay, so why didn't you say that when you testified earlier?
I think we could read back the transcript, but I believe he was asked where I was employed, and my full-time employment is at Columbia University.
Okay, so you're here with your individual capacity. Are you working for, are you just being paid as a sole proprietor, or are you working as a contractor for another entity?
No, I am here appearing as a sole proprietor in that capacity. Yeah.
Did you disclose that in your revised direct testimony? That you're appearing as a sole proprietor in your individual capacity?
I don't think I said it in that capacity, but I did not represent myself as representing anyone else.
Okay. Can I direct you to your direct testimony, page 1 through 4?
Yes. So this is July, oh geez, I'm sorry. July 3rd, is that right?
It's your revised direct testimony.
Okay, I'm just gonna find it here.
This is Joint Applicants Exhibit number 4.
I believe I'm there. Yeah, go ahead.
Okay, just take a minute maybe to refresh your memory, but can you tell me where in those pages you identify your testimony being provided as a sole proprietor?
I was not asked in any of the interrogatories to identify myself. However, I many times identify this as my opinion and my compensation. And I believe the natural interpretation of that would be that I'm offering it in my own capacity. My consulting rate is being paid to me in my individual capacity, and I am not here to represent any school, university, nonprofit research organization or center as an employee of them. That my opinions are mine alone. They are built upon expertise that I've developed over a 35-year career, but they are mine alone.
Can you point me to where it says that in your revised direct testimony that you're appearing on your own behalf and not in affiliation with any of the institutions that you listed in your resume and in your testimony?
Yeah, understood the question. So I think in some ways it is the negative implication on the bottom of page 4 and the top of page 5 to say I'm being compensated at my usual customary rate and not some other organization, whether it's Columbia University or the Milstein Center that I run there. In addition, refers to my compensation in this matter. In all cases where I've billed in this matter, I have been billing in my individual capacity. I also note for the record that I'm a proud New Mexican, and I'm not here to represent New Mexico either, but it is one of my one element of my background. So, and it's in my experience, it's not. This is understood through this language, but maybe the commission has different experience in this capacity.
Okay. In your resume, this is page 1 of your, no, so page 1, it's page. It's page 1, and you list that you're an affiliated expert with Cornerstone Research.
Yes.
Are you appearing here today in any connection with Cornerstone Research?
I am not.
Okay. What is Cornerstone Research?
For certain matters, Cornerstone Research is a company that does support research for experts who are otherwise acting in their own capacity as experts in legal cases, sometimes regulatory proceedings, or sometimes in advisory proceedings. I have an affiliation agreement with Cornerstone, but that was not in play and is not in play in this matter.
Okay. Thank you. My next question is with respect to your second question on page 5.
All right, I am navigating to that now.
No rush. Take your time.
Yes.
Now it says the purpose, the answer to this question, this is line 8, just to read it into the record a little bit. The purpose of my direct testimony is to support the revised application that is the subject of this proceeding. That's your testimony?
Yes, that's what is written on line 8 going into line 9.
Okay, so I just want to focus on this verb to support. And I want to ask you, what that means to you.
Oh, yes. So I have been retained as an expert by the BCP entities. I understand that they have filed a revised application, which is the reason these hearings are there, and they have called me as an expert witness as part of their application process. And so in that sense, I think it's almost in a this is my independent expertise is something I'm offering here. They have called me as an expert, so I think in just the colloquial sense, it would be in support of their application.
Well, I think you said in your answer just now that you're testifying with your individual expertise. Can you describe how that expertise relates to this question of support?
Yeah, so I've been asked to opine on matters that pertain to corporate identity, to financial valuation and protections, to veil-piercing standard corporate structures. This is something that I've been teaching and researching for 3 decades. and at three different institutions, two on the West Coast and now in New York City. And so, so I think that is the expertise that has landed me here. But I will also note on line 4 of that opinion, this is something that I insisted on, Examiner Schaefer, is that my compensation does not turn on any of the content of my opinion. My opinion is and was and remains mine to articulate.
So, can you just explain a little bit more how your expertise is specifically related to supporting this application?
Yes, so I have been doing research on governance and corporate structure and corporate finance since I started teaching. That involves lecturing on these topics not only in academic conferences but also in front of judges and regulators and practitioners. The nature of my research is nonpartisan. I have never been affiliated with a partisan group, and on some level, as an academic, Commissioner Schaefer, or excuse me, Examiner Schaefer, I think the one thing that most of us prize, I certainly do, is my objectivity, and that is something that pretty much is the key asset that any academic has.
Okay, thank you. So what is your opinion then of this quote unquote transaction? And I think you use that even here in your testimony, that term, the transaction, and or the capital structure, the structure of the transaction. That might be the best way to proceed with my inquiry. What is your overall opinion of the structure of this transaction?
Yeah, so I try on page 6 of my revised direct testimony, starting on line 2, to lay out an overall set of conclusions. Obviously, Examiner Schaefer, there's more detail that lurks under each sentence because that's just
Sure, of course, right.
and I'm happy to read it out, but I would still stand by that set of conclusions.
Okay, well, maybe just describe it in your own words here for the sake of the hearing.
Yeah. So, so this particular transaction is, first of all, something that is not new under the sun. This type of transaction in the utility space, in both gas and electric utility space, involving a private capital acquisition of a regulated utility. It is something that we observe commonly. It is something that we actually observe more commonly for reasons that I go into in my report, having something to do with the time horizons that private capital investors pretty much must have as part of their remit. And as a result, the structure of the transaction, the financing of the transaction, and the nature of the parties of the transaction don't strike me as I guess you could say aberrational or misfit to this sort of a segment. And that was essentially the type of assessment that I was trying to conduct in my revised direct testimony.
So your ultimate conclusion then, with respect to supporting this application, is that the structure, the capital and corporate structure of the proposed transaction is common and not aberrational or anonymous.
Yes, I mean, there are different ways to structure transactions, and there's a large mergers and acquisitions market out there in utilities and outside utilities. So there will be some variation from situation to situation. But this proposed transaction does not, sometimes you will come across a transaction that seems it seems odd. It's doing things that seem that are out of step with what we observe empirically. I'm not seeing that in this transaction. Generally the purpose of transactions, and when I teach my mergers and acquisitions class, I emphasize this as well, is that, the acquisitions market is much like any other market, that it is a market by which ownership and control of valuable assets can be, if well structured, channeled to a higher valuing set of owners and even stakeholders, so as to grow the pie. And that is one of the biggest drivers of the mergers and acquisitions market. And the form that it takes then can sometimes vary a little bit, but the terms that I've reviewed in the context of this transaction don't seem to be out of step from what I've observed in other situations, empirically.
So if I understand correctly, you're saying that the proposed corporate and capital structure of the proposed transaction is typical, common, and therefore not worrisome? Is that what you're saying?
Well, I think it's compared to what? There are always risks in the economy, Examiner Schaefer, including under the current ownership of New Mexico Gas Corporation, which I go into as well. And so if the commission's position is to try to get a sense of whether this transaction compared to either the status quo or other types of buyers who might be buying or other types of acquisition structures represents any aberrational risk, I don't see it.
Okay, thank you. So my next question concerns, I think, a conclusion that you drew around advantage. Are you familiar with this?
Can you point
just give me a second to find it?
Yep.
Yes, this is the question that begins on page 20, the top of page 20.
Okay, I'm going to navigate myself to that page. This may take a few seconds. I apologize.
No apologies necessary. We are very methodical and calm here as we proceed.
All right, I have now navigated to page 20. And the question at the top of the page, just to make sure we're in the same place, Examiner Schaefer, is, are there any advantages to private capital ownership structures?
That's correct. And what was your conclusion?
My conclusion, and I won't read it, I'll summarize it, is that there are advantages to private capital investment that are things that you would not typically observe in a public securities market set of owners. A lot of these that I emphasize in this part of the report have to do with both time horizons and making sure that economic risk and control are intermingled together, as opposed to people that are taking the risks are risking other people's money, for example. All right, that would be a situation where risk and control diverge from one another. And so the conclusion in this part of the report basically says that some of the unique attributes of private capital ownership is that they will tend to reduce, that type of ownership structure will tend to reduce this agency costs type of question, which is how the literature refers to it, and will also help support longer time horizons, particularly in the case where you've got to make long-term investments, or it's going to be necessary to make long, durable investments that may, for some period of time, represent a drain on cash flow.
Thank you. So to whom then do these advantages accrue?
Well, to the extent that long-term interests are more common in a particular ownership structure, and here I opine that private capital structures tend to carry them with them, then they would in principle accrue not just to the owners who are adopting the long-term policy or the long-term time horizon, but also to other stakeholders associated with the company. And this can be suppliers, customers, lessors, lenders, and other stakeholders of the company, and maybe even the community at large, to the extent that those stakeholders also do not want to see the risk of short-term decision making visited upon the real economic activity that goes on. So, for example, Examiner Schaefer, suppose I'm a company, a utility that believes that for the long-term integrity of my generation facility or transmission grid or transmission network, it's important for me to have a robust employee base. But a outside, maybe a shareholder activist could point to my salary expenses and say you should be able to cut those down. And in a publicly traded company, you can sometimes have situations where an activist shareholder basically says, if you kind of squeeze some of these other constituencies, I can extract a little bit more as a stockholder of the company. And this is very common. I mean, this is one of the most common concerns with publicly traded companies. With a longer
let me interrupt there for a second, Mr. Talley. Are you saying that this current corporate and capital structure that you've reviewed is immune from these kinds of squeezes, as you just said?
So the potential squeeze from activists is largely eliminated in a private capital market structure, and the reason is pretty simple, right? That if you were to take a well-known stockholder activist, someone like, I don't know, Carl Icahn or Bill.
Oh, excuse me. Let me sorry to interrupt again, Mr. Talley. We don't need to compare it to a publicly traded company. Let's just look at the corporate and capital structure of this proposed transaction in and of itself. Is it immune from squeeze or short-term thinking or short-term deal or valuation considerations?
Again, Examiner Schaefer, I think I would ask the compared to what type of question. So typically in a private capital setting, the equity investors have committed to tie up their capital for not just months, but years. And it can be 5, 10 years. There are some private capital companies that are perpetual in nature. That means that they're not going to be able to get quick liquidity, and as a result, something that might deliver a short-term source of revenues, they're not going to be able to sell at that moment. And so that's going to make this type of structure more resistant to that. Now, if you're asking me, is there any type of ownership structure that can eliminate all risks? No, the answer is no. There are always risks. We live in a risky economy. And it's one of the reasons, quite frankly, why part of the commission's regulatory remit is to, in rate hearings, to award risk-adjusted rates of return, and the recognition that we live in a world that has some unpredictability to it. So
Thank you.
I guess I would just sort of reiterate the compared to what sort of question.
So in your revised testimony, or even in preparation for your revised testimony, what risk analysis did you perform on this corporate and capital structure of the proposed transaction?
Yeah, so one of the things that in my revised testimony, there's an echo, I'm sorry. I spent some time analyzing the debt equity structure of the surviving company in the proposed transaction. And so, for example, for both publicly traded companies and privately held companies, one can foresee a potential risk if equity cushions get really thin. There are several well-documented reasons why that can be risky, again, both for publicly traded companies and privately held companies. And so one of the attributes of this proposed transaction, which actually compares pretty favorably to others, is a projection of about a 60% equity ratio in this company. That's kind of the relative size of the equity cushion, and a regulatory commitment not to let that fall below 50%. And so that the theory behind that is that it would be the stockholders who would have to absorb the fluctuation. You can almost think about it as like the waves in an ocean, right? Who has to absorb those risks? If you've got a thick enough capital cushion, then it's going to be your equity investors that are going to have to absorb that. And so, so that's one of the things that I looked into as part of this question about, have there been measures put in place that help to reduce the potential problems of a squeeze, as you put it earlier. And there can be others as well. The idea that NMGC is going to remain as a held subsidiary, just as it is now. And there will be commitments not to make it sort of pledge its own assets for other affiliated, new debts, or to loan money to these other affiliates, is also a healthy measure and a desirable measure to sort of keep not only the debt equity structure sort of stable, but also the aggregate size of the assets that are available at MGC.
So what kind of risk analyses did you perform on this proposed corporate and capital structure, if any?
Excuse me, I'm sorry. Let you finish the question.
I just said, if any.
Okay, so most of my analysis here was to sort of assess this transaction and where it sort of fits in the transactions that I've seen in my research in this area. My sense is that it fits comfortably within them. So, for example, for the equity cushion, the 50% equity cushion, there are even recent other cases where that cushion's even lower, 45%, 48%. So this looks actually pretty good from that perspective. One thing that I did not attempt to do here, and this may be where you're getting, did I try to do what someone might call a simulation, or if you want to use a fancy term, a Monte Carlo kind of assessment of, here are all the different ways that things can go wrong, and what does the risk look like? I didn't attempt to do that in this context, other than to size up, these provisions relative to, what I'm used to seeing in these sorts of deals.
So just going back to the beginning of this line of questioning and the very beginning of your revised testimony, the support that you're providing is to provide the commission and provide testimony that asserts that this proposed corporate and capital structure is common. That's the essence of your testimony?
Well, that's certainly part of the testimony, to say that this type of corporate structure and capital structure is not remarkable in this space or more generally. My sense is that the report does a few other things as well, but that is a big part of what the report does.
So I'm just wondering if you have any concerns as somebody with so much training and experience in these matters, if there's anything about the proposed transaction that give you pause, or that make you or is this a perfect capital and corporate structure?
So the topic of thank you for the question. The topic of a perfect capital structure is something that has eluded people for years. And so I think it's important to understand that we're always, even under the status quo, operating in an environment where there's risk. And that will be true tomorrow. It was true yesterday. It is true today. It'll be true regardless of whether the transaction closes or doesn't close. All right. So I want to avoid what might be called the nirvana fallacy of saying, oh, here's the perfect thing. I think that there is not something that's going to be perfect. On the other hand, there are attributes of both private capital ownership that are actually quite well suited to long-term asset development and ownership. That's something that I point out in the report, and to the long time horizons and the minimization of agency cost. Doesn't mean things are free from risk, but the overall sort of message in this report is that it doesn't, in my estimation, seem to represent a risk that is strange or aberrational, or we don't see as a general matter in the economy. The other thing that I will note is that going forward, and again under either the status quo or should this transaction be approved, is that the commission is going to have a continued and ongoing and important, I think quite critical role in helping to assess, mediate that risk, and to potentially adjust rates, in ways that are responsive to that. This is one of the reasons why I've spent decades now. Some of the groups that I speak to are utilities regulators, and try to teach them how to sort of assess those risks in a responsible way, and to ask effective questions of experts on both sides.
Okay, so just to be, I guess, concise here, by the way, for the sake of the hearing and the commission, we're getting into the lunch hour. I think I'll wrap up my questions here in just a few minutes. Mr. Lee, are you okay for a few more minutes? I'm very cognizant of your efforts.
Yes, sir, I am. Please go ahead.
Okay. All right. Thank you. So I just want to be very clear, Mr. Talley, is it your testimony in your revised testimony written and also as stated today that you didn't perform any kind of risk analysis with this proposed corporate and capital structure?
I think that's probably an overstatement, but what I had answered you earlier, Examiner Schaefer, was on this question of whether I had done a type of like a statistical simulation analysis. And that's one type of risk analysis. And it's certainly a pedigreed and accepted way to do it. But another form of analysis is just to assess, is this the type of capital structure that we see in other ownership arrangements that seem to be surviving and enduring? And on that score, part of my opinion is that this capital structure and ownership structure does look and walk and talk a lot like what I've seen in other contexts in this sector.
Thank you. Now, did you do any analysis of this proposed corporate and structure in the New Mexico market?
So one of the issues in trying to think through things is like, how frequently do these acquisitions occur, right? And so, and that is just not an everyday thing. I mean, recently New Mexico has had several of these proposals, but the mergers and acquisitions market is a national or international market, as is the capital market. And so my assessment, and I would stand by it, is that that because capital flows and increasingly even energy flows have cross-border attributes, it is helpful to look sort of across the board. And that's what I did. So I did not limit my analysis to New Mexico markets. it would be a challenging thing, given the limited amount of data.
Okay, so you performed this analysis basically agnostic of the New Mexico market.
I didn't tailor anything to the New Mexico market or the Florida market, or, I did this from the standpoint
Or
of,
any market.
well, no, definitely a market, right? The international capital markets, which pretty much intermediate everything. And particularly when it comes to capital flows, my assessment is that national scope and sometimes an international scope is a relevant one. So, on this topic that we were discussing earlier, suppose a shareholder activist were decide to try to buy shares and force the board of a publicly traded company to get rid of employees, or to stop an R&D program, or stop construction of improvements on its generation facilities. That's a national phenomenon, right? That it is generally intermediated through national capital markets, and debt equity structures have a similar flavor to them as well. So you're correct. I did not try to say we're only going to consider New Mexico markets. I think that would have been a very challenging thing to do, but I also think it probably wouldn't have been appropriate because of the national flavor of capital markets generally. And the fact that many things are constant across states, including the fact that, ratepayer customers have a seat at the table in the regulatory enterprise.
So with respect to what you just said, then how does your testimony support the application vis-a-vis regulatory approval in New Mexico?
Well, I think it does, to the extent that, I can maybe lay out an analogy for you, Examiner Schaefer. Suppose instead this were a rate hearing and the commission were trying to determine the appropriate risk-adjusted rate of return. A standard way of doing that is to use national and international capital markets using a DCF approach or a CAPM approach. And I think it would be inappropriate. And in fact, this commission and many others has done exactly that. And has also compared to how other commissioners have come out on their, say, ROE determinations. In my view, that is entirely appropriate to do because of the nature of how capital markets work.
Sure, but isn't that example a pricing analogy? And this, your testimony is not a pricing question.
I don't know that it's entirely a pricing analogy, because one of the things that goes into a commission's assessment on rates is understanding the nature of risks at the utility level. And so, any ROE hearing is going to be doing that by definition. And yes, the thing that's going to come out the other end is the determination of rates that are charged. But the pathway to get there is an assessment of underlying economic risk.
Ask a couple more questions here. Did you, in your analysis in support of this application of the corporate and capital structure, refer to New Mexico law or commission precedent with respect to the public interest?
I did not, and that was not part of my remit in the report.
Okay. Have you ever worked for a utility regulator?
I have appeared before utility regulators back before I was a law professor, and have on several occasions, often after having maybe taught a class on valuation, been asked to come to a particular, regulator's state and work with staff and trying to think through maybe a rate case or something like that. And so I've done that on several occasions.
Have you always appeared in these types of proceedings for private companies?
I generally don't appear as a witness. I basically will go and, try to help, often commissioners or staff think through some things. So, you know, but I'm habitually, to the extent that I do consulting and I don't do a lot of it, I tend not to be on, you know, I tend to favor my objectivity. And if my assessment of a situation seems unpalatable to someone, then they probably shouldn't work with me.
Thank you, Mr. Talley, again, for all your time and your patience. It's very much appreciated. I don't have any further questions.
Thank you, Examiner Schaefer.
Thank you.
And I just have a couple of questions for you, Dr. Talley. You indicated that you're a proud New Mexican.
I am.
Do you have any, I note in your revised direct testimony, you indicate that your parents or your father grew up in Portales area and that you grew up in Los Alamos.
I did.
Do you have any presence here still in New Mexico?
I do. My father and I built a house in Los Alamos. I don't know whether this is a good fit or not, but it's a solar house that we built in Los Alamos that I now own. So I am a New Mexico homeowner and taxpayer and utilities consumer to this day. My mother still lives in White Rock, New Mexico, and my sister lives in Santa Fe. So I'm there quite frequently.
Are you a customer of New Mexico Gas Company?
I don't believe so. I think the Los Alamos utilities sort of, and my house does not have gas service. We, in designing it in the 1980s, we tried to keep as little outside utility service, but it does have electric service. And possibly due to some defects in my father's solar design, we use that electrical service for heat more frequently than I would care to admit. So I just did.
Okay. Dr. Tully, can you have you been listening to any of the had an opportunity to listen to Mr. Bodier's testimony?
I listened to a little bit of it yesterday. I didn't listen to any of it this morning. I had to teach a class this morning, so I pretty much rushed from my class to my home office where Mr. Dubois told me you're about to go on. So I didn't watch any of it this morning, but I did watch some of it yesterday afternoon.
Okay. Well, and I just want to bring up something that we've been looking at with regard to Mr. Bodier's testimony. If I can find it quickly. There's a diagram that he has of the structure that's going to be post-close of what of the companies that are going to be involved.
Yeah,
I
believe I
think
know
it's
the
on
one.
page. Yeah, it's on page 27 of his direct testimony. I'm going to try to. Don't seem to be good at scrolling quickly.
Okay, I have got something that is labeled exhibit JMB3, and it's attachment A, which I think that must be what you're talking about, but I may be wrong.
No, it's actually page 27, I believe, of his. There it is. I'm just going to put it on the share for you.
Oh, great. Well, that
So
just
you can
be
see.
how will I access that?
It's the share screen.
Oh, I see. Okay.
Yeah, you're going to be able to see it on the. Can you see it?
I think I have to send a request. There it is. Yes, I see it now.
Okay. So your application testimony on page 8, you're answering the question posed at 9 and 10. Do you believe the structure of ownership of gas company post-acquisition would be complex or difficult to regulate. And you say no at line 11 and then continue your answer on through line 20, correct?
I believe so. Yeah, I'm now looking at this diagram, but yes, I believe that's right.
Okay. And then at line 19 and 20 specifically, you say the proposed structure is simple and transparent, and I therefore disagree with the characterization of the transaction as complicated. It is not. So in looking at what is purportedly the structure resulting post-close, you don't find all of these I don't want to call them an affiliate, but that all these other intermediate companies, for example, the Saturn Utilities Topco LP, Saturn Utilities Topco GP, Saturn Utilities Aggregator LP, you don't find all that confusing?
So this may be because I teach corporate law, Examiner Hurst. But one thing that I would be, do you have the side-by-side comparison? Because I think that's kind of constructive to think about the corporate ownership under the status quo versus, and I think this could be, I think the one that you've got is figure JMB1, and I think the one that I'm looking for is JMB3 that sort of sets them side by side.
And it's actually an exhibit.
It looks like it is. I just pulled it from my own record, so I'm unfortunately not. I think it may be coming up here if you in that file that you were just looking at. But I don't know for sure.
What page?
35. Yeah, 35 of 35, I think.
Okay, it's all the way at the end.
Yeah, I apologize for that.
No, not at all. There we go.
There it is. Yeah, so I believe that the figure on the right is a reproduction of the figure that you just showed me.
Okay.
I'm almost positive it is. It looks identical, but you can confirm that. And as I understand it, the figure on the left is the status quo structure of New Mexico Gas going all the way up the chain through 1, 2, 3, 4, 5, 6, 7 ownership chains. And it even leaves one out because Amera Inc. itself has a bunch of public shareholders. All right, so that would be kind of the top link. And so, and I guess I had a discussion earlier with Examiner Schaefer about the sort of compared to what question. And so if we start with a baseline that the current structure of New Mexico Gas is something that the commission can get its hands around and understand how to regulate, and then compare it to the new proposed structure, a couple of things sort of popped out at me. The first is the Mexico Gas Company is right there, staying right there at the bottom, just like it was before. New Mexico Gas Intermediate is staying right where it was just as before. And TACO Energy LLC, formerly known as TACO Energy Inc., is also sitting where it was before. So the changes that have been made are all upstream of those of that ownership, daisy chain, I guess, if you want to call it that. Yeah, there are new entities here. So eliminated is TACO Holdings Inc., Amera Holdings Inc., Amera Energy US subsidiary, Amera Energy Inc., Amera Inc., and its stockholders. And this new set of largely limited partnerships and LLCs are taking their place, 3 generations up the ownership structure. So my reference in the report was, when I still remember when I wrote that line to sort of say, look, if the concern is that this is suddenly going to transmogrify into a more complicated company than it is now, that doesn't seem right to me. It seems that this is still a pretty linear ownership structure. There are a couple of joint ownership structures that have limited or 0% interest, just like Takeo Holdings has non-voting shares. But the chain actually looks pretty similar in terms of number of entities.
Well, that leads me to my other question, Dr. Tully. On page 22 of your revised direct testimony, the question posed at line 12, is the instant transactions capital structure sufficiently protective of New Mexico Gas Company?
Yeah.
And you begin your answer at line 14 saying yes. And you go on to say, to the extent there can be risk in any ownership structure, including private equity ownership, such concerns can readily be mitigated, and appropriate steps appear to have been taken here to protect the public interest. There are a variety of measures that a private investor can put into place to protect the operating assets and business viability, going on to page 23, of the portfolio company. One of them is maintaining an adequate equity component in the capital structure.
Yes, I see.
That's your testimony, sir?
It is, yes.
So my question to you would be, when you say appropriate steps appear to have been taken here to protect the public's interest in mitigating risk, do you believe that all steps have been taken? Or steps, for example, since you teach merger and acquisition and you advise, you've indicated that you advise staffs of commission about what they should look for. Has everything that you would propose in that endeavor been included here?
No, it's a fine question, Examiner Hurst, and I think one of the things in the opening parts of the paragraph are essentially an observation about our operative realities, that we live in a risky world, and there's no way to wish away that risk, but you can try to do things to mitigate its effects. And this transaction, I sort of think, and again, going back to the org structure that you have still up on the screen, I would still say that it's a compared to what type of a question. And so if I'm comparing the proposed set of capital protections and ring fencing protections to what I see generally and to debt loads that currently exist, this does not appear to be imposing any new significant risks, and in some ways it eases it a little bit from its status quo ante. So nearly 60% equity ratio as projected, and with most of it debt. Is certainly part of it, but also the commitments not to pledge or otherwise encumber the operating company's assets with loans or other obligations of other affiliates is something that is important, and I observe that in other cases, and this seems to be pretty consistent with other cases. So, to the extent that the commission is trying to make sure that this transaction is not imposing undue risks compared to the status quo ante or other comparable transactions that we see that have this structure to them, I would say, yeah, it compares pretty well, if not favorably, to many of those. Does that mean that we've eliminated all possible risks? I don't think so, and I don't think there's a way to do that. I think that we do live in a risky world. But we can try to take steps to try to mitigate the effects of that risk, particularly to customer ratepayers. My assessment, my opinion is that they have taken measures that seem reasonable and consistent with what I've seen in other similarly situated contexts.
Thank you, Dr. Talley. I appreciate that. That's all the questions that I had for you, sir. And um, Mr. Dubois, is there any redirect for Dr. Talley?
Yes, Your Honor, and I will try to keep it very brief.
Go ahead, sir. Well, let me ask this. I mean, I'm trying to finish with the witness because I'm understanding that Dr. Talley is not going to be available. Are you available after lunch, Dr. Talley, or no?
My schedule's a little tight. Honestly, if I have to be back, I will move things around and I will try to come back.
I'm concerned about my court reporter. He's been going since almost 10:30. So
If you want to continue quickly, we can do that.
okay. All right, Mr. Lee, if you're okay, go ahead, Mr. Dubois.
Thank you. Picking up on that last discussion of appropriate steps, and also some of the risk analysis discussion that you had with your examiner Schaefer earlier. Did you do assessment of qualitative measures to mitigate potential risks?
Yes. So I did an assessment of a variety of ring fencing, which I'm just going to put them all under the bundle of ring fencing provisions, in which, in my estimate, they are consistent with sound practice. They are both at the governance level and the financial level.
In your opinion, does that reflect a complete suite of risk mitigants for a utility transaction of this sort?
It is a good, I think I want to resist complete sweep because I think that, that also involves the unknown unknowns. So I want to be careful about that. This list looks pretty good. I would say it is better than average and measurably better than what I've seen in other similarly situated transactions, right? That not only are these capital firewalls being put up, there's a prohibition of paying dividends, except under very regulated and routinized circumstances. The requirement that a ratings agency continue to rate the debt of NMGC even after the transaction. The roster of the board of directors and its headquarters very much are going to remain, as I understand it, concentrated in New Mexico, and that's sort of a governance aspect as well.
Earlier, you also had some discussion about the relative market in which this transaction exists, be it New Mexico or state specific, national, international. Do you recall that?
Yes.
And today, given New Mexico Gas Company's parent and investor ownership, what kind of market would you describe it as existing in from a scope standpoint?
Yeah, so New Mexico Gas Company is an operating company that is held by a publicly traded company. That company itself is owned by a probably uncountable number, maybe in principle countable, but a very large number of investors from not only all over the country, but all over the world. Some are institutional investors, some are family offices, some are retail traders, some are pensions and unions. Some might be states, the state budget itself, right? New Mexico has itself been investing in private capital. And so this this type of market is deliberately set up to draw and attract investments from across the globe. And so the current situation that NMGC is in is that it is in fact a held operating subsidiary of a market that operates in global capital markets.
And regarding the scope of your conclusions in this case, would you please go to pages 23 to 24 of your direct testimony? That's Exhibit 4.
Yes. I'm there.
And I think there's been a lot of discussion of the first sentence of that conclusion, and that perhaps we've been in and out of the second, but would you be able to sum up the comparative element that you've touched on at times and have in that second sentence?
Yeah, so one way to assess and measure the amount of risk, say, allocated at the operating company level is by comparison to similarly situated transactions. And that I have done that analysis. I don't see any kind of materially more complex or more opaque structures to their financial, to their governance, or their operational plans compared to some of these others. So once again, while we can't wish away the economic cycles, right? We are always going to be in them. This structure strikes me as being a pretty standard and kind of slightly better than average structure for those types of protections.
Do you still have in front of you Dr. Blank's testimony that you discussed earlier?
I am going to pull it up here. Yes, I've got it.
And I know you and counsel had jumped around the document some. If you could go to page 10, please.
Sure. I'm there.
And Mike, the question on that page, I think there's only one question on that page, relate to your understanding of Dr. Blank's testimony that you were discussing with counsel.
Yes, in this interchange in Dr. Blank's revised testimony, he was asked, or the question is asked, would this require a need for renegotiation? And he says he thinks it probably would. If it were to become necessary, the purchase price would have to be reduced to recognize the regulatory liability that he is proposing for customers will match the goodwill agreed to in the transaction.
Thank you. Thank you, Honor, and thank you, Mr. Lee. I don't have anything else.
Thank you, Mr. Dubois. Okay, I will go back and any further recross based on the other parameters, raise your hand. Mr. DeSalen, go ahead, sir.
Yes, thank you, Madam Hearing Examiner. I just have a couple of quick questions, and my apologies to Mr. Lee. Good afternoon, Dr. Talley. My name is Charles DeSalen, and I'm an attorney representing Coalition for Clean Affordable Energy. I just want to ask you, would you, and this goes to the issue of risk that several folks have asked you about in cross-examination. And I'm just wondering if you consider global climate change to be a risk for the purchase of a gas company.
Yeah, it could be. I think I mean, there's an argument, Mr. DeSalle, that global climate risk is a systemic risk. And therefore, for the purchase of any company, one of the attributes of trying to think about, say, what its ROE would be is systemic risk. And so global climate risk is always an issue. My report didn't try to go into, nor am I sort of a climate expert, but to the extent that there are different types of utilities, some are cleaner than others. Gas, my sense, is on the cleaner end of that spectrum, as opposed to, say, coal. But I have not tried to offer an opinion in my revised testimony. I'm not going to offer one now either.
Okay, thank you. Just one follow-up. If given that it is a dealer in fossil fuels, that might not put it all the way on the spectrum as far as an oil company, but it's still farther on the risky spectrum than, say, buying an appliance store, for example.
Does the appliance store sell refrigerators with refrigerant in them? So there can be different ways that climate risks are salient, and I think climate risks are generally salient in an energy space. I will, sort of just point out that that will remain true whether this transaction goes through or not, right? That under the status quo, New Mexico Gas Company is a gas company, and it delivers that as its main product in a regulated environment, and that will continue to be the case afterwards.
Okay, thank you.
Thank you, Mr. DeSalle. Anyone else have recross questions for Dr. Talley? Mr. Gould?
It's Mr. Yar. Madam Chair,
Mr. Yar?
just to be absolutely fair, we had no cross requested, so I don't want to do anything impermissible. I just had a quick question based upon some of the questions that were raised by the hearing examiners. It's very quick, and it was just a clarification question. Okay, thank you. Dr. Talley, I think when the hearing examiners asked for some clarification on the complexity of the org chart, and that's what I'm looking at here. There was some discussion early on in Dr. Audier's cross-examination about the BCP Infrastructure Fund partners up at the top of the structure were required to have skin kind of in the game. So they had to take an ownership interest in, I think it was Saturn Utilities Holdco LLC, a de minimis one, but an interest. Those are partnerships. The Saturn Holdco is an LLC, and that's a direct ownership in Saturn Holdings LLC, which in my mind, and I might be wrong, kind of circumvents the ring fencing of the other entities, the Saturn Utilities Aggregator, Saturn Utilities Aggregator LP. All those levels are kind of circumvented because of the 2% de minimis interest in Saturn Holding Co. And I was wondering, does that in fact, to some degree, open
I'm
up?
sorry, Mr. Yar. Mr. Yar, you're breaking up. You need to get a little closer to the microphone.
Hold on one second.
I'm very sorry about that, Mr. Lee. Is that is that better for you? Okay. So thank you. I don't know if I need to go ahead and repeat that question, but it's just in a very summarize. I'll just summarize it. Does that in any way affect the ring fencing, sir?
Objection, Your Honor.
Mr. Dubois?
Thank you. I do not believe that's an accurate description of Mr. Baudier's testimony in full, but certainly I would understand if Mr. Yar has a question about the organizational structure as it is shown on paper or described in testimony.
You want to rephrase your question,
Sure.
Mr. Yar, unless you can point specifically to the testimony?
Okay. Let me just back up. Dr. Talley, do you understand what I'm talking about?
Sort of. I was not observing that part of Mr. Baudier's testimony, so I'd probably need some more detail. But you know, we could maybe talk our way through this chart, and you could give me some hypotheticals or something like that. I don't know.
Okay, doctor, maybe that's the best way to do it. Unfortunately, I just heard these questions, so I don't have my finger on the testimony. It is in Dr. in Mr. Baudier's testimony, but I don't have the specific site to it. But as a hypothetical, if the infrastructure funds are set up in such a way in which the structure requires the partners in the BCP funds to have an interest, de minimis interest, in the Saturn Holdco LLC, would that in fact somehow in fact affect the ring fencing?
Can I ask for one piece of clarification? They would be basically passive, limited under the hypothetical, which I don't know is true or not. They would be passive investors of small membership owners in Saturn Utilities Holdco LLC. Is that the question?
Yes, that's what I believe, and I did find the. Yeah, go ahead. Just answer that question, sir.
Yeah. So in my estimation, no, it would not. So the part of this is really just in some ways a lesson in sort of corporate and law that surrounds sort of limited liability entities. So as a general matter, with either an LLC or a limited partnership, the exposure of a member is limited, right? It's just like an individual stockholder that does not have control over a company. The standard sort of piercing the veil sorts of approaches are control-based approaches that would almost certainly not affect someone that had one membership interest in a very large entity. In addition, that would be in their individual capacities, as I understand your hypothetical, as opposed to a corporate capacity, which itself would probably be the point of, even if liability were to sort of creep its way down, it would essentially stop right there. So I don't see de minimis limited partnership or membership, non-controlling membership ownership interest as having much of an effect on that. Just like I wouldn't under the status quo approach if there were like a de minimis, some shareholder of Amera had a single, share that constituted 0.0001% of one of the intermediate companies. I wouldn't perceive that as a danger either.
Thank you, Doctor. I'm sorry. Thank you, Doctor. And for the record, this is Joseph Yar speaking. Mr. Lee, I know that you would like for us to introduce ourselves. If I understand you correctly, sir, the answer that you provided is more of a degree of how much of an exposure there would be if there were any, correct? Because of the de minimis ownership. Is that the way I understood your answer to be?
Well, it's not quite that, because if you've got a 1% ownership and you have no ability functionally to exercise control, effectively the piercing doctrine is there's a very old doctrine in business law called agency, and it predates corporate LLC, general partnership, limited partnership approaches. And it basically says if you control what's going on, at, that one of your agents is doing, and your agent could be a business itself, then there may be ways that liability can be pierced in either direction. And corporate law and LLC law and limited partnership law carve out that exception. And so the idea of piercing the veil is essentially a carve out of the carve out, right? To say, okay, we're going to put agency lock back in, but it is a control-based test, right? And so if our hypothetical limited partner at the infrastructure fund level had a single membership interest that was a clear minority interest with no control rights further down, even under the conventional test for agency law, you wouldn't be able to climb in either direction.
Okay, thank you, doctor. I appreciate that answer.
Yeah.
Your Honor, the objection, I appreciate Mr. Dubois' patience with me. I kind of skirted his objection, and it was not my intention to be flippant. Mr. Dubois, I did eventually find the citation, and it is in Mr. Baudier's revised application direct at page 107. It's the answer to the March 2025 bench request number 2.
Is that it, Mr. Yar?
That's it, Madam Hearing. Thank you for the accommodation.
Very well. Okay, seeing there's no more questions for Dr. Talley. Dr. Talley, thank you, sir, for your appearance. You're excused.
Thanks so much. Thank you for having me here. Enjoy your lunch. Please order a carne arrabbiata for me, and I'll send you the menu.
All right, sir. Thank you. All right.
Thank you.
It's 1:06. We will recess for lunch and come back at 2:06 and continue with I believe the next witness is Mr.
Manello.
Tuminello.
No.
All right. Thank you. Remember, the YouTube is on. Thank you.
Can you all hear us?
I can hear you.
Great.
Awesome. Thank you.
Uh-huh. We doing, Mr. Lee?
Judge, I'm ready when you are.
Okay.
Mr. Tally was quick. I think my deodorant failed.
Okay, I think we are back. It's 2:06 and we are back from our luncheon recess. And I think we are ready for our next witness. And Miss Hardy, do you have the next witness?
I do, Madam Examiner.
Okay.
Excuse me, Miss Hardy, Miss Hearing Examiner Hurst. I just want to say something with respect to the questions I posed to Dr. Talley. I had inadvertently referred to him as Mr. Talley, and I just want to say to all the parties that it's the intention to give everybody their due respect and deference. So I apologize to Dr. Talley and Mr. Dubois if you're here and still with us. I would just ask that you communicate my apologies to Dr. Talley. So that's all I wanted to say, and please proceed, Ms. Hardy.
Thank you. Our next witness is Mr. Peter Tuminello.
Good evening or good afternoon, everyone. Feels like
Good
evening. It's
afternoon.
been a full day.
It does. Mr. Lee, will you please swear in Mr. Tuminello?
Mr. Terminello, would you please raise your right hand? Solemnly swear the testimony you're about to give in the matter now pending should be the truth, the whole truth, and nothing but the truth.
I do.
Thank you, sir.
Mr. Tuminello, can you please state your full name for the record?
Peter I. Tuminello.
By whom are you employed and in what capacity?
I am employed by Delta Utilities, and I'm the executive chairman of the board.
Do you have in front of you what has been marked as Joint Applicant Exhibit 6, titled The Revised Application Direct Testimony of Peter I. Tuminello?
I do.
Are there any attachments to Exhibit 6?
There is an attachment, JA Exhibit PIT-1 and JA Exhibit PIT-2.
Was the testimony prepared by you or under your direct supervision?
Yes.
Were the attachments prepared by you, or are they true and correct copies of the documents you've provided?
Yes.
If you were asked the same questions in your direct testimony again here today, would your answers be the same?
Yes.
Do you have any additions, corrections, or deletions?
No.
Madam Hearing Examiner Schaefer, I move for the admission of Joint Applicant Exhibit 6.
Any objection to what's been identified as joint applicant exhibit 6, the pre-filed direct testimony of Peter I. Tuminello? Hearing no objection, JA Exhibit 6 is admitted.
Mr. Tuminello, do you have in front of you another document that's marked as Joint Applicant Exhibit 7, titled Revised Application Rebuttal Testimony of Peter I. Tuminello?
I do.
Are there any attachments to that exhibit?
Let me look. I don't believe there are, but just to confirm, no, they're not.
Was the testimony prepared by you or under your direct supervision?
Yes.
If you were asked the same questions in your rebuttal testimony again here today, would your answers be the same?
Yes.
Do you have any additions, corrections, or deletions?
No.
Madam Hearing Examiner Schaefer, I move for the admission of Joint Applicant Exhibit 7.
Any objection to what's been identified as joint exhibit 7, the revised application rebuttal testimony of Peter I. Tuminello as affirmed by him here today? Hearing none, joint exhibit 7 is admitted. Ms. Hardy.
Thank you, Madam Examiner. I have no further questions. Mr. Tuminello is available for cross-examination.
Okay, so thank you, Ms. Hardy. Somebody's got their YouTube on because I'm getting feedback. So according to the order of cross-examination, NM area is going to go first, and it looks like they have reserved 60 minutes for Mr. Tuminello. Mr. Gould or Mr. Yar?
Mr. Gold, we cannot hear you.
There you are, Mr. Gould. There you are.
I can't hear you again, Mr. Gould.
You can or cannot?
Cannot. Now we can.
I don't know what's
So
going
you-
on. This has worked before. I'm
I
going to
think
go.
it's
have
working fine now, Mr.
reserved-
Gold.
Yeah, pull that out.
Okay. You reserved 60 minutes. Go ahead, sir.
Okay, so no, leave that alone. So now are we connected?
Yes, sir.
Okay. So we would like to reserve 2.5 hours in total, moving an hour and a half from the 4 hours that we have reserved for Karen Hutt. Would that be acceptable, Madam Hearing Examiner?
Okay, so you want to move how much for Ms. Hutt?
1 hour and 30 minutes.
Okay.
That would give us a total of 2.5 for this witness.
So minus 130, and then you want to go, or minus 90. And then you want to add the 90 to your 60?
Yes, ma'am.
Okay, so 150 total.
Yes, ma'am.
Okay, go ahead, sir.
Thank you so much. Good afternoon, Mr. Tuminello.
Good afternoon to you, Mr. Gould.
and we meet again. You recall that we did a deposition in this case on August 29th of this year. Is that your recollection as well?
I do recollect the deposition. Yes, sir.
Okay. I might have some questions from that deposition, and just so to make things go smoothly, do you have access to the Area exhibits through the Dropbox?
Yes, we do.
Okay. The transcript of your August 29th, 2025 deposition is Area hearing exhibit number 23. So if we need to refer to that, that's the exhibit that we're going to be going to.
Okay.
Understood?
Yes, sir.
Okay. We heard on the record for the first time yesterday afternoon in the oral testimony of Mr. Baudier that if this transaction is approved, you will be appointed to have a seat on the New Mexico Gas Company board. Is that your understanding as well?
That is my understanding. They have discussed that with me. We haven't done anything formal, but that is my understanding.
Okay. And my understanding of board protocol is they could not do anything formal until after this transaction would be approved. Is that your understanding as well?
That is my understanding. Yes, sir.
Okay. And I recall from your deposition that you are also on the board of Delta Utilities. Is that correct?
Yes, sir. I'm executive chairman of the board at Delta Utilities.
Okay. And that what I want to do, and I want to take my time because some of the elements of this transaction and some of the precursors, and then as they relate to shared services, are quite complicated. And I want to make sure we have timelines correct. So I'm going to spend some time on that and make sure that we have the relationships correct. Is that okay with you?
Yes, sir.
If you would look at page 1 of your direct testimony, your revised direct, which was just admitted.
Yes, sir.
I'm looking at the Q&A that starts on line 13 on page 1.
Okay, I'm there.
And I'll read that first sentence as please briefly outline your responsibilities in those positions. And you stated above, executive chairman of the board and president and founder of Anticipate Energy Advisors. So you're asked to describe your responsibilities in both positions. Does Anticipate Energy Advisors have any role in this transaction at all?
No, sir. That was a entity I set up to house my consulting activities in the utility, midstream, and not energy retail space.
Okay, so we'll just set that aside. We don't need to ask any further questions about that. So I want to go on to Delta Utilities. Your answer on line 15 is, as executive chairman of Delta Utilities, I oversee the company's strategic direction and provide governance leadership to the board and the executive team. I read that correctly, didn't I?
Yes, sir.
So my first question is very basic, which is in Mr. Baudier's testimony on page 18 is direct. He talked about he has a whole list of the CenterPoint transactions and the Entergy transactions, and we'll go through those later. I'm not asking you specifically about that, but he had a statement which said the LDCs acquired under the CenterPoint transaction and the Entergy transaction are operated under the umbrella name of Delta Utilities. You see that? I mean, is that an accurate statement?
Yes, that's an accurate statement.
When we asked Mr. Baudier about that, he basically said that there had been some changes and that there was now an entity called Magnolia Utilities, and Delta Utilities was separate from Magnolia. So I just want to understand the relationship between those two companies and what they contain.
Yeah, sorry if there was some confusion there. The Magnolia Utilities name is really the entity we use for the CenterPoint transaction. And then there was a Delta name we used for the Entergy transaction. And then those fold up into the Delta Utilities that oversees both of those businesses.
Okay, so Delta, there is almost like a holding company structure.
Yeah, I'm not an expert in corporate structuring, but it does hold and necessarily oversee those businesses, those two that you mentioned.
Okay, that clarifies that. Where in that structure is the business entity that's known as Delta Utility Services?
I have to look at the corporate diagram. I don't have that in front of me, but that is the service company that basically houses the shared service employees that they will then allocate their time to the respective utilities out of the Delta Services Company.
Is it a separate corporation or LLC?
I know it's a separate legal entity.
Would it be fair to, okay, so is it apart from what you're calling Delta Utilities? Is it off to the side, or is it folded into the Delta Utilities umbrella?
It certainly meets up to the top at some point during the structure. I'm not exactly sure where, since that diagram is not in front of me. But yes, it eventually comes up to the top.
Okay, that's sufficient. It's not an outside company that has a similar name.
Correct.
Okay. And the Delta Utility Services company is the company that's going to provide the shared services for the IT function in this transaction. Is that a fair statement?
That is a fair statement, and it'll have the appropriate governance documents between itself and New Mexico Gas at the appropriate time.
Okay. And do you have an independent role or title in Delta Utilities Services Company?
Not that I am aware of. I am the executive chairman at the overall Delta Utilities. I honestly can't answer if I've got a line item on that entity. I don't think I do, but I'm not sure.
Who, in your understanding, is in charge of Delta Utility Services Company?
I don't want to speculate, but I believe that would be our CEO at Delta Utilities, Tim Poche, but I would need to confirm.
Okay. And what role, if you know, does Mark Miko play in Delta Utility Services Company?
Mark is our vice president of our IT organization, and he reports to our chief administrative officer, Jeremy Turner, who then reports up to our CEO, Tim Poche. Poche.
Okay, thank you. So if you came on board to Delta Utilities, what date?
My official role as executive chairman of the board was when we really started on April 1 of the Magnolia transaction, the close of the CenterPoint transaction.
Okay. And then several months later, 3 or 4 months later, July 1st was the closing date, was it not, of the Entergy transaction?
That's correct.
Does the Entergy company, and that Entergy company incorporates two gas local distribution companies, right?
It does. There's the one in New Orleans and the one in Baton Rouge. Entergy New Orleans, and I think it's called Entergy, Delta in New Orleans, and then the Delta Capital, because it's the capital of the state, which is the Baton Rouge area.
Okay. And does that business unit or affiliate, does it have a separate name? Like similar to the Magnolia name that has been attached to Centerpoint?
It does. It has a Delta name associated with it because it's interesting. If I could step back, the
Sure.
project name when we were making the first acquisition, when you do a acquisition, you tend to have these project names. It was called Project Delta. So the only entity we thought we'd have would be the Entergy transaction. So it's got a Delta name with it as well due to that kind of history. And then when we acquired CenterPoint, it came in with that Magnolia name, but we liked the Delta name so much that that's the name we ended up using for the overall corporate entity and called it Delta Utilities that houses both of these.
So if I want to talk about Entergy, what is calling it the Entergy companies
You can just say the
inaccurate?
prior Entergy Utilities, that'd be fine.
All
Okay.
right, sir. I'm sorry, sir. Restate your answer and please don't interrupt for the questions then.
Certainly, I'm
Okay.
so sorry, Mr. Lee. You can refer to them as just the prior Entergy companies or the Delta New Orleans and Baton Rouge utilities.
Okay. Okay. I realized you came on board April 1 of this year, 2025.
Correct.
Do you have any knowledge of the beginning and the process that BCP used to acquire the Magnolia companies and the Delta New Orleans Baton Rouge companies?
I certainly have some knowledge of that. My consulting business, Anticipate Energy Advisors, AEA, was involved in consulting in specific subject matter items associated with the due diligence of both of these acquisitions, but certainly not in the financing or any of the modeling financially or any of that activity. It was more operational due diligence, and gas supply due diligence and more technical, deeper dive due diligence.
That's fine because really all I want is some timeline information. So
Okay.
let's start with the Delta New Orleans Baton Rouge utilities. When did BCP first begin its quest to acquire those utilities?
I'd have to go back. I would say it's about 2.5 years ago, around when I came on as a consultant.
Okay. So sometime in 2023.
That would be my best guess, yes.
Okay, same question for Magnolia. When did BCP begin the process of trying to acquire Magnolia?
I would I don't have exact dates, but I would estimate 6 to 9 months later, maybe 9 months after the Entergy process, maybe even a year.
Okay. And then what would generally at a high level describe what you needed to do, excuse me, not you. We had a warning from the hearing examiner, make sure not to use indeterminate terms. So what did BCP have to do from the point it decided to acquire Delta New Orleans, Baton Rouge to getting a closing date? What is a general description of the process, if you could tell me?
Madam Examiner, I'm going to object to this question. I think this is outside the scope of Mr. Tuminello's testimony on IT shared services. I don't understand how this is relevant.
Mr. Gould?
He stated that he's overall executive chairman of Delta Utilities. What I'm trying to do is just get a clear timeline of how we came from these disaggregated companies to the creation of this entity known as Delta Utilities. And I don't think I'm going to spend more than 2 or 3 minutes on this. I'm just trying to find out the entire timeline.
With that clarification, I'll see where this goes, Ms. Hardy. Answer the question, sir, if you know.
Yes, sir. Would you mind please restating the question?
Yes, if you could, at a high level, just tell me the steps that BCP had to take to first getting an interest in acquiring the Delta New Orleans companies and to actually closing the transaction. What were
Okay.
the general outlines of that trajectory, if you could?
I'll give you that to the best of my knowledge.
That's all I'm asking. Good.
When you start a transaction like these two, you start typically with receiving a management presentation from the seller, in this case from Entergy and CenterPoint. My team, along with many other advisors and attorneys and others who were supporting Bernhardt BCP, would help evaluate that information, and you would put a first round kind of letter and bid in to the seller. If that was acceptable to move forward to a second round, then the seller would open a data room, and there'd be extreme rigor in that data room, thousands of documents provided in the data room, whereby all the various consultants and attorneys that BCP would evaluate their areas of expertise. And so we would evaluate our areas of expertise, be it in gas supply or in engineering or capital, and provide our opinions of that data and submit that to Bernhardt Capital Partners. They would then in turn use their financial advisors to evaluate the opportunity in further detail, provide their financial modeling, and evaluate a final bid that would then go through their approval process within BCP. I believe they called it their investment committee, to have authority to put a bid forward, and then that would go to the seller, and that seller, if they accepted it or it negotiated, then you would work towards a purchase and sale agreement and negotiate that and eventually execute that, and then work towards a transition services agreement, which we had with CenterPoint. We did not have a transition services agreement with Entergy, and then you'd execute those agreements. Then you'd work towards the regulatory approval process. And from there, if they went to hearings or not, you'd get the regulatory approval through various regulatory processes, and eventually have approval and then go to closing.
Okay. And that closing date, as we said, was July 1st of this year for the Delta New Orleans and Baton Rouge utilities.
Correct. And I think you can refer to that as Delta Gas Company if you'd like,
okay,
instead of Delta Utilities.
And the same general process happened with CenterPoint, just at a later time, right?
Correct.
Okay. What I want to focus on is, what was the origin of the services company that is going to provide, if this transaction is approved, is going to provide the IT services for New Mexico Gas?
I think it's a really good question, because it really only became something that we wanted to set up, or BCP wanted to set up rather, when we had the opportunity with Magnolia. Because if you just owned one utility, there's no need for a shared service entity. All your employees could be employed by the utility. You could have everything done directly for that one utility, and that would be acceptable. When you go to acquire a second utility, it would make no sense to have two CEOs, two CFOs, two IT departments. So you work towards a common set of shared professionals that can support those businesses, which primarily is all of the folks in the corporate office that aren't in the field doing, the field work. So I would say the entity for the shared services came into play once we knew we would have a second utility ready to close, and it needed to be set up at that point.
Do you have an approximate date for the setup of that services company?
I believe that was set up in late 23.
Okay.
Is my best recollection.
That's close enough for my purposes here. Okay. So the creation of the shared services company, was it complete by the end of 2023, or was it an iterative process where you were still recruiting people, still getting functions done getting the space? What, give me a general idea of the status of it in 2023, and then what happened over the next year or so to get it to be mature.
Sure, it was formed legally around that time frame, and
Okay.
then from there is when the real work begins, which is designing how many positions you want in every professional role, be it tax, treasury, gas supply, legal, IT, accounting, finance. So once the CenterPoint transaction we felt it would be approved, then we quickly moved towards hiring staff, in particular our IT leadership, all of the leaders in the organization that would help run the shared service organization. And to this day, we're still rounding out staff in that group. We're for the most part fully staffed, but we still have more staff to hire in that shared service organization.
How many people total in the shared service organization today, roughly?
Roughly 150.
And rounding out, you adding how many more approximately?
I would say no more than 20 or 30, but that's just a best estimate at this stage.
Okay. And that's all I'm looking for. We understand this is a transitional situation. Were there, of course, because Entergy didn't close until July, I'm assuming that you were not able to take any of your staffing prior to that date from the Entergy Delta Gas Company, right?
That's correct. The employees all didn't come over until July 1. And really, it was just all of the operating employees. A tremendous staff of operating professionals came over, but we were building all of our professional staff and our shared service staff because effectively none of that staff came over from Entergy.
Okay. And so did Magnolia contribute all those employees, or did you bring them in from other companies, or did you hire headhunters? How did you staff that up?
So similar to Entergy, the Magnolia, all the field employees came over. I would say we had some shared service staff, very few, but a handful or two come over. One of the key shared service leaders is our chief operating officer, who ran all the operations for the CenterPoint Magnolia utilities. But a handful of others came over at that time. And then since that time, we've been using a combination of direct hires. We have a very strong HR team that's going out directly and hiring staff and recruiting. And we use some executive recruiters, headhunting, to use your term. We use that on occasion as well. So all the tools like that we use to fill out our shared service organization.
And let's focus, and then I'll shift to Magnolia. With the Delta Gas Company, did it have a transition services agreement with its former parent entity, Entergy? Was there like a TSA, what we're calling it in this case? Did it have a TSA?
It did not have a TSA, and that required Bernhard Capital Partners and eventually the formation of Delta Utilities to very actively develop our systems in advance of the July 1 close, because we needed to be fully operational with our staff and our systems on July 1 of 2025, since we did not have a transition services agreement for the Entergy transaction. And we have done that, and it's been I would say a fairly smooth, nothing is completely smooth, but it's been a very good transition.
So up until July 1st of this year, Entergy was providing those services, the accounting, the HR, all of that is now in the shared services bucket, right?
Oh, yes, they own the entity prior to July 1. So right, nothing came over until July 1. And again, that was just primarily the field employees with the assets.
And the same type of question for Magnolia. Did it have a TSA with CenterPoint?
It did. And we are currently operating under that transition services agreement. They are still doing many of the functions such as maintaining a call center, billing employees, things like that. We are working very actively with our technology partner, Accenture, to try to move off of that transition services agreement. And we hope to be off of that by first or second quarter of next year.
Do you have a specific, is there a termination date that you have to beat on that TSA?
I believe we have a 24-month TSA, so we have plenty of time over and above when we'd like to be off of that TSA. We have plenty of time that extends beyond our goal to be off of the TSA. We can end it early if we'd like.
Okay. And the start point, of course, would have been April 1st
Of 2025.
Of 2025. Okay. And I might hop around a little bit. I've got a lot of area to cover. I realize how I think you stated in one page of your testimony that the shared services agreement in this transaction is a key element of the transaction. So I'm asking a lot of questions so I can understand the context, and we can have a clean record. So I'm kind of doubling back. What are your duties as a Delta board member?
So as the executive chairman of the board, my primary duties are to organize the board meetings, to have an appropriate board agenda, to have the appropriate metrics by which we want to measure the success of the business. We tend to want to be very top priority safety and have safety metrics, operating metrics, IT metrics, cyber security metrics. And so we're developing a lot of that. We had our first board meeting earlier in the year, several months ago. So my primary role is organizing the board, organizing the agenda, ensuring compliance, ensuring proper governance, ensuring that the leadership team is the right leadership team and is doing everything it needs to do to serve customers in a safe and reliable way, and then govern basically the overall strategy of where Delta Utilities wants to head into the future.
Do you have an idea of how many board meetings you're going to have during any quarter, during the whole year? What's the schedule? Maybe that's a better question.
Yes, our cadence will be a standard cadence of roughly one every quarter. That's the current plan for our board to meet. There will be one-off calls as needed, but the actual formal meetings are planned to be once per quarter at this stage.
So you'll probably, if I can assume something, that you'll have another board meeting by the end of this year.
We have one upcoming very shortly.
Okay. If you know your potential role on the New Mexico Gas Company board, would it be similar? Would it be different, or is it too early to tell?
I think it's too early to tell. I would say this. I believe that the company or BCP is interested in me joining that board just due to my long-term experience with utilities and the 2.5 years that we've taken to stand up Delta Utilities. And there's an awful lot of lessons learned from those 40 years. In addition, it was part of that, the 2.5 and standing this up, but nothing other than a board director level. Nothing more than that has been discussed.
Okay. Going back to the Delta board, do you anticipate that your responsibilities would encompass something like overview of any rate case filings for either the Magnolia Utilities or the Delta Gas Company?
No, sir. That would be in the hands of management. Our regulatory team would lead that. Our CEO would have the ultimate responsibility for that. And as a board, I would just be primarily a recipient of that strategy and the plans for that filing.
If there were, let's say, significant proposals in a rate case or in any other regulatory filing to change the way you do business with the regulators, would that be something that the board would review?
That would likely come up to the board for review and discussion.
But not like, most of my experience in this field, a lot of it deals with rate cases. And I've been in every single gas company rate case since the Emera transaction. So we do a lot of discussion in the rate cases about return on equity. Would that be too particular an issue for a board member such as you to be involved in?
I think it would be. I think what would come back to the board would be more status updates. If
Okay.
there were items that were being determined or being, negotiated through those rate cases, they would be kind of pushed up to the board for our review. The board really can't affect change there. They can opine on strategy and give the leadership team potentially some thoughts on strategy, but at the end of the day, that would be the regulatory leadership and the executive leadership of Delta Utilities to handle that.
And again, this is a little bit speculative, if you can answer it. If there was a very significant rate case, for instance, and it was heavily litigated but then settled, would a settlement and the terms of a settlement go up to the board? Or would that kind of stay down at the regulatory level?
I would be giving you an opinion at this
Okay.
stage. As the board chair, I would certainly want to be informed as to what was going on with that settlement. And again, as an executive chair, that's a more active role than a non-executive chair. So I would be hearing the status of that frequently. I have weekly calls with the CEO. I'm in New Orleans every 4 to 6 weeks. So as the chair, I would be getting that feedback as it was ongoing. The full board probably wouldn't be getting that feedback unless there was something material that we felt like we needed to share with them. Otherwise, we would wait to a normal cadence board meeting to provide updates.
Okay. I would like you to turn in your direct testimony, excuse me, to JA Exhibit PIT2, which is a 17 page document.
Yes, I am there, sir.
At a high level, this document describes the anticipated transition of New Mexico. It assumes that if there is a approval of this transaction, there will be a transition timeframe where New Mexico Gas Company will be moved away from the Emera Company and moved into the orbit of the BCP funds. Is that an accurate statement?
That is accurate.
Okay. And I would have to say that just going through here, it's even though things are at a high level, it's extremely detailed. Is that a fair statement?
That is a fair statement. I think the reason you see it that way is because we're just coming out of integrating the Entergy transaction, and we are in the middle of integrating the CenterPoint transaction. So we have very, very fresh knowledge and very experienced people who we were able to rely on and lean on and say, how can we even make this transition tighter, cleaner, potentially better? And so I think that's what you're seeing in this document is a lot of the learnings and professionalism that have come from the two transactions that we've just closed and are completing with CenterPoint in terms of moving off of the TSA.
And you have on page 10 of that document, you actually have created a specific transition team that seems to be, if I could say it, multidisciplinary across your companies.
The way I describe this is the transition team that we have access to and we used extensively during the Entergy and CenterPoint transactions. Whether or not we will get all of these, Mark Miko certainly will be involved as a Delta employee. Jeremy Turner certainly will be. Brian McLean has since moved on to be a board member of Delta Utilities. So it'd be unlikely.
I'm sorry, the name Brian McLean?
Yes, sorry, Brian McLean, MacLean.
Will be.
Would he has moved on to a board position at Delta Utilities and may or may not be involved in this transaction, along with the two below him, Brian Little and Steve Cave. So this was really meant to capture, these are the folks that we have used in prior transitions, and we will get similar talent to, if not these, we will get similar talent to help with this transition.
And if you would turn to page 13 of 17 of that document, and there's a title Stage 2 TSA period.
Yes, sir.
This refers to the period from the date of approval of this transaction through the TSA with Emera, correct?
It's actually from closing of the transaction to the end of the TSA period.
Well, maybe that's a better, you just anticipated and gave me a better question. So if you get approval of this transaction, let's say on May 1st, for the purposes of my question, when would the closing occur?
I don't really know when the closing would occur, but if it occurred, let's say sometime in the first or second quarter next year, that would be when that stage 2 would start.
I guess my question, I should have asked it better. Does the closing depend upon final commission approval?
Yes.
Okay, so, and your experience with the prior two transactions, after you got regulatory approval, how much time elapsed before the closing? Was it 2 weeks? Was it a month? Do you have any?
I don't recall, but I don't think those dates don't seem out of line, but it wasn't a very long period of time from regulatory approval to closing.
And you really can't begin to do anything at all. By you, I mean, BCP cannot do anything at all at New Mexico Gas Company until approval happens and then a subsequent date of closing, right?
Yes, sir. There's nothing we can do in terms of affecting anything at New Mexico Gas. We do not own it. We can't jump ahead of anything prior to close. What we can do behind the scenes is do more planning with Accenture to try to get ready and move quickly, which is we are doing some of that. But other than that, we cannot do anything to effectuate anything at New Mexico Gas until closing.
And I'll just close this particular line of questioning just by my observation that this is specific yet general is shown in the way these tasks are described. So I'm going to read one under the transition TSA period. There's a dot and it says establish timeline for cadence approach to full TSA exit. There's a lot of work, isn't there, under that one general line?
Yes, sir. And we actually have kind of a high level timeline at the end of this exhibit, but to get a more detailed timeline when you start getting into all the different ERP model designs and the asset suite stand up, there will be much more rigor into that timeline over and above than what you see in this document as we get to this stage.
Okay. I know this document was prepared specifically for this transaction. Would it be fair to state, though, that the transition that occurred both with Magnolia and with the Delta Gas Company was a similar process?
It was similar. I think we've certainly matured to this stage and have built out more detail and more rigor in areas that we know we'll want to do more of. For example, we'll want to probably spend more time in this stage 2 in testing and in training and doing some things that we did and we did well, but we said, okay, there are areas that we might want to spend a little more time. So I would say this document has benefited from those other two transactions. It is more rigorous than what we would have had at this stage, similar stage of these two process, the other two processes.
Would you turn to page 16 of 17 in this document? And the title at the top of the page is High Level Transition Timeline.
Yes, sir, I'm there.
And if you'd look at the top line, it says relative transmission timeline months from closure. Months from close, excuse me. Did I read that correctly?
You did.
And I'm going to try to go through this quickly because I think I know the answers, but I want you to confirm that I'm right. The lines that have the negative numbers, those are months, are they not, before the close of the transaction, right?
That's correct.
And then +1, the beginning of +1 would be the date of closure.
That's correct. And we
Okay.
call kind of closing day one.
Closing day one. So we go all the way out with this top line, and it has +16 and then an arrow +24. You see that?
I do.
What was the reason for skipping the months between 16 and 24? I guess my real question is, do you expect to have everything done, everything significant done on +16?
That would be our goal. And yes, to your question, we would want to be done by month 16, if not sooner. It took us about 18 months to do the Entergy stand up. We know we've learned how to do this even more efficiently. So we believe we can cut some time off of that 18. So 16, we believe, or 15 is very reasonable. And the reason it was truncated is just to show that we can go all the way to 24 months using a TSA if we absolutely need to, but that would not be our expectation.
Okay. And if you know, this is maybe another, I'm asking you to speculate. Do you in-house, does BCP in-house and Delta Utility Services Company have a date that they're targeting as the +1 date?
The date of close. I don't mean to be
No.
That whenever that would be, and we are gonna be flexible to when that start date would be. But we'd like it to be sooner rather than later, certainly, but we respect the regulatory process and we'll just start that +1 month, +1 day one, as soon as this transaction closes.
In terms of your internal work, you've got to schedule work. So have you internally decided on a date that looks approximate that you can share with me? In other words, could you say we're expecting +1 to be April 1st or February 1st, or do you have a date like that internally that you can share?
I personally do not. I've been really Mr. Baudier has been leading the charge for BCP. Once he says, guys, we believe we will have this date by which you need to be prepared at Delta Services Company, then we'll take that lead from him and from BCP.
Okay, let's go back to your testimony about the transition at both Magnolia and the Delta Gas Company. Magnolia closed on April 1st of this year. If we are, I take it from your prior testimony, and correct me if I'm wrong, that you are still in this transition agreement. Man, it's been a long day. You are still in this transition time period similar to what was shown in PIT2. Is that a fair general statement?
Correct. We're about in month 6 of that transition services agreement process. If you start from April 1, so November 1, that'd roughly be month 7, beginning of month 7, roughly.
And where are you with the Delta Gas Company, which started on July 1st?
We are done. We are completely integrated. We did not have a transition services agreement there, if you recall. So we had to be ready at July 1 to function fully in every possible category of the business, IT and otherwise. And so that is fully functional as of July 1.
Okay. Let's go to your testimony on the shared services. And we covered a lot of this during the deposition, but it's been 2 months since the deposition. So I'm assuming some numbers might be more honed down and your understanding of the process might be better. So I'm only going to refer to the deposition if I need to, if I have some questions about very, very specific questions I asked then. So what I'm going to kind of do is, and I'm giving you a roadmap, is basically walk through with what the geography we covered in the deposition, which is it fully describing what you intend to do by the shared services. So that's my intro, and we'll start there. So let's go to your testimony. And I want to do a few setup questions so that I understand what's occurring. If you go to, and your testimony, your direct on page 3. And I'm looking at line 16 to the end of the page and then up to the top of the next page, page 4.
Yes, sir.
You say on 16, why are shared IT services beneficial for NMGC and its customers? And the answer is IT services are a key part of the transition plan, which outlines how NMGC will separate from its current parent company, Amira, and begin operating under new ownership. I read that correctly, didn't I?
Yes, sir.
And then you go on to state, by aligning with Delta Utilities, NMGC will gain access to a tested and secure technology platform already used to manage multiple utility operations. Did I read that correctly?
Yes, sir.
And in that testimony, you are referring to what has been called the Oracle cloud-based IT system. I know that's a layman's description of it, but is that what you're referring to?
Yes, that would be the ERP, overall ERP system, correct.
And I've seen ERP a lot. What could, for the record, what do the initials ERP stand for?
Enterprise resource, I believe, but I'm not,
Okay.
I'd have to go back and actually find that out, but it's an enterprise solution is what it is.
Okay. Would you now go to your testimony on page 7?
Yes, sir.
And this is the Q&A starting on line 4, going all the way down to line 18. And what I really want to nail down is exactly what's going to be happening at gas company at a high level if this transaction is approved. And my understanding is from line 8 on, that you're describing how you came up with this IT proposal. Is that a fair summary of this testimony?
Yes, that's fair.
When did this idea occur? Was it January of this year? What date would you place on that?
Oh, it was, gosh, I'd have to think maybe 4 to 6 months ago, I would have to say in that ballpark. And it really came out of many discussions with our Accenture partners who've been helping us stand up our Oracle cloud system. It really got developed once we dug deeper, and our Accenture team dug deeper into the ongoing SAP system, if we were just to clone it and operate it with a duplicated clone system, that was our original thought. We moved off of that when we realized that that would need to be upgraded very quickly at the end of 27, when that system would no longer be supported along in that similar time frame, the Hitachi asset suite at New Mexico Gas. So we stepped back and said, okay, we should revise that. There's a better solution. The Oracle Cloud program is working very well at Delta. We will have done it twice by the time we can implement this New Mexico Gas. We can take significant learnings and stand that up at New Mexico Gas. So roughly in that 6 month ago time frame is when that got vetted, the costs were estimated, and the revised program to implement this instead of cloning SAP was developed. And we believe it is certainly in the best interest of New Mexico Gas customers to go this path.
And so we're talking about the March, April timeframe of this year.
That's roughly, it could be off a little bit.
But you prepared rebuttal testimony and filed it in May 16th. So
Yeah,
yeah, okay. So
that sounds about right.
That 3 month period is when that came up. Let's talk because I'm non-technical, and I think there might be non-technical people listening, not only in the hearing but online, who want to understand this. Why did you have to think about cloning the SAP system at gas company? And there's two questions really. What does that mean? So if you could describe what you meant by that description there.
Yeah, the SAP system, as I understood it, is an Emera asset that allocates costs down to New Mexico Gas to utilize that system. So when New Mexico Gas would potentially close a sale, that SAP system would not come with the sale. So we would have to get new licenses and set up an entirely cloned, or just think like duplicated system of what they have currently, and take out our own licenses, or New Mexico Gas's own licenses there, and spend the money to have a separate segmented SAP system, separate and apart from Emera.
Look at line 12 of that testimony, and it says the existing SAP environment is based on ECC, that's Edward Cat 6.0, and on-premise legacy version that is scheduled to reach end of support by the end of 2027. What does that mean?
Yeah, that really means that the current version of SAP that's being utilized by New Mexico Gas, which I believe was put into service around 2005, is going to be in effect not supported by SAP roughly in that end of 2027 time period. So it could still function, but if you wanted to upgrade, there were no more upgrade capabilities or anything like that, as best I understand it. So as we look to what's the best approach here, if we just cloned this SAP environment, and if this transaction closed sometime in 2026, early or mid or whatever, we would quickly be forced to do something different than this SAP environment, because it wouldn't be supported. So you'd have significantly additional costs. And that's that roughly 56 million that you keep hearing, in our testimony around what that would be to, move into, off of SAP, if you were still Emera and you were going to need to move to a new supported environment. So that's why we said we are not an SAP shop at Delta Utilities. We're an Oracle shop. Our IT team much prefers that for their reasons, and since moved to the Oracle design.
And just so I can understand from a layman's standpoint, the way the SAP system works at Emera is there's an actual machine, there's a server at some location that has the data and the software embedded in that computer, right?
I can't speak for how Amera does it. I would assume it's multiple servers.
Okay,
I'm
multiple.
not sure where those would be located, but correct. That's when you hear on-prem, on premises is a server-based system.
Yeah, you have actual machines that you have to take care of, update, replace, and then load
And you-
software. Go ahead.
Question?
Yeah, is that what you mean? That there's an actual machine at some location that provides the service?
That would be my understanding. I would say if you want to dig deeper there, Mr. Miko can probably provide a little deeper support on that.
And the cloud-based system is essentially Oracle has a data center someplace and you access it through a website or some kind of internet connection, right?
Correct. Yeah, you would not have a server base. You would be able to access it through the cloud and pay them, fees to utilize their cloud services.
And I think one of the advantages that you mentioned later on is that on the cloud system, that the updates to the software that are automatic. They just, as the software is improved, you get the improved software, correct?
It does happen on a routine basis. Our IT team validates it and makes sure those updates do what they're supposed to do. So it's somewhat like your iPhone, being updated, but I would just say with a little more extended look by the IT team to make sure all the functionality came across well during that update.
And then just to finish this line of questioning, by cloning, you mean that because after the sale is approved, Amira is not going to ship any of its servers over to gas company. Cloning means the gas company would have to buy its own servers, install its own software. Was that what you meant by cloning?
Yes, and buy its own licenses from SAP, but in effect, clone, replicate, let me use that word as well, to try to replicate with SAP everything that was in that Amera environment and then pay separately to have it replicated in a New Mexico gas specific environment.
And that would also involve hiring additional folks to run that system. Is that a fair statement in your understanding?
Significantly more folks. Yeah, I think when you looked at the initial estimate of people that we thought we might need in New Mexico with a cloned SAP system, the number was over 50 total employees. And with the system that we're saying now with the Oracle Cloud, we believe we only need 20, of which only a few of those could be IT. The rest would be supported out of our Delta Utilities office, and those other 20 can be the other shared service functions that New Mexico Gas would have to stand up when they separated from Amera.
Would you turn to page 22 of your testimony?
Yes, sir.
I'm looking at the Q&A that starts on line 2 and goes down to line 8. And I believe this is the first place in your testimony where you provide the cost estimate to set up the Oracle Fusion Cloud ERP and the other related software or platform systems at NMGC. Is that what that estimate is?
Yes, it's meant to be a range, a low and a high range to stand up the Oracle Fusion Cloud ERP and the Oracle Work and Asset Cloud Service systems to replicate SAP at New Mexico Gas.
And the range is between 32.5 million to 44.86 million. Am I reading that correctly?
Yes, sir.
Have you come up with a new estimate as we sit here today?
No, sir, we have not. We believe that estimate is still sound. And the reason we have not, as we've spoken a little bit on this point, is we really can't do anything to dig deeper at this stage with New Mexico Gas around their work processes. Because what will change that number, or what will make you refine that number to be within that range, would be once we can map all the various work processes with New Mexico Gas, once we can understand the quality of data that's in their system that we would need to export and bring into our environment. There's a lot of unknowns that we won't know until we get an order from the commission and we get to close. So really, there's nothing more we can do at this stage until that time.
And would you, well, we can discuss it a little more. What I have is that what I want you to look at now, and we're going to dig deep into this, is a discovery response which you sponsored with a number of other people. It's Enameria Interrogatory 6-2, and it can be found at Enameria Hearing Exhibit number 10 on the Dropbox. And would you be able to access that?
Yes, if you give us a moment, we're
Absolutely.
working to access that now. Okay. Yes, sir.
And this is a part of that total response to our total 6 set. So this is just one discovery response among a few of them. And I want you to look where it says response. There's a line with a bunch of names, which are the witnesses in this case, and these are the people that are sponsoring all of this data that is being provided here. Is that your understanding?
Could you direct me, sir, to a line on this document?
Well, there's no line numbers. First, there is the Enameria Interrogatory 6-2. Do you see that? It's on page 6, on page 5 of that big document.
Okay, let me find that. I see that.
And if you go down, there's a general request with 5 subparts. Do you see A, B, C, D, and E?
I do.
And then it says response. That's what I'm looking at. And it says Jeffrey M. Bodier, Karen Hutt, Mark S. Miko, Ryan A. Shell, Peter I. Tuminello.
Yes, sir.
Your name there means that you participated in providing this written response. Is that a fair statement?
Yes, sir.
Okay. Do you recall this discovery response and preparing the words that were responsive to these questions?
I do.
Okay. The general request I'm going to read, and then I understand with so many authors, you may not be the author of the entire document. And if we go to a portion of it that you have no personal knowledge of, please let me know, okay?
Yes, sir.
Okay. The general question is the direct testimony of Peter Tuminello in support of the revised application at page 22 states that the total estimated stand-up cost to transition NMGC to an Oracle-based IT system would be in the range of 32.5 to 44.86 million. And then I state, with respect to this estimate, please provide the following information. I read that accurately, didn't I?
Yes, sir.
Okay. The subpart A is what I want to focus on for now. Subpart A says a complete breakdown of each cost included in the 32.5 to 44.86 million estimate, categorized by its appropriate account number in the FERC Uniform System of Accounts for Public Utilities. Did I read that one accurately?
Yes, sir.
Would you take a few moments, or as long as you need, to read your response to subpart A?
Okay,
I note for the record that this response was sent to us on September 19th, 2025. I'll just ask you to accept that subject to check. Since September 19th, 2025, we sit here almost 6 weeks later. Has there been any change to your response to subpart A?
no, sir. There is no change that I am aware of to subpart A.
Okay. And in response to subpart A, on page 7, has 7 at the bottom of the page, there's a table that covers about 2/3 of that page. Do you see that?
I do.
The top line says stand-up activity. There's the word low, then high, then the word description, and then the estimated FERC account. So this is the response to that subpart A request. And you've given all that data, correct?
Yes, sir.
So the what is the difference between the stand-up activity column and the description column?
Yeah, I think the way to think about it is the stand-up activity is just a high level categorization of the cost category. So the first, if you look at A, our initial implementation efforts on Oracle, ERP, Wax, and others. And then it just gives into the description gives you a little bit more detail of that effort, which would include finance, supply chain, work management, field services, et cetera. So I would just think of the stand-up activity as the overarching activity, and a description describes that activity in a little further detail.
And these cost estimates, the low and the high, where did you get the data to do this estimate?
So, working with Accenture, who is very expert at this, and did this same work with us for the Entergy stand up and for the Centerpoint stand up. So this really is very consistent in terms of our process. And if you think about it this way, although we don't know all the details about New Mexico Gas's work processes and data quality and things like that, what we do know are all the various things that need to be stood up, right?
Okay.
All the various IT components that need to be stood up. For example, in general IT, we know we need to have IT support. We need to have an IT service desk. We know we need to have telecom and network connectivity. So those are estimates based on a lot of experience, both Accenture and at Delta, to provide those low and high estimates. So although we don't know the specifics at New Mexico Gas, we do feel highly confident that all of these categories will need to be captured at New Mexico Gas.
And when you say you don't know the specifics, you've not been into their computer system and had somebody actually kind of pull things apart and say, "Oops, this is a little more difficult than we thought." You're doing this from your and then there's a question coming from your experience and Accenture's experience at the Delta Gas Company and the Centerpoint Company.
That's right. And for example, the required technical work that we need to do, we're not exactly sure all the different components of that we're going to need to be specific to New Mexico Gas, but we have a sense of that based on the number of employees they have and the applications we would propose using to come up with a range. So I think that fits in most of these categories. I think, an IT service desk, for example, it's not a high cost, but it's just what is the level of support that we're going to need to provide. We really won't know. We know up front it will be more than later once the system is mature. But so you have a range in there that's 250,000 to 500,000. So just some examples of areas that we absolutely are confident we're going to need to capture. And then as we get closer to close, and we do close, each of these categories will be broken out in significantly greater detail. And we will have leaders leading each of these work streams with accountability and responsibility to deliver the results from each of these categories.
And to refer back to your prior testimony, this is the bundle of work that is going to take up the 18-month or 16-month transition period, right?
Yes, sir.
And I believe, going back to the question we asked in subpart B of this interrogatory, for you to name the persons that provided the estimate, and you've essentially stated that it was Accenture on the bottom of page 7 and BC Delta Utilities in-house folks. Is that an accurate statement?
Yes.
Okay. Being a non-technical person, would, just looking at it from the outside, I would think that the biggest chunk of work to move from one software platform that's very complicated and has a lot of data to a brand new platform is transferring the data, translating it, finding it. In other words, one cost may be in a totally different category than between the two systems. Is that an accurate understanding from a layperson's level?
No, I think, and this is where Mr. Miko, I think, can provide a lot more color if you really want to get into these categories in more detail. But the work really, and you can see the cost structure, the upfront, the first 3 lines, A, B, and C on that chart, is where the bulk of the work is going to be. It's really in that design and taking the specific work requirements at New Mexico Gas to make sure the Oracle ERP and the work and asset management systems are going to capture their work processes, right? So mapping work processes takes time. Looking at the Oracle system to see how is it going to accommodate those work processes, because we really want to take an out-of-the-box solution. But if we have to develop custom reports out of those systems, that needs to be taken into account. So you can see, just following if you really want to get a sense of where the biggest effort is going to be where the biggest costs are, certainly, and that's those first 3 categories.
Where is the data transfer in this chart? Or was that a better question for Miko?
That might be a better question for Miko. I'm going to assume it's in one of those top 3 categories, but let me see if it's categorized in here anywhere. Let me defer that to Mark, if I could.
Okay, and I notice on the high level, we're talking about 10.7, 4.4, and 7.6. So you add those up, that's the bulk of the 44 million right there, or at least a big chunk of it.
Correct. Yeah, it's
Okay.
over half, roughly.
Yep. Moving on, you go through a whole description on page 8 of this about what Accenture did and what other people did, Mr. Sturgill. We don't need to read that in the record, but we're going to ask for this whole document to be put on the record. But would you read through that and see if there are any updates that you need to provide in response?
Yeah, I think this one was probably some of the other individuals who were listed on this response, as it references some of the Tampa Electric and an MGC employees. So this part of the response was not written by me.
Okay. Although at the top of the page 9, it says the resulting estimate was reviewed and validated by executives at Delta Utilities, comma, open paren, Mark Miko and Peter Tuminello, close paren, who have firsthand experience executing a similar transition and are already participating as witnesses in this proceeding. That's still an accurate statement, is it not?
Very much so. And we're very pleased that Accenture was able to access these individuals at Tampa Electric and New Mexico Gas, because it obviously gives us more comfort in our range.
And then going back to the data request, you're asked to provide any updates to the 32.5 to 44.86 million estimate. And your answer at C is there have been no updates. And you stated at the beginning of this questioning that that's still accurate.
Yes, sir. And I would certainly stand by that. And as much as we would all love to have a exact estimate on this, I think even if we, had full access to New Mexico Gas employees, even if we were closed, that estimate, just tightens over time, right? It's not going to tighten on the day of close. It won't tighten until you start mapping work processes and really getting into the work requirements and business processes post close.
And then in subpart D of this request, we ask, please confirm that all costs included in the 32.5 to 44.86 million estimate are for labor and not for software subscriptions, network upgrades, facilities upgrades, new computer equipment, or any other cost item. Would you go to the response D at the bottom of page 9 and take a look at that, please?
Yes, sir. I'm there.
I want to read that in the record just because we think this is a critical data point. D, the estimated stand-up costs reflect labor and professional services only. They do not include any costs for software subscriptions, network hardware or upgrades, facilities upgrades, new computer equipment, or other similar expenditures. Because, and then I'm going to the top of page 10, joint applicants are proposing cloud-based solutions and are not envisioning any new or upgraded facilities, we do not expect to incur any costs for network hardware, computer equipment, or facilities. And I read that accurately, didn't I?
Yes, sir.
And that's still accurate, right?
Yes, sir.
And then the next part of your answer, you said that and this is, I guess, part of the uncertainty, NMGC may have to incur some additional expenses. Could you read through that and comment on that answer? That
Yeah.
part of the answer.
Let me just comment on that generally. When you make an acquisition, you don't know every single license that Emera or Chico has that we may need to replace. So we've done good faith estimates of what we think, we need to do to stand all this up. But there could be some licenses that, for them to better manage file management or do some things to, just better manage other components of the business that they were getting as licenses from Emera that we just aren't aware of now and that we will learn more of as we go farther. I don't anticipate that would throw us out of our range. Okay. Yeah. But we were just making that point here.
Okay. And that's important. The last sentence says that you believe that those additional costs are not so great that they would throw you out of the range, right?
Correct.
Okay. And then a subpart E, and then we can finish this data response. We asked when the joint applicants would have a full and complete accounting of this, and you already gave the answer that this is an iterative process. You won't know until after close sometime, and when you start doing the actual work. Is that an accurate summary of your answer?
Sure, we won't know certainly, closes when these costs begin, right? So we won't have a full and accurate accounting of the transition costs until we get off of the TSA. Okay. So we can provide updates along the way, but they'll be accurate the whole way, but the full accounting won't be known until the systems are complete and we exit the TSA, Transition Services Agreement.
Okay. I want you to turn in your testimony, your direct testimony, to page 24, the question starting on line 5.
Yes, sir.
And this is a question that came up with Mr. Bodier yesterday, and he gave us a general answer. My purpose here is to see if we can get more specificity. The question is, will NMGC be responsible for any share of the costs that Delta Utilities has incurred to design and build the new Oracle platform? and your answer is yes. As discussed in my testimony, the IT shared services will benefit NMGC and its customers and result in significant cost savings. As a result, NMGC will be allocated some portion of the cost Delta Utilities has incurred to design and build the new Oracle platform to the extent these costs relate to systems supporting and benefits received by NMGC. Did I read that accurately?
Yes, sir.
Is that still the joint applicant's intention as far as you know?
It is, but let me provide some color there if I could.
Yes.
So, as you can imagine, significant design and system architecture time was spent early on in the Delta Gas Company, Magnolia Gas Company IT designs. And that initial architecture work in working with Oracle and working with Accenture had costs with it. That all of that will benefit. We're going to be able to do this quicker, faster, with, I believe, even a better result at New Mexico Gas because of a lot of that upfront system design and architecture work. With that said, anything we want to do here would obviously need to be fair and equitable. And we believe, and we're highly confident, that anything we would feel was appropriate to allocate from that original design and architecture that amount would still keep us under the costs that New Mexico Gas would have to spend in that $56 million number we've spoken about. And if we recall, that 56 was to get them to the next upgraded SAP and the most available Hitachi asset suite. What we haven't talked about is that 56 million that New Mexico Gas would have to spend would be just one. That's the one time. They would probably need to spend that again in 5 more years for more significant updates, and we haven't gotten that on the record to date. And I'm not intending to put a number on that at this stage. What I'm intending to state here is that our 33 to 45, or at the range you've seen so far, our strong belief would be that anything we would allocate would we'd be highly confident that we'd still be at or under that 56. And so this plan in total would still be beneficial to New Mexico Gas customers.
So you're basically saying the outside range of those additional, I'll call them Delta utility costs, stand-up costs, would be less than 10 million.
It would be in that ballpark. It would be that 10 or 11 million ballpark outside range. It's hard to say exactly now because we are still, spending and upgrading the system at Delta and at Magnolia. And we believe those benefits could continue to grow to New Mexico Gas as we continue to move off of the CenterPoint TSA. But for purposes of this testimony and to give the hearing examiner and you, sir, a better feel for what we as professionals who are running this business believe, we believe that we will come in under that 56 even with that allocation amount. We're not willing to hang our hat on it and say with 100% certainty, but we're highly confident.
Okay. And the $56 million estimate was not developed by you. It was developed by the folks at New Mexico Gas Company, correct?
I believe it certainly wasn't us. It was New Mexico Gas with Tico Amera, their shared service team in New Mexico Gas.
Okay.
Mr. Gould, I think at this point we'll take our 10-minute afternoon recess and let you come back. You're at 1:20. So you have 30 minutes more of your 150. So
what, I'm at an hour and 20 minutes. Is that
yes?
Okay? I had thought I'd asked for 2.5 hours, but I guess maybe I did. I wasn't speaking clearly to you.
Okay, I added.
9.
Actually,
I wanted to reserve 2.5 hours, and you asked me to do math, which is always very difficult for me.
Well, let's go in the recess now.
Okay, thank you.
I've got 3:38. We'll come back at 3:48 and I will look at my chart.
Thank you so much, ma'am.
Okay, remember, we're on the YouTube.
I have a special assistant that turns off my audio. Oh my gosh. Did he ask you to try on a glove?
Peter, you're not muted, just FYI, buddy.
I was talking with my co-counsel about Johnny Cochran, so.
I assumed with the glove reference. What else could it be?
Did you talk to Stan Harris?
Sorry for the delay. Uh, more new cases. Yes. Anyway. All right, Mr. Gould, you're correct. I went back and for your benefit, I got my abacus out and I recalculated this. And you did in fact ask for I think 150 in addition to your 60, which would be 210.
Yes,
Yes.
my,
So
I have forgotten all of my grade school math. I don't know, it just went away several years ago. And I can't find it back. So thank God for iPhones.
well, I guess that's why, you need AI to, tell you when to breathe. So you're at 120 of your 210. So go ahead, sir.
And I may not use all of it. We'll try to be as expeditious as we can with the last part of this questioning. Thank you.
Excellent. Thank you, sir.
Okay. Mr. Tuminello, would you go back to page 22 of your direct testimony, your revised direct?
Yes, sir.
Line 16 through 21, I'm just going to summarize what's going on there. You are estimating that with the efficiencies of the Oracle system, you can save ratepayers or gas company about $1.2 million a year. Is that accurate?
That is correct. That's just for the IT shared service savings.
Exactly. And that has 1.2 million has been part of the presentation of this whole proposal since you first proposed it back in May of this year, right?
I think that's correct. I didn't
Okay.
know if that got updated later, but that sounds right.
Well, that leads me to my next question. Can you update it now? Has it changed to 1.5 to 900,000? Is there any variability that you can take out of that number?
At this stage, I think that number's still a good estimate. We are able to, exchange some information back and forth with New Mexico Gas. We certainly, as I mentioned earlier, can't do anything around, control, but we certainly can learn more about their operations, but nothing that we've learned in that effort has led to any change in this estimate.
And that's an estimate of savings. It is not a guarantee of savings. Is that accurate?
That's correct. It's a good faith estimate, an engineered estimate, one done with very strong professional staff who've just come off of two other transactions or in the middle of the second one. So it's certainly an estimate, yes, sir, but one that I would just say is an engineered estimate.
Okay, fair enough. My question, I have two questions in relation to these costs. Going back to the Delta utility stand-up costs that may be between 10 and 11 million at a cap, right? I want to talk about that bucket of costs.
Yeah, 10 to 11 as an estimate. Yes, sir.
Yeah, and I'm glad we have a better understanding of it. And I understand it's an estimate, so I'll give you that. I'm not trying to, this is not a gotcha question, but was there any expectation at Delta Utilities that when those costs were being incurred, that New Mexico Gas Company customers would help to pay for them?
Well, when the early part of those costs were being incurred, there wasn't a New Mexico Gas transaction, right? And even earlier, there wasn't a CenterPoint transaction. There was just an Entergy transaction. So, as we proceeded to CenterPoint, obviously CenterPoint is going to benefit from those utilities, are going to benefit, or Magnolia Gas to be specific. Utilities will benefit from that stand up. And so by that same thought process, New Mexico Gas and any subsequent utility that we may have the opportunity to provide shared services for could benefit as well. So it wasn't done with any thought that New Mexico Gas, any cost could be allocated to them at any point in time.
And the second question is really high level, but it is puzzling to me. New Mexico Gas Company customers could, I won't say will, but could be exposed to a potential request for discovery from the company of up to $56 million for setting up this IT system, correct?
I object to the question. I think it's confusing and I'm not sure.
Let me ask, I agree with you. It confused me. Let me ask a better question. I think I have to do it in two parts. So you take the joint applicants, I don't mean you personally, the joint applicants are taking the position that when they are reserving the right in the next rate case or some subsequent rate case, that if they can show that the 45 million is used and useful, they're going to ask for recovery. Is that your understanding?
That is my understanding. And with the kind of ongoing thought that any costs they had in rate base for prior systems that were still in their rate base would come out,
Yes.
be replaced by this.
And it's my further understanding from Mr. Baudier's testimony that the same expectation attaches to this additional 10 or 11 million of Delta stand-up cost, that at some future rate case, New Mexico Gas Company could ask ratepayers to pay for that as well, if they can show it's used and useful. Is that your understanding?
Yes, sir. If we can show using the we, if Delta Shared Services Group and our IT Shared Services Group can show that that allocation is appropriate, that the services that come out of that allocation benefit New Mexico Gas customers and that they are used and useful, I would state that those would fit similarly to the 44 as you referenced.
Okay, now I can ask the question that Dana objected to, which is, if you add the 45 and the 11, I get to 56. So from my perspective, $56 million cost seems an awful lot to pay for only a $1.2 million annual savings. Can you comment on that?
Well, let's look at it this way. The 56 that New Mexico Gas has shown that they would need to spend, and they would be allocated again to them from their electric utility parent, Emera, if they stayed, with Emera, that would have continuing ongoing upgrades. So that's just that one time 56. I'd also like to get on the record that the Oracle Cloud system has just so many benefits that are in my testimony and in my exhibit JAPIT 2, that there's just so many benefits around. You're not touching the data multiple times. It is a natural gas fit for purpose system. Let me give you an example, if I could, of one benefit the customers are going to get. And I think we may have spoken about this in the past. If we haven't, my apologies. But customers with this new system, when a field service technician is being routed to their house for whatever reason, they've called for service, maybe there's a leak, and that service representative is being called to their house, they will get a text on their phone showing the picture of that service technician and where he is or she is en route. So they will not be waiting 4 hours, not knowing, they get a window typically in these types of businesses, and there's going to be a better customer experience that's going to come out of this system. So I would just suggest that certainly spending the money that we're going to spend, or that the shared services group at Delta would spend and allocate to New Mexico Gas, or New Mexico Gas would pay the bills directly, but we would, at the shared services group, implement on their behalf. The benefits are significant, and I would just like to get on the record that those documents that we have on the record identifying all those benefits be taken into account. And I just mentioned one just recently.
Is it your testimony? Excuse me, I think I have to sneeze. There's some rag. The Oracle-based system is a subscription-based system, right?
That's my understanding.
And is there any agreement that Delta Utilities has with Oracle that limits any of the cost increases as you go forward?
I would have to have you ask that to Mr. Miko. I'm not as in-depth familiar with the ongoing agreement there.
One of the advantages would be of owning your own system is that once you pay for it, and once you pay for the server and pay for the software license, then you know what the cost is. but it seems to me that you could be open, and again, this is a question, that you could be open to further charges that you have no control over if you're merely based on a subscription system service.
I believe those costs would be known in that agreement, and if there's some detail there you need, around the ongoing costs for that. Again, that would be not in the 44 million. That would be in the ongoing operating costs of the business versus the upfront stand-up costs. And we still believe the ongoing savings we're going to have with those subscription fees will be less than the allocated IT costs that they're currently receiving at New Mexico Gas.
Do you have, what kind of arrangement do you have with Oracle right now? Do you have a 5-year deal, a 10-year deal? What kind of deal, so we can kind of understand what gas company would be getting into if they went to this service?
Yeah, if I could, I'd like to defer that to Mr. Miko. I think he's in better position as our IT leader to give you that detail.
If gas company went to Oracle, would all the costs be captured by Delta Utilities and passed on in a shared service cost, or would gas company have its own costs in addition to the shared service cost?
It would have its own licenses. New Mexico Gas Company would pay for all of these costs on behalf of New Mexico Gas Company. What would be allocated to New Mexico Gas would be the ongoing shared service support that they get from the Delta Utilities Shared Services IT group.
And I believe those were the costs that you mentioned on page 22. Once operational, the going forward annual operating costs, those are the costs you're referring to?
Yeah, I think some of that ongoing 6.6 would be directly billed to New Mexico Gas, but the shared IT support services are a subcomponent of that 6.6 that would be allocated. A portion of that 6.6 that is in that shared IT support services bucket would be allocated from the Delta Shared Services IT group.
So maybe I need to ask a clear question. If this proposal was accepted and gas company went to the Oracle, their total cost for their IT in a year would be approximately 6.6 million.
That's correct.
Okay. All in kind of a cost. Okay.
All in. Yes, sir.
I might change gears a little bit here. Would you turn to your deposition, which is hearing exhibit 23, and let me know when you have that.
I have that.
Okay, I would like you to turn to pages 44 and 49. I mean, excuse me, 48 and 49.
I am scrolling. You'll give me a moment. Okay, I'm ready.
Okay, we had, just to put a context on it, we were talking about the age of the SAP system at gas company, and basically stating that, talking about how it was old and that's why it was in need of replacement. And then at the top of page 49, I asked you the question, do you know if SAP, and again, this is drilling down into the IT world, is SAP with its application pursuing a cloud-based type software? And your response is, I do not know. Is that still an accurate response to that question?
I believe since then that SAP has announced that they are starting a cloud-based application. That's just from hearsay. I'm not 100% certain of that, but I believe they'd be playing catch up if they announce that to Oracle.
Have you seen, you mentioned that it was hearsay. What does that mean? Have you seen reports online? Have you read a magazine article? Where do you recall getting that information?
I think just conversation with IT people in the industry saying, they've heard that SAP is coming out with this or has come out with this. I don't have direct knowledge. I've not personally seen anything around
Okay.
it.
Do you know if Mr. Miko has more direct knowledge about that issue?
He would probably be the right person to ask.
Okay. Would you agree with me that on this particular record in this case, that there has been no cost analysis about the difference between Gas Company of New Mexico going with an SAP cloud system versus your proposal about the Oracle system?
We have not performed that analysis because at the time we've been working on this, SAP did not have this option, and nor would any other utility in the industry have any experience because it wasn't available. So I would agree that analysis has not been performed because that option has not been available.
In other words, it only became available a short time ago if you trust the sort of the, well, totally bad question. Let me back up and say, your belief is that whatever SAP is doing on the cloud is not a viable option at the present time? Is that what you believe at this point in time?
It was not available during this testimony. And I would just, if I could highlight something, whether it's
Absolutely,
SAP,
please.
if it's SAP or somebody else, if they're just implementing a new cloud-based system, and it has not been implemented in the industry, it's really difficult for a company to be the first one out of the gate because of the risks and the potential bugs and everything that comes with a new system, even with a reputable provider. So I would just offer that even if they did have one available now, it would be unlikely we would want to go that route because we've had such success with Oracle and have come in, on time, on budget, and the functionality is everything that we were expecting. And so I'll just kind of leave my comments there.
Excuse me.
From a layman's perspective, which I clearly am, it would seem to me that there may be a lot of savings in the startup costs if you're moving from like SAP 2.0 to SAP 3.0. And just in terms of data transfer and all of the other reports and everything like that. Could you comment on that very uneducated question?
I'm going to object to the question. I think Mr. Gould is testifying.
I'm asking. I'm asking if he agrees with my testimony. What's the matter with that? Do you
want
have
to rephrase your question?
I think I better. If I can't, I think the rule of thumb is if you can't keep a straight face, you need to ask a better question. So, do you have any opinion on whether it would be easier and less expensive for Gas Company to go from an existing SAP software to a cloud-based software?
I really don't have an opinion on that. I know that all I can talk to is our experience, not what New Mexico Gas's is. And if we were to implement a third IT system on top of the Delta Gas Company and Magnolia Gas Company stand-ups, third time's a charm. When you've done two, New Mexico Gas, think of it this way. And we've had these conversations with the fine people at New Mexico Gas. and hopefully you'll get this from Mr. Shell when you speak to him. They're going to get the benefit of the last 2 years of deep dive implementation where a company has started up a utility from scratch, utility systems from scratch, and its systems have come in on time and on budget. You don't hear that with the functionality of what Oracle has brought, and it's met every one of our expectations. So when you think about doing this a third time and comparing it to a first time to starting under SAP, logic dictates that you've learned so much, you're going to get it done faster, less expensive, with less risk, up and running with better user acceptance. I've never seen this in my 40 years where you've had back to back to back implementations. When you do, I'm tremendously excited if we have this opportunity to do this for New Mexico Gas. And I think if you ask Mr. Shell and his team, I think you'll hear the same.
But moving to an SAP cloud could be done on a standalone basis at gas companies since they already have experience with SAP. Wouldn't that be logical to assume that?
You still have to do all of the work of system requirements, business process mapping, everything that we'd be doing with Oracle without the benefit of one prior successful and one in-flight implementation at Magnolia Gas. But I encourage you to talk to Mr. Miko a little further, as well as Mr. Shell, about that.
Okay. I want to shift gears and with the new information that you could be a potential board member, I wanted to ask you about some prior testimony in the case that is not yours, but if you feel comfortable commenting on it, I will ask you, and I might get an objection. So if you would turn to Mr. Baudier's revised application rebuttal testimony, if you can find that.
All right, if you'll give us a moment, please.
Absolutely.
Thank you, sir. Yes, sir. I'm there.
Could you turn to page 6?
Okay.
There's a statement in that testimony starting on line 12, and I'll read it, and we can go from there. Mr. Baudier states the primary customer benefit of this transaction is that the BCP applicants want to own NMGC and invest in New Mexico, while Emera wants to divest from New Mexico. There is an inherent benefit to customers from NMGC being owned by a company that wants to invest in New Mexico, in NMGC in New Mexico. This is an important benefit of the transaction that staff and interveners have failed to acknowledge. Did I read that accurately?
Yes, sir.
My concern is that we're in a cycle with New Mexico Gas Company of rather short-term ownerships and flips of the utility to new owners. And the concern raised by this testimony is whether or not that is going to be the future. And I wanted to ask you if that is a concern for somebody like you that has long utility experience.
Sir, could you rephrase that question? Is what a concern?
The constant flipping of of gas company from one owner to the next, is that a concern?
First of all, let me rephrase. I don't know that constant flipping, if every 10 or 15 years, would be categorized that way. But I can say this: assets and utilities in particular eventually find their way to the right owner. And when an owner wants to have gas utilities as their core business, as BCP has been doing, setting up Delta Utilities and interested in this acquisition. When the employees and the leadership of New Mexico Gas see that this is core, that this is a standalone entity that is going to be invested in, that is going to have the opportunity to collaborate with Delta Utilities and its utilities. There's typically an excitement that comes to the employee base and possibly to the community that you've got this owner that wants to own it, and that makes the asset core. Now, I know I didn't answer your question directly around the 10 to 15 years. I guess there's no guarantee that any owner would come in and hold it longer than that. I guess there need to be a study to see if public utilities that make acquisitions, how often they divest components of their utility base over time. But I do know this: in my 2.5 years I've been working with BCP and in my role as chairman at Delta Utilities since April 1, this is a core, intended to be a core holding for the company. They're going to put the right resources in it. They're going to hopefully bring all the right energy and excitement, not only to the employees, but to the community. And we believe it would be very good for New Mexico for all the reasons, you've seen and heard. Whether a company is sold every few years, sometimes that can be good, sometimes not. Sometimes, if a company owns it for 10 to 15 years, brings its value proposition, brings what it can do to bring best practices, and then later there's another firm that might come in that can do more. I think the market needs to be open to that over time.
The concern for customers is that utility investments are long-term investments and take long-term planning. So can you address that concern that my clients have with this, what I would call constant flipping every 10 years, seems pretty constant to me, that the long-term planning would be deficient?
I have to object to the question again. Is Mr. Gold testifying?
Yeah, I think, Mr. Gould, if you need to put it more in broad terms.
Okay. Do you have a concern? You've been a utility executive for 30 years, correct?
I've been in the energy industry for 40, and in the utility over 20.
And you would agree with me that the infrastructure, especially of a gas company, is a long-lived infrastructure, correct?
It is a long-lived asset. Yes, sir.
And typically pipe in the ground is amortized over 30 or 40 years, correct?
That sounds right. I'm not a CFO, but that sounds right.
So if a owner of a utility has a short-term reference of when they're getting in the business and when they're getting out, wouldn't they have a disincentive to making those long-term commitments where they're not going to see a return?
No, sir. I don't agree with that. And the reason why, I'll peel that back a little bit for you. As gas utilities continue to upgrade and modernize their systems, right? There is every incentive for them to do that, for us to do that when we become New Mexico Gas and at Delta Utilities. There's every incentive for us to study our system in detail, understand where there's aging infrastructure, and to put in place a long-term capital plan that replaces that infrastructure with new pipe and that or other assets, regulator stations or city gate stations. And the reason being, for example, we want to constantly be looking at where can they be new city gate stations? Where can you find access to better gas supply to integrate into our systems? We're going to be all the time looking at the quality of our pipe and what is aging, where the most leaks are, where we have issues with cross-bore problems where we want to invest for the long term. There's every incentive for utilities to do that because as you build appropriate rate base, you grow your company. You grow your meters, you grow your company, you make the system safer, and you make it even more interesting and more attractive to others in the industry that might want to look at this asset over time. So there is every incentive. And as a leader in this industry, I can assure you, as the Delta Utilities chairman, we are going to be laser focused around long-term planning, long-term capital planning, enhancements to the system, sending our employees home safe, managing. That is the key to everything. That is the top of the pyramid. And so we're going to invest around a safe, reliable system for our constituents, our customers, our employees. And the market not only gives us that incentive, because if and when there's ever a time to move on and sell this asset, it just becomes more valuable, assuming those costs have been proven used and useful in rate cases.
But if you're here for 10 months, 10 years, if that's your commitment, and you've said it's a minimum commitment, but internally you regard it as it's pretty much of a deadline to get out, are you not going to be incentivized to do more things that have a higher rate of return, a higher depreciated value in that 10 years versus planning out 40 years, 50 years when you're never going to see that return? Isn't that a fair statement?
That is not a fair statement. No, sir. And the reason it isn't, first of all, the 10 years is not an internal number at all at Delta Utilities. It's a minimum commitment for to understand here. And let's take an example. If there is a long-lived asset that is needed at New Mexico Gas, be it a new LNG terminal to support pressure and peak day delivery, or if it's to enhance transmission pipe that is going to last 30 years, all of that has to go through appropriate regulatory treatment and appropriate ROE recovery. There are fixed returns that go into anything that we spend at this utility. So as long as we can have long-term planning horizons, which we will have, but there's also short-term needs of the system, and you've always got to balance both of those. But we will not give up long-term capital investments in either Delta Utilities or, in my opinion, in this asset.
But the clear implication from Mr. and I don't want you to read into try to understand his mind, but the way I read this testimony is that he is implying that Emera is essentially going to take their foot off the gas. They're not going to do everything necessary. They're not going to do the long-term planning because they want to get out this year. So they're not going to be thinking 2040. They're going to be thinking 2026. And so you can see the concern that would cause for customers. And so I'm asking you to address
How many
that.
questions?
Okay.
Yeah.
I'm asking
Mr.
you.
Gold, we need one question.
Okay. I need you to address why the implication here is incorrect, that Emera reaches the 10-year deadline and they're going to take their foot off the gas. They're no longer. Why isn't that true?
I'm going to object to questions of Mr. Tuminello regarding Mr. Gold's reading implications into Mr. Baudier's testimony.
I just think I think this is the critical issue in the case, that we're flipping this utility again after 10
What's
years.
your legal reason for being able to ask one witness what he thinks another witness thought about his testimony when he made it?
Because he is going to be on the board, according to Mr. Baudier, and that wasn't known until yesterday. So as a potential member of this board, if this transaction is approved, I want his opinion on this.
Let me step in here. Mr. Gold, did you take the opportunity to ask Mr. Bodier that question?
I did.
Okay.
And I got a very unsatisfactory answer. He couldn't
Well,
tell
the
me.
quality.
Yeah, so I as a potential member of the board, let me ask this question. And I'll withdraw my prior question. Do you believe there's an incentive for a utility to take its foot off the gas, not do long-term planning, not make the necessary investments if it only has a 10-year commitment?
I do not believe there is a disincentive there, because if you invest in a long-term asset, say within that 10 or 15 years, it goes into rate base, it goes through prudent review by the commission, it gets its appropriate return, and let's say a significant asset is put in place in year 4, okay? And that asset is a 30-year life asset. And if the business is sold in year 15, it would have been in service 11 years. There would have been a return on that asset for 11 years, and then it would be valued by a potential buyer at that time. I don't want to speak for Mr. Bodie. I don't want to address what he said. I'll just, reference my view of the world. I'm an engineer. And everything in my history has been around governance, is around safety, operational compliance, and doing what's right to have a very strong backbone of a system. I led our pipeline development company at Southern Company. I led our storage development company. I led our LNG development company, among other businesses. I wasn't even thinking about whether they would sell those businesses. They ended up selling a couple of those businesses well before a 15-year cycle, but we did not stop investing for the long term. It has no bearing, absolutely none, zero, in your long-term planning. And if I'm a member on this board, with my history and what I have done, I can tell you, sir, that our focus on the safety of the system and long-term planning coupled with short-term benefits and the balance of all of those, that will be done.
The decision whether to approve the a 10-year hold condition is a policy decision that is within the total purview of the commission. Would you agree?
I would think so. I have no reason to dispute that, sir.
In order to obviate any short-term thinking by a new entrant, couldn't the commission require the new entrant to commit to 20, 25 years and remove that short-term focus that may arise from a short-term commitment? Could that be a condition that you would support?
I'm going to object to the question to the
Yeah.
extent it's asking Mr. Timonella to opine on legal matters and what the commission could or could not do.
I don't think it did. Well,
I think
Madam
it's
Mayor.
also, it's like more 2 or 3 questions. Ask him
Okay.
one question at a time, Mr. Gould.
I'm struggling for some reason with these questions. You would agree with me that the commission is in this case being asked to determine whether this transaction is in the public interest with a number of conditions attached. Would you agree with that statement?
That sounds correct, sir.
And the commission is being asked to approve this transaction based upon the benefits that the joint applicants are saying would arise from those commitments. Is that your understanding?
That is That sounds like a correct statement, sir.
Okay. One of those commitments is to hold for a minimum of 10 years. Were you aware of that?
I'm aware of that.
Were you also aware in the initial application, the commitment was only to hold for a minimum of 5 years?
I wasn't as involved in that, but I'll take your word for that, sir.
Okay. Given the fact that there may be an incentive to do short-term planning, short-term thinking with only a 10-year planning horizon, would you think it would be reasonable for the commission to say the commitment to hold for 10 years is inadequate and we want a 20-year commitment?
Madam Examiner, I'm going to object to this question for the same reason as the prior objection I made. And in addition, this is way outside the scope of Mr. Tuminello's testimony. And Mr. Gould was aware or had been informed prior to yesterday that Mr. Tuminello would be on the board. He talked about that at his deposition, and it was also disclosed in Mr. Baudier's testimony. So that's not new information, and this is way beyond the scope.
To address that last issue, there was casual conversation in Mr. Baudier's deposition. We can go back to it. Oh, we're thinking about Peter Tuminello. But as far as I know, being a member of a possible board. But as you recall, Madam Hearing Examiner, it was an announcement by Mr. Baudier as a definite proposal that they were making. And that was the first time I had heard a definite, absolute, on the record proposal. This man will be on our board if this transaction is approved. So that objection is, I don't think it has a basis in fact. On the second objection.
What about you're asking him to draw a legal conclusion? You want to address that one?
He has testified that he is aware of these commitments. So, you know, this is not a legal conclusion. It's a policy issue. There's no legality. There is no law that says that directs the commission to any specific number of years in these kind of acquisition cases. The commission has come up with an agreement in the last two cases that 10 years is an appropriate time. I'm asking him as a policy matter, as a man that's been involved with the utility industry and is going to be on the board, if he thinks it would be reasonable to increase that to 20 years. That's all I'm asking. It's not asking a legal question.
It is. I'm going to sustain the objection because I think you're asking him to opine on the authority of the commission. So go to your next question, Mr. Gould. You are now at 2 hours and 3 minutes.
Well, let me ask it this way then. Mr. Tuminello, do you think it would be a good thing for the joint applicants, and I'm not asking you to opine on the commission, to commit to a 20-year hold to this utility?
I'm going to object as being outside the scope of Mr. Tuminello's direct or rebuttal.
You know, I'm going to allow that one because, you know, I think Mr. Tuminello has a lot of experience, and I think if he has an opinion on it, you can answer the question if you know, sir.
Thank you, Madam Commissioner. I'll Hearing Examiner, sorry. My belief, I'll go back to my premise that any hold period does not change the way a utility would be operated, any minimum hold period. For a management team and a board to do their job and do it effectively, they are going to look at all the needs of the system and invest for both the short and the long term, independent of the hold period. So I don't believe doing anything to the hold period adds any benefit to customers, to the operation of the business, because a strong board and a strong management team are going to run the business well independent of that issue, as I've explained earlier in my discussions.
Okay. I want to finish up with a few questions about the overall status of this application. As we sit here today, you cannot give us a better estimate for the IT transition costs than the 32.5 to $44.8 million. Can you?
No, sir. We've discussed that several times, and we're still comfortable with that range.
And the extra cost for the Delta stand-up is the, I guess, just summarizing your previous testimony, it's capped somewhere in the 10 to $11 million range. Is that true?
I was not using the term capped, just to be clear. I was using the term estimate that we believe that we would come in all in on this system below the 56 million that New Mexico Gas would have to spend to do all their upgrades independent of this transaction. So the 10 to 11 fell out of that, math, the 56 minus the 44.86. So we're confident that there will be still benefits to customers. And then I went into a discussion around all the benefits of the Oracle-based system that are not just the costs, but all the functionality that will come from that, as well as the lower shared service operating costs.
But there's no guarantee that you will not exceed those costs of 56 million.
There's no guarantee, however, third time through this, we've been very effective at our estimating. We've been very effective at our time to stand these system up. So I would use the terms, I'm highly confident that we would be under that number. As a matter of fact, yeah, I think highly confident is the right terminology I would use right now.
And if you would agree at the present time that the BCP infrastructure funds are not fully funded, are they? Do you know?
I don't have transparency into that as my role at Delta Utilities.
And you would agree that there is nothing on this record that has evaluated the cost difference between gas company going with an SAP cloud application versus an Oracle application?
There has not been an analysis of the SAP cloud-based system that has never been implemented, never been utilized by the industry, has no history. And I'd just say it'd be a riskier implementation, and one in which, as a board director, I would be highly skeptical of going down a path and being the first user of any new system.
Are you aware of, no, I won't go there. Your knowledge of the SAP cloud system, as you said, is hearsay?
I'm sorry,
And
sir, could you ask that again?
your knowledge of the SAP cloud is a hearsay knowledge. You haven't done any.
I'm not even sure
Okay.
they've started it and if they're even
Okay.
offering it to the market.
Fair
Mr.
enough.
Miko can offer that.
Okay. Madam Hearing Examiner, those are all the questions that I have at this time, but would you give me 2 minutes to consult with my co-counsel? I'll keep it maybe under 1 minute. He's keeping track. I do have one housekeeping thing, but if I could just talk to Mr. Yar for a second, would that be okay?
Yep, I'll keep your time running.
Okay, that's fine. Okay. Those are all the questions that I have for you, Mr. Tuminello. Thank you for your patience. And I have a housekeeping matter, Madam Hearing Examiner. I would see if I can get the right document. Hold on. I would like to move enum area interrogatory response, excuse me, let me say this. I would like to move the joint applicant's response to enum area interrogatory 6.2, which is part of our hearing exhibit 10, into evidence, please. Madam Hearing Examiner, for clarity of the record, it starts on page 5 of that, the numbered pages at the bottom of that hearing exhibit, and goes to page 10.
Are there other interrogatory answers in this exhibit?
No, that I'm moving right now, no. If you need me to make it its own exhibit, we can accomplish that if that's what you need.
Well, yeah, if there's a bunch of other interrogatory answers that we haven't gone over yet, then
No. Perhaps I'm not being clear. I'm not asking to move the entire set of responses to the 6th set into evidence. I'm asking only to move that one interrogatory response with 5 subparts.
right, but this is one exhibit,
yeah.
number 10. Right?
Well, yes, the entire package. We didn't number our exhibits to list every single interrogatory response. That would
Well, are you
have
going to offer the others?
not at this time, no.
Are you going to offer them ever?
It depends on the responses to other witnesses.
Okay, well then the answer to your question is yes. Separate it out.
Okay, and then how we just load it up as an additional exhibit to the Dropbox, and here I'm asking for a little. So we have hold on here. We have up to our number exhibit 44, so this would be exhibit 45.
Okay.
Is that how we would do it?
Yeah, just I
Okay.
mean, you could call it exhibit 10 if you want to.
Well, I already have an
And
exhibit 10, so I don't want to
right.
confuse the record. Okay,
Okay.
thank you.
Um, is there going to be any objection tentatively to separating out Mr. Chiminello's exhibit 6? Is that right, Mr. Gould?
It's it's
6-2.
It's joint applicant's response to area interrogatory number 6.
6.2?
6.2, excuse me. Yeah, yes.
Okay.
Okay, yes, ma'am.
Ms. Harding?
No, Madam Examiner, I don't object to admission of that interrogatory.
Okay.
Okay.
Tentatively, I will admit it subject to seeing it in its separate form.
Okay.
Mr. Gould.
May take a, yes, I will say this. I have no ability to do this on my own. My office manager came down with something, so it may take a day to get it labeled and properly done. So we'll try to do that tomorrow. If not, we'll get it done the next day. The only other, thank you, ma'am. The only other house, go ahead.
No, I need to mark it. Okay. We'll offer 6.2 as 45 new. Okay, what else, sir?
Another housekeeping note, I led Mr. Tuminello to to a citation, to a statement that he made in his deposition, but we put that entire question and response on the record. So just for sake of clarity, we're not seeking to ask any part of Mr. Tuminello's deposition, which was taken on August 29th. We're not asking to have that made, that admitted into the record,
Okay,
just for clarity. And thank you for
okay,
your patience and
thank you.
appreciate it. Thank you,
You're
Thank you,
okay.
Mr. Tuminello, and I appreciate the patience as I was working my way through objectionable questions.
Thank you, Mr. Gould. It was a pleasure doing business with you today.
Thank you, sir.
Thank you.
I believe the next questioner would be you, Miss Nanasi. You reserved 20 minutes.
But I used 5 of them for Mr. Baudier, so I only have 15 minutes left.
Okay, you want to go ahead?
Yes. Did you ever work for, hi, Mr. Tuminello. I'm Mary Ellen Assey, and I represent New Energy Economy. Good
Hi, Mr.
afternoon.
Nasi. Pleasure to meet you.
You too. So let me ask you something. Did you ever work for Kinder Morgan?
I never worked for them, but we had a joint ownership. And when I was at Southern Company, we jointly owned Southern Natural Gas Pipeline in a 50-50 venture. We were also at Southern Company and various affiliates under Southern Company that I led, one of their largest customers in the United States. So I know extensively the leadership at that company.
Okay. So initially, the joint applicant's plan was to have a dedicated IT system with the New Mexico Gas Company, correct?
It was, yes, it was going to be an SAP clone system to more simply kind of stay with what they've been used to.
In response to staff and interveners about the lack of synergies and potential cost increases due to BCP applicants' plan to bring shared services back to New Mexico, BCP revised the plan and decided that New Mexico Gas Company will use an Oracle cloud system that will be in use at Delta Utilities, a gas company within BCP's portfolio, correct?
Correct.
BCP did a comparison analysis between the Oracle Cloud Service platform and what New Mexico Gas Company currently pays annually to Emera and found that customers would realize an annual savings of $1.2 million per year in ongoing support costs. Is that right?
That's correct. As it relates to ongoing support costs for the IT shared services, there was another $500,000 of savings in the other shared service costs that Emera was providing to New Mexico Gas, that for a total of 1.7 million, of which 1.2 was IT savings.
You say that the range of costs for this new cloud system would be 32.5 million to 44.86 million, correct?
That's correct.
Will, if this transaction is approved, will BCP amortize, let's say that 45 million over the 10-year hold that it has agreed to?
It wouldn't be BCP that would do any amortizing. It would be New Mexico Gas, and it would just be subject to whatever accounting rules apply to amortization of system costs. I'm not a financial expert, but they'd have to follow whatever accounting rules are required.
So that would be up to New Mexico Gas Company to determine how what the amortization schedule would be?
Yes, it would be an asset held by New Mexico Gas, and like any asset that New Mexico Gas would hold, that would be based on their financial experts and within New Mexico Gas to determine that amortization.
So independent of BCP's hold time of 10 years, New Mexico Gas Company would make the decision regarding its request to the commission about the amortization or depreciation schedule. Is that what your testimony is?
That's correct. There's no connection between a minimum hold time and what accounting rules require around amortization. As far as I know, I'm not a financial expert, but I will say it would be New Mexico Gas's financial team. It's as an asset held within New Mexico Gas that would make that determination.
So what I understood you to say with Mr. Gould was that BCP would try and keep the costs, the total costs of the transition to the Oracle system at or below the $56 million that someone at, I think, New Mexico Gas determined it would be should New Mexico Gas continue with its current SAP system?
It wouldn't be BCP making that goal. It would be New Mexico Gas working collectively with the IT shared service team at Delta Utilities, with Accenture being our primary, IT partner that would work collectively to bring that project in under that replacement cost of 56 million that New Mexico Gas would have to spend by their estimation to stand up the system independently of an Oracle system.
Are there other gas cloud systems besides Oracle?
I won't use the word we, because I know pronouns get us all in trouble. Delta Utilities IT team evaluated another IT cloud-based system that did not have, we believe, the requisite experience in the United States. They had primary European utility customers on their system. As far as I best understand it, our IT team at Delta Utilities did not find another significant cloud-based system that could handle all of the applications that we needed to stand up Delta Utilities. There could have been smaller niche companies that maybe weren't looked at. I don't know, but I can tell you they did evaluate other systems another system at least that could do an end-to-end cloud-based system, and it was determined that Oracle was the best alternative.
Is that evaluation of alternatives part of this record?
I do not believe so. And by virtue of this testimony, I don't know how deep in terms of math they went into with the other alternative, because I think there was more of a capabilities concern and a lack of other implementations that we could point to that were successful concerns that might have kind of put them out earlier. So I don't believe there's anything on the record there, though.
So it's not there and it's not here in this record. Is that right?
I don't believe it's been asked before, so I don't believe it is on the record.
Sir, I was confused about one thing that you answered with Mr. Gould. So I'd like to probe that for a minute. The $6.6 million that you have in your testimony as what it will cost New Mexico gas ratepayers per year for this new IT system, you say is $1.2 million cheaper than the current $7.8 million that we are paying right now for the IT shared services. Is that correct?
That is correct.
Okay. Does that include this $10 to $11 million delta allocation or not?
It's not in that number. That's in the 33 to 45 upfront capital that we were talking about. That you'd have that extra 10 to 11 and compare it to the 56 million costs that New Mexico Gas would have to stand up as a standalone entity, or if it didn't do this transaction. So it was more the upfront cost comparisons versus it isn't in the ongoing. There'd be no more ongoing cost than that 10 million. So it's in the upfront cost comparison, not in the 7.8 to 6.6 million annual run rate comparison, if that's hopefully clear.
I'm trying to figure this out. So let me just follow up with this question. So there's going to be, if this deal is approved and there's a transition to the Oracle Cloud shared services, there's going to be essentially a $56 million transition cost plus the $6.6 million per year operating costs. Is that right?
I'll say it a little differently. It's going to be in a range between the 32 and 44.9, and we hope and will work diligently to come in on the low end of that. It will have potentially some level of allocation from Delta for all its work, which could be, and we've been talking about 10 to 11. Okay. So that's compared to the 56. So that's a bucket of savings we believe is right there, comparing upfront costs for Oracle versus upfront costs New Mexico Gas would have to independently upgrade their SAP and Hitachi suite. So that's one bucket of cost savings. That's the upfront cost. Then you go to the run rate and you're spot on. That 6.6 versus 7.8, we believe there's another 1.2 savings every year in our support of the IT business.
But basically, you have said in your testimony here that the 56 million is basically equal, or you're going to hope that whether it's the SAP standalone or the 56 million that as the top, are you willing to cap that? Let me just ask you that.
So I'm not in a position to say that that would be for BCP through Mr. Baudier. But what I can say is these are, and I'm using the word engineered estimates. These are very solid because we've done this twice already. This is the third one, and I've tried to be as clear as I can be about not just the costs, but all the benefits. Because I know there's been, and I understand the reason for wanting to understand the costs. We need to be really clear about what those costs are, and hopefully we have been. But I really want to make sure it's on the record for the benefits. This Oracle system is a natural gas-based system. The SAP that's currently being in use is built for broader, currently used electric, and there's an allocation of costs down to New Mexico Gas. There's a benefit of reducing the number of handoffs in a system. There's a benefit, like I mentioned, about the kind of Uber equivalent, watching your field service representatives come into your home. There's a benefit in having lower ongoing maintenance costs through no upgrades. There's so many benefits that are in the record. I'd love to go back and read that whole testimony. I don't think I want to use your time for that, but
I don't have
nor
that
you
much
asked.
time.
But I just encourage you, please read the benefits, because the costs we're highly confident will come in less than what happens independently to Mexico Gas. Then add on top of that the benefits, the net benefits we believe are extremely large.
Okay, I just have
2 minutes.
2 minutes. So let's please try to get through this really quickly. So there is no cost or benefit cost analysis between the Oracle Cloud System platform and what NMGC uses the SAP with its SAP cloud services, correct?
There's no comparison to the SAP cloud services, because even I'm, as I mentioned in my prior testimony to Mr. Gould, I'm not aware that it's out there. It may very well be. If it is, I believe it's going to be very new and untested. I just don't know. So at the time we prepared all of this, we prepared these estimates based on the best solution that's out there. And again, being the third time, and New Mexico Gas and its customers are going to benefit because it has been implemented, will have been implemented twice. And if you did an SAP cloud, not only would it be the first at New Mexico Gas, it might be the first in the industry.
There is no Oracle Cloud versus any other cloud company's benefit cost comparative analysis in the record for the commission to review, is there?
I don't believe there is. I think there's been tremendous testimony about there aren't a lot of great alternatives out there. And between our executives in IT's experience and Accenture's experience, and them vetting others a bit more subjectively early on in our Delta Utilities process, we did not think others had the capabilities that Oracle Cloud did.
Last question.
I have 3 questions, and so if I could, however long that
I
takes.
think we're, Mr. Nassia, I think we're already over your time, so I think just have one more question.
So if I could, however long it takes past this one question that you're allowing me, can I take that time from another witness? I think it's only going to be 2 or 3 minutes, but I think that I need to just ask these 3 questions.
All right, go ahead.
Thank you. Would you agree that without this data, the side-by-side analysis that compares the alternatives, the commission cannot evaluate whether the migration to an Oracle cloud-based IT system is the most cost-effective service among alternatives for customers?
I would not agree, because there's a lot of testimony that has been provided around what Oracle Cloud can do. And I think you'll get hopefully some testimony from the New Mexico Gas witnesses as well. Clearly, there has been early analysis at Delta around another alternative that we just did not find another option that had the capabilities. So I think on the record, what we're saying is we don't know of another alternative that has the capabilities in a cloud-based environment that can do what the Oracle Cloud can do, coupled with, additive, coupled with the benefits that come with a third implementation that will benefit New Mexico Gas customers.
I'll just end it there. Thank you so much.
Thank you, Ms. Giannossi. We are past the 5 o'clock hour, and because we went late last night, I don't think it would be good for us to go too late tonight, because it looks like to me that there's at least a half hour or more of questions for this witness. Therefore, Mr. Tuminello, we'll see you in the morning at 9 o'clock. Thank everybody for their participation. My understanding is in the witness lineup category. After Mr. Tuminello, we're going to see Mr. Miko and then Mr. Shell. And hopefully we'll be able to move on to Ms. Hutt after that.
Madam
So,
Hearing Examiner?
yes, Mr. Dome.
Yes, it would be, tomorrow we're intending to do Miko and Hutt. Shell will be our last fact witness, but Miko and Hutt tomorrow.
Okay, so you're taking them out of order from what you had originally presented them?
Madam Hearing Examiner, I think we had planned on having it go Miko, Shell, and Hutt. So yes, I guess we're moving Hutt up and Shell down.
So tomorrow we're going to finish with Mr. Tuminello and then say it again, please.
Mr. Miko
and Miss Hutt.
And Miss Hutt, and then hopefully get to Mr. Shell.
And hopefully get to Mr. Shell, yes.
Okay. Ms. Beatles?
Yes, thank you, Madam Hearing Examiner. I just want to let you know that even though I'm next in order of cross from Mr. Tuminello, I have no questions.
Okay. Okay. Very well. All right. Well, thank you all very much. Mr. Lee, thank you as always. And we are recessed until 8:45 tomorrow morning.
Thank you.
Thank you very much.